7. See you later.
To get what you need, same day, the world needs warehouses. Blackstone made the connection early and became the largest private investor in logistics globally. It's investments like these that can help build wealth for your clients.
American manufacturers power our economy. At Biz2 Credit, we help them grow with fast, flexible financing. Financing that means more jobs, more growth, and more made in America. Biz2 Credit, funding what's next. Scan the code to learn more.
Welcome to Club Champion, with more brands than anyone else to create your one perfect fit. Welcome to carrying the pond and circling the score. Full bag fittings are just $100 with code PERFECTFIT at clubchampion.com.
My hair has gotten so much thicker ever since taking this.
I used to have a probiotic, a green juice. I replaced it all with this Arma colostrum.
Gotta take it.
First thing I noticed was the energy and recovery that I had after workout. You want to try it? Try arma.com.
There's a reason Chevy is called the heartbeat of America. A heartbeat strong, steady, unwavering. Like the people who keep this country moving. For them, only America's most dependable truck will do. In every Chevy truck, like every Chevy driver, dependability comes standard.
Now, well-qualified buyers can get 0.9% financing for 60 months on this Silverado. That's over $6,600 in average finance savings. Chevrolet. Together, let's drive.
Well, maybe you should start.
It's your presentations. They're bad. There was the quarterly review, employee training week, Gary's retirement, and even the office pet policy.
Sounds boring.
This template is timeless.
Show him the thing.
Canva.
Canva?
It's easy.
You made that? You made that for me? Okay.
He's in.
Canva make me do life.
All right, welcome back, everybody. I want to get to our next guest. Joining us right now to talk markets, tariffs, the Fed, deal-making, and much more is Peter Orszag. He's the CEO of Lazard. He's also former director of the Office of Management and Budget under President Obama. And we've been discussing all these important issues just as you sat down, Peter, including your incredible rating that you've got of 4.89.
Working on it.
Yeah. Almost 4.9, right?
Getting there, you know,
pretty good.
step by step.
And it has nothing to, now I'm finding all this out. If you,
Not about tips.
It's after you tip.
I didn't know that, but I
So you've been
I've
really big
wasted.
tipper.
Well, now you know. You can, yeah, exactly.
The tipping part is not a money shit.
back. We have to. I'll call up Uber.
Peter, let's talk about I guess maybe the most pressing situation today, and that would be where things stand with the trade tariffs, this meeting that is set up with China in Switzerland over the weekend. How are you reading it?
Look, we have. I think the pause was beneficial for a variety of reasons.
90-day pause.
The 90-day pause, but the administration, we really need to get to yes with, someone. I think the meeting with the Chinese is encouraging because that situation is not sustainable. But it's not just with China. We need to get to yes with the EU. This really comes down to, I mean, we talk about 70, 80, 90, 100 countries. It really comes down to maybe a dozen. It's the EU, it's the UK, it's Canada, Mexico, Japan, India, China, and a few others.
South Korea, maybe.
The Falkland Islands we could kind of survive if we don't have a trade agreement with. But we need to get to framework agreements with the most important trading partners in this 90-day window. So that
we're not going to get that with China.
But let's talk about China. I mean, my expectation is we're going to get to a average tariff rate of somewhere between 30 and 50%, either because there is a Xi-Trump summit ultimately and there's a deal. I think that's less likely, or because we just wind up exempting more classes of goods from the tariff rates, so that you wind up with somewhere between 30 and 50 on a weighted average basis. We've obviously already done that with electronics, and we may need to do that with other categories also.
That's pretty interesting because that creates these clear winners and losers, and maybe disincentivizes
and also,
the idea of trying to bring manufacturing back here.
Yeah, well, and also very strong incentives for transshipment, which we are already seeing. So when you have wildly varying tariff rates, there is an incentive to ship through Malaysia or through other countries that may have a lower tariff rate with the United States. And administering that or monitoring that is very difficult.
What do you hear from business leaders you're talking to at this point? How
Desperate
optimistic?
for clarity, desperate for some stability, because we've got strong underlying drivers both of the economy and of deal activity, and then this headwind of uncertainty as this plays out. But it varies by sector. I mean, obviously industrials, transportation, consumer products, much more affected. You know, the oil majors and the hyperscalers have a different set of dynamics.
Are you more worried about a slowdown or inflation, or equally worried?
I think the Fed's in a tough spot. What I would say is I don't think the Fed's going to be cutting rates. It obviously can cut rates for one of two reasons, either confidence that inflation is coming down or concern about the economy.
Or both.
Yeah, but I don't think the Fed is going to be cutting rates in 2025 because of confidence that inflation is coming down.
You don't?
No. So any rate cuts will be bad news.
That's a very interesting perspective. So if markets are up right now because they think the Fed is coming to the rescue, that's a miscalculation.
Well, no, but the rescue might be that it's bad news.
It's a miscalculation.
I would not read into that anything positive. That would suggest the Fed is concerned about the state of the
in a perfect world, wouldn't you want rates as low as you could get them if there was no inflation, just to spur activity and just, you know, mortgages and...
Sure, yes, but...
And it even helps inflation when rates are down.
I don't agree with that part, but...
You know what I mean, though. If you're paying less on your mortgage...
Turkey tried that, by the way.
Right,
It didn't work out.
I mean, I understand that it spurs economic activity, which in the long run could bring more inflation, but if you're paying less on a floating rate mortgage, and if you're...
Yeah, look, I think everyone would be in favor of lower rates to the extent that they are
Zero would be nice.
Consistent with, you know, stable inflation. And there are signs that inflationary expectations are ticking up a little bit.
What about oil?
Oil helps. I mean, lower price of oil helps on headline inflation, obviously.
Can I just ask you about the regulatory environment?
Sure.
Because part of the whole argument about our economy taking off was going to be that the regulatory environment sort of just opened up in this big way.
Yep.
You work with companies that consider all sorts of transactions that would otherwise be regulated or at least need a regulatory approval. Has your complete, you know, has there been a shift in terms of how you think about that or no?
Well, we were always a little bit more measured in terms of there would be a move away from the big is bad kind of perspective. I think that is happening, but it was never going to be, you know, anything goes. The biggest change, in my opinion, will still be with regard to vertical deals as opposed to horizontal deals. There was always antitrust enforcement against horizontal deals. The biggest shift under the Biden administration was the way that they handled vertical deals. And I think in general, those will be, you'll go back to a more traditional perspective there, with the exception of in the tech world where the dynamic.
Okay, now I got a more complicated question for you. If you are a client that's going to go up against the government potentially, do you use one of the law firms that did a deal with the administration, or do you not? And when the client calls you and says, you have a choice. You can use Paul Weiss, or you can use Skadden, or you can go use, they made deals with Trump, or you can go use Wilmer Hale, which is effectively fighting the administration and so far winning. You choose, you tell them what?
You know, the choice of advisor, the choice of a law firm often is a little bit less about the institution. It's more about the specific person. So there's not one answer to that question because it depends on who the person is at the various law firms that you're considering and whether your trust in that person outweighs the kind of macro background on this firm or that firm. I don't think there's one answer.
Peter, did you see the OMB director on yesterday? Did you get to see that interview?
I did not.
It's a skinny budget. Do you know what's in it? What did you think of the priorities? I think defense goes up 13%. I think air traffic controllers, believe it or not, they're going to spend some more money on that. Seems like a good idea at this point. But a lot of other things, there's going to be some cutting.
Look, my biggest concern is the focus on non-defense discretionary, which is really where all those cuts are. There's a lot in there that actually does help spur economic activity. So slashing the budget for the National Institutes of Health, for example, when we want to be a world leader in research and spur activity in the biotech sector, doesn't strike me as, that's not what I would do.
Is there movement afoot? I've been a little surprised that we haven't heard from more CEOs, business leaders, others about those very concerns. If you talk to universities, they will tell you that. If you talk to research institutions, they will tell you that. Is that because there's not as much concern in the industry, or because people in the industry are keeping their heads down because they don't want to be the next target?
Well, there's also a president's budget doesn't always get fully enacted, and so there's it's still early days. I would say in general, there's obviously a lot moving on the fiscal front, a big reconciliation bill, the president's budget. There are a lot of different moving pieces, and it remains to be seen. I would also highlight, and I'm saying this as someone who, even as a former budget director, got a little sick and tired of the Chicken Little and the boy who cried wolf. I think we need to be paying much more attention to our fiscal trajectory today than the concerns over the past decade. We're at 7% of GDP, as far as I can see.
Going up from there.
The debt to GDP ratio is high. We've got
spending side, 27%, 26%.
Well, spending is higher than revenue, which is what generates the.
Yeah, but it's usually 17 and 20, not 17 and 27.
But my point is, this is not a good situation, and it is encouraging that the administration is saying the right things about concern about the fiscal trajectory. But I think this is different in terms of the risk factor is much higher.
I know you have to run, but that's like taking too. You don't want to see cuts in places like the NIH. The cuts are being done too roughly, but you're very worried about the gap in our spending versus the revenue we're taking in. Like those are hard to match those things up.
Well, I have put forward in the past a whole bunch of different things on entitlements, Social Security, and Medicare.
Okay,
I also
you're talking
think
about the stuff they're not talking about.
Yeah, well, that's where the money is.
Yeah. That's a tough question.
They keep saying it's not us that is cutting this short. Where do you have to go so quickly? They're saying he's got to go. He's got to go.
I don't have to go. I have to go get my Uber rating up there.
No, but they're saying that. They'd let you stay till 9 o'clock, but it's no. Peter has to leave.
I don't know where
You might have a client meeting.
You start work at 7:43?
I start before that. I'm up early.
We appreciate having you here.
Sleep.
Please come back.
Conscience bothering you from those Obama years, probably.
He's headed over to Paul Weiss right now.
I sleep okay. I sleep okay.
Let's come back because I want to dig in to what you're talking about with the entitlements and what we see happening with that. Thanks a lot, Peter. Okay.
Good to see you.
Squawk Box will be right back.
At Baird, we have investor relationships in 35 countries and market expertise in over 40 industry verticals, all to help make the most important investment connections of all, yours. Discover the Baird difference at BairdDifference.com.
The FBI calls it house stealing, the latest scam where a cyber thief transfers the title of your home out of your name and steals your hard-earned equity.
It's roughly 60 to 90 days for that person to even figure out that they're the victim of this crime. You start getting foreclosure notices, and you realize you've got 4 mortgages on your house that you didn't even know existed.
Unfortunately, it's on you to protect yourself. You might already be a victim. Check your title status now at HomeTitleLock.com.
Double check that. That's pretty good. Yeesh. Not crying, are you? Let's tighten that. Ooh.
Wait, what was that?
What? No, don't worry about that. Here we go.
Asking the right question can greatly impact your future.
Are you qualified to do this?
What?
Especially when it comes to your finances.
Do you have a question?
Are you a certified financial planner?
Yes, I'm a CFP professional.
CFP professionals are committed to acting in your best interest. That's why it's gotta be a CFP. Find your CFP professional at letsmakeaplan.org.
At Public Rec, we're on a mission to make comfort look good. We develop premium performance fabrics that are built to last, easy to care for, and hard to live without. Our Daymaker pads, with their various sizing options, are designed to fit your life's moments, no matter what comes your way or how you spend your day. More comfortable than jeans, more stylish than sweats. Public Rec, where comfort rules.
When my hair started thinning, I didn't want to hear the wisecracks.
I was ignoring my hair because I was a full-time working mother, but luckily I found Nutrafol.
My hair was getting stronger and thicker.
I finally feel like myself again.
At IHG Hotels and Resorts, you can unplug for the day or plunge into a long weekend. Savor the moment or savor the details. Earn points for free nights with IHG One Rewards.
Experience the power of CNBC
Pro. Track your portfolio from every angle on one optimized platform. Become a smarter investor with the power of CNBC Pro. Go to cnbc.com/getpro now.
Coming up, some crypto-related bills may be hitting a roadblock over the Trump family's latest ventures in the sector. We're going to have an exclusive report on that in just a moment. Beautiful live shot of the Capitol right now. And then later, DoorDash's CEO is going to be talking to us about his spending.
Hello, can you hear me? You good? No?
That's going to happen in an exclusive.
Hello, testing.
5 a.m. this Eastern time this morning.
How's the mic?
Don't want to miss it. We're coming right back.
I can't wait to see their faces when they go out.
Hello, hello, hello.
The belly's it's full of Greeks.
Sneaky cowards.
Innovation changes everything.
Send it back!
With one investment, you can access the NASDAQ 100 innovators who are rethinking the world. Before investing carefully, read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
You don't know how tough an investment is until you push it. So at Federated Hermes, we put our actively managed fixed income products through a ruthless vetting process. Because that's how we roll.
Your record label is taking off, but so is your sound engineer. You need to hire.
I need Indeed.
Indeed you do. Our advanced matching helps find talented candidates so you can connect with them fast. Visit Indeed.com/hire.
Introducing AG1 Next Gen. The daily health drink backed by 4 rigorously designed clinical trials. Next Gen is clinically shown to increase healthy gut bacteria by over 10 times and to close common nutrient gaps. It's one drink for whole body health. The next generation of AG1 is here.
Oh, these Katie's are fire. Katie, you work here?
Whatever, kid. Take notes.
Every shoe for every athlete.
My world is in constant motion. The gym, the airport, the spotlight. I've learned that when I'm comfortable, I'm able to slow things down. The Ori DreamNet moves with me, stretches as I stretch, and keeps me steady through it all. So even though I'm always on the move, it's the comfort of DreamNet that keeps me grounded.
Whoa, termites can eat a pound of wood a day. Pound of wood a day. Pound of wood a day.
Pound of wood a day.
What's wrong, Daddy? Daddy? You okay?
Keep termites out of your home and your head with our premium guarantee that covers up to $250,000 in new termite damage. Before panic shows up, Terminix it.
Welcome back to Squawk. A landmark bill on crypto now facing some new hurdles. Some lawmakers needed to pass that legislation are raising concerns about the Trump family's various ventures in the sector. We're going to get straight over to Emily Wilkins, who joins us from Washington this morning. What's going on?
Hey, Andrew. Well, yeah, crypto bills are hitting a roadblock as key Democrats are been growing outraged at how Trump and his family are set to profit from their crypto ventures. CNBC got a first look at a new bill from Congressman Richie Torres that would prevent Trump and lawmakers from profiting from meme coins and other digital assets.
It's become clear that there is no path to a bipartisan compromise to crypto without addressing the elephant in the room. Like, I think the messages that have been sent, particularly from Senate Democrats, are loud and clear, and we ignore those messages at our own peril.
Now, Torres is one of the most pro-crypto Democrats in Congress, and he tells me that he still wants to see these crypto bills on stablecoin and market structure move, but he and other Democrats are now sounding the alarm after Trump announced that those who have bought the most of his meme coin would be invited to a dinner with him, and a stablecoin launched by Trump will be used by an Abu Dhabi investment firm for a $2 billion investment. Now, Republicans are planning on moving ahead with the stablecoin bill, noting that it sets the rules of the road and it does put regulations in place. Senator Cynthia Lummis, one of the bill's co-sponsors, did tell me, though, that Trump's investments are making bipartisan compromise more difficult.
I do think it's possible that that is an outlying issue that's hanging over the heads of some Democrats.
Lummis said she met with some of the holdouts yesterday. Negotiations are ongoing, and at this point, the Senate is still expected to vote on a stablecoin bill tomorrow. Guys, we'll see if they wind up getting enough Democratic support to get that 60 votes needed to advance the bill.
Emily, I want to thank you. Fascinating. We'll keep our eyes on all of it. I'm sure you'll be bringing us more as it progresses, or not.
Hopefully not. Coming up, tapping into the global energy markets, OPEC Plus recently decided to up production starting in June. President Trump heading to the Middle East next week. What will this all mean for the price of crude going into the summer? We've been right around 60. Will it be 50 or 70 by the end of the summer? We'll get into that next. Squawk Box returns in just a minute.
Welcome to Club Champion, the world's leading custom club fitter. And welcome to more gimmies, like gimme 20 more yards off the tee. Gimme 65,000 shaft and head combinations to find the one perfect fit. Gimme lower scores, tighter shots, and a little more swagger. Full bag fittings are just $100 with code PERFECTFIT at clubchampion.com.
This is Buddy. I've never met a dog like him because there's never been a dog like him. Every dog is unique. That's why at the Farmer's Dog, we put your dog at the center of everything we do. With food that's freshly made to human-grade safety standards in personalized portions. It's packed with all the nutrients dogs need and delivered right to you. We just want to make it easier to take care of everybody's buddy.
At Public Rec, we develop premium performance fabrics that are built to last and hard to live without. Our Daymaker pads, with their various sizing options, are designed to fit your life's moments. More comfortable than jeans, more stylish than sweats.
Did you know that your life insurance policy is an asset that you can sell? Hi, I'm Jay Jackson. I'm the CEO of Abacus Life, and for almost 20 years, we've been purchasing life insurance policies from seniors just like you. In fact, you can use the free policy value calculator at abacuspays.com, and in just seconds, you can learn what your policy might be worth. There are no fees and no obligations. Get real value from your life insurance when you need it with Abacus.
When you're the leader in disaster cleanup and restoration, how do you make like it never even happened happen? Let it rain, Randy! Woo! Yes! By being prepared for anything! Woo! Whatever comes your way, there's a pro for that.
Serve Pro, like it never even happened.
At Odyssey Trust, we're more than just a transfer agent. We're on a mission to deliver peace of mind by making things simple, fast, and easy. We're proud to be the trusted partner of over 1,000 clients in Canada and the United States.
Crude prices back to around $60. I was getting excited, like 57, but are still off about 17% since the start of the year. For more on this sector, let's bring in Lehman Croft, RBC Capital Markets Global Head of Commodity Strategy and a CNBC contributor. Should I be hoping for 50? Maybe not. It's bad for domestics.
Well, it's bad for U.S. producers. We've already had several U.S. producers coming out announcing they're cutting CapEx.
Yeah.
So, I mean, it's not great for Texas. So, certainly, for retail gasoline prices, for the consumer, it's good. But again, for the U.S. industry, not so much.
So, we always try to say, well, is it supply or is it demand? It's never one or the other.
It's never one or the other. And it's a combination of concerns about the trade war involving China. So watch for negotiations this weekend. If it looks like we have an off-ramp in the trade dispute with China, positive for crude. Watch what's happening with OPEC. One of the reasons why we have come down in prices is we've had surprise decisions by OPEC members to start putting some more barrels on the market. So that's the supply side of it.
What's behind that?
So do you have children, Joe? You do.
I do.
So you know when your children sneak out at night repeatedly, what do? You ground them.
It was a while ago.
Yeah. A while ago. Maybe it's more of an Andrew issue.
We try to sneak out now.
You sneak out.
Parents,
but you have several countries within OPEC Plus that have not been abiding by their quota. And I think there's frustration on the part of Saudi Arabia. Like, look, we're carrying the burden of the adjustment. Hey, Kazakhstan, you should do a better job of getting your production down like the rest of us.
How about Russian oil? Nothing's changed, I guess. It's always been out there.
It's always been out there, but we've talked about this, Joe, before. Like, the decision was made to allow Russian oil to stay on the market. Like, we made the decision very early on not to sanction oil. The Europeans went ahead with sanctioning oil, and then we did price caps. And price caps, I think, were really designed to keep Russian oil on the market. We really feared a multi-million barrel disruption, so they were an offset for the EU sanctions.
Iran? What's going to happen?
Well, I think this is interesting because I think there is some viewpoint diversity within the Republican Party over what a deal with Iran should look like. You have some that say Iran should shut down their entire program, ship out the centrifuges, ship out the missiles, like Libya did in 2003. And there are others who say, like, let's just do the 2015 agreement with enhanced monitoring, let them have a civilian nuclear program, and, like, cut it, call it a day, remove sanctions.
No motivation in this administration to take care of the nuclear sites. And they've dissuaded Netanyahu, and that's a signature of J.D. Vance and some of these guys of pulling back on things.
I think the Republican Party is divided on this. I don't think there's a single view on this. I think you have Marco Rubio, who has been much more, publicly talking about the need for Iran to dismantle their program, talking about, maybe we should have a military strike. That's a view you've heard from like a Tom Cotton, a Lindsey Graham, a Ted Cruz. But then you do have a J.D. Vance, Tucker Carlson, young conservatives like Kurt Mills saying, like, look, America first means that we should not become involved, in a region that might not be a core national interest of the United States.
Right. So is 60 where we should be and where we're going to stay, or?
Well, I think, we need to see where we land on trade dispute with China. We need to see where we land in the Iranian nuclear negotiations, because let's say we don't get a deal. Let's say the Iranians don't take a deal. Let's say the things fall apart in that situation there. That is certainly escalatory. And you have to watch OPEC as well. Like, are we done adding barrels, or are we going to see more supply coming on in July?
What do you think Trump's telling the Saudis?
Well, I think President Trump obviously likes a lower price point. Right. And President Trump, we didn't even discuss this. This was supposed to be his first foreign trip he's taking next week. The Pope's funeral upended that, but this is the first major foreign visit he's doing to Saudi Arabia, Abu Dhabi, and to Qatar. And so the question is, like, are there going to be significant deals we should be watching for?
All right. Funny you mentioned Abu Dhabi. Thank you, Halima.
Thank you.
Good to have you on.
Nice to see you.
Nice to see you.
All right, it is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. In our headlines this morning, U.S. Treasury Secretary Scott Bessent and Chief Trade Officer Jameson Greer will meet with China's lead economic representative this weekend in Switzerland in what could be a first step toward resolving the trade war. It's the first confirmed meeting between the two sides. Uber reporting better than expected earnings of 83 cents a share. That beat estimates of 50 cents, but revenue of $11.5 billion missed the expectations of $11.6 billion. Here's CEO Dara Khosrowshahi talking about pricing power earlier on the show.
We saw some relief in terms of insurance increases. We passed that on to the consumer as it relates to our mobility business. And we did see a slight mix shift in terms of trips to more international trips, especially as we saw outbound travel to the U.S. slow down a bit compared to the overall travel sector internationally as well. So pricing is something we're very well aware of, and actually we're happy to pass on some of the pricing relief we saw to our consumers.
Got some breaking news out right now. David Faber joins us right now with that. Good morning, David.
Yep, we're going to have some special guests as well for you, Becky. You guys have been covering Disney's earnings this morning, of course. Better across the board, direct-to-consumer looking quite strong as well, and the parks and experiences holding up. Well, on that note, we have the news to share that the Walt Disney Company and Miral announced plans for a Disney theme park and resort in Abu Dhabi. It would be the company's 7th theme park resort, and it will be, as you'd expect, of course, all things Disney, including a lot of new experience as well. So let's get to this news and let's find out exactly what's going on behind it. Joining me now is Disney CEO Bob Iger and Josh D'Amaro, the chairman of Disney Experiences. Both gentlemen, of course, are in Abu Dhabi. Guys, good to have you this morning, and congrats on the announcement. Bob, let me just start with you. Of course, why Abu Dhabi? Why now?
Well, first of all, let's start with the region, then we'll focus on Abu Dhabi. This, in many respects, is the UAE is the crossroads of the world. About 500 million people that are income qualified, meaning they can afford to visit one of our parks, live within a 4-hour plane trip here. And about 120 million people will actually come through Dubai and Abu Dhabi this year. And it's estimated that 39 million people will visit Abu Dhabi by 2030. So when we say crossroads, I think we really mean it. In addition to that, when you consider Abu Dhabi, you have to appreciate the fact that they have shown a great interest in arts and creativity. They build not only modern, but very, very high quality buildings. They've been very methodical about how they've planned their land. And most importantly, they love Disney. And we've also discovered that many people in this region love Disney. Josh and I have visited here now 3 times in a very brief period of time. And in all of our studies, we've been more than pleasantly surprised at the Disney affinity here. It's really quite something. So we're quite excited. This is the right place. By the time it opens will be the right time. And this is really a momentous occasion for the Walt Disney Company.
Yeah, well, I can imagine that it is. You know, you say by the time it opens. Bob, when do you expect that this resort will actually open?
Well, we're not pinning down a date yet. It typically takes us between 18 months and 2 years to design and fully develop, and approximately 5 years to build. But we're not making any commitments right now. Obviously, we're all eager to get started. Actually, our Imagineers have already begun the process of design, and we've been in deep discussions with our partners at Miral, who I should also say have proven to be great partners already. Another reason that we're here is finding the right partners and being able to negotiate the right deal. But we're all very eager to get going. You know, we'd love to be able to cut the ribbon as soon as possible, but we're going to build this big and we're going to build this right.
Yeah. Well, speaking of that, Josh, let me come to you. Obviously, our audience and many of your investor base always want to know, well, what's this going to cost? I see, you know, in your press release that I have in front of me, the new resort will be fully developed and built by Miral. Disney and its legendary Imagineers will lead creative design and operational oversight. So what is the arrangement here? Can you explain what that actually means?
Yeah, I'll start, David, with the fact that, as Bob said, we were incredibly impressed with Miral when we came to visit Abu Dhabi. They're very sophisticated. The way that they've built up this tourism industry here impressed us. And we knew immediately that we had a great partner on our hands. And as we started the negotiation, where we ended up was Disney will be responsible for all creative endeavors, all design, just like all of our experiences and parks around the world. We'll obviously lend our hand in operational expertise. We want guests, whether it's their first time in a Disney park or if they've visited our parks around the world, to feel that same Disney magic that they'd feel at any one of our parks around the world. Miral will fully fund this project. They will build the project. Again, as I said, they've done phenomenal things here in Abu Dhabi. And then ultimately, when it's fully built out, they'll operate it with oversight from us as well. So we feel very good about this deal. We feel very good about the partner and what we're ultimately going to build here in Abu Dhabi.
Yeah, Bob, you know, it is a different deal for Disney, isn't it? I mean, again, as Josh just said, you're not actually putting out any money. So, I mean, should we see it as a sort of a branding licensing deal where you have control to a certain extent? How do you kind of frame it at this point? And how is it different from the deals you've done or the other parks, obviously, around the world where oftentimes you use your own capital to build them?
So this will be our 5th location outside the United States, and no two are the same in terms of the deal structure. The deals have all been tailored to the market, to the partners, to the available capital, and also timing-wise from a Disney perspective. So as you know, we announced some months ago a decision to turbocharge the business that Josh oversees. And by that we mean investing significant amount of capital across the world, really, but more importantly, we're going to invest roughly $30 billion in the United States to expand Orlando and California. And what this deal gives us the ability to do is to continue to invest the way we said we'd invest, particularly in the U.S., which will be obviously job accretive, while at the same time expanding our reach to a part of the world that we really have only reached superficially. We talk about Disney Affinity, but it's a long trip to get to one of those 6 other locations, and this will basically put a Disney theme park really right in the backyard, so to speak, of a whole new consumer base. But this deal made sense to us in part because the available capital, and it also allows us to continue to invest the way we talked about. And also we've structured it in a way that, and Josh described it, that not only will we have total say really in the design and development, or design and creative rather, but we'll have considerable oversight as well. So it's slightly different than the other deals that we've done. Tokyo would be probably the closest, where the Oriole Land Company put up all of the capital for that. This is a slight variation of that.
Okay. From an economic perspective, and I don't know to what extent you can detail it here or we'll have to in terms of in filings, but is it then going to be ultimately a percentage of revenues, of earnings? I mean, you know, what can investors expect here beyond obviously spreading the Disney brand? But in terms of the actual numbers, Josh, how is that going to work? Can you give us any idea?
Yeah, David, I think you hit it on the head there. Essentially, this will be royalty based, and so we feel very good about the specific deal arrangements here. We won't go into all of that today, but we feel like with the demand that this will drive to the region, the ability to reach brand new guests in this region of the world, particularly younger guests in this region of the world, on top of the royalty setup that we have. It's a really good deal for Disney, and we won't go into any more detail than that now, but we feel good about the deal.
And David, another thing to consider is that every time we've built a park in another region of the world, it has lifted the Disney brand considerably. So we saw this in Paris years ago, and obviously in Japan, where our brand is one of the strongest brands in Japan to this day. We've seen it in Shanghai and the impact on the rest of China and in Hong Kong. This will have a very positive impact on the perception of the company, on the brand, and actually on many of our businesses in a region, again, where we haven't had a brand flag planted as significantly and as deeply as this one will be when it opens.
Yeah. Josh, again, referring to the press release here, again, your 7th park, you talk about it in terms of blending contemporary architecture with cutting-edge technology and deeply immersive entertainment experiences in unique and modern ways. What does that actually mean? What are you going to be doing here, perhaps, that you haven't done or aren't doing in your other 6 parks right now?
Well, you know, we've been operating for 70 years now. In fact, Disneyland's 70th anniversary is this summer. And so every time we build a new resort destination, we have an opportunity, kind of from a greenfield perspective, particularly here, to build up with all of the latest technology in mind. And as we know, particularly over the last 2 years, 3 years, 5 years, a lot has changed. And what this will allow us to do, David, is really lean into the tech side of experience. Take all the great stories that we have and deliver them to consumers and fans in completely new ways, dynamic ways, immersive ways, and ways that will keep them coming back time and time again. And so by virtue of the fact that this is our latest resort, it will be our most technologically advanced.
Yeah, and I think that's also consistent with Abu Dhabi today, David. This is a place that is investing heavily in new technology, particularly in AI. They're very technology forward as a region as well. And when we had an opportunity to really begin our design efforts, we thought, well, we want to build something that's consistent with what Abu Dhabi is. Yes, they respect their heritage and their legacy, as does Disney, but they're very forward-leaning. And the images that we provided you, I think, speak volumes in terms of what we're talking about. When we talk about a theme park that is modern, we really mean it. This will not look like any other theme park that we've built. Obviously, it'll have a lot of our IP, and there'll be a lot about it that is familiar. Certainly, Mickey Mouse is going to appear as Mickey appears in places all over the world. But you look at the architecture here, and you look around at Abu Dhabi's planning for the future, this park will be very consistent with that. And that's exciting to us.
I'm sure it is. Speaking of planning, Bob, how long have you actually been talking to the UAE, Abu Dhabi about this? How long has this been in the works in terms of the planning behind it?
Well, I started exploring this region and sent representatives of Disney to this region sometime in 2017, 2018. We thought it was time that we start basically learning more. And then, of course, COVID hit, and there was a CEO transition at the company. And then when I came back, the morale people, the chairman and the president, visited Josh and I in Burbank at our offices and made an impassioned plea and a pitch that was very impressive. And from that meeting, Josh and I decided, well, as I always say, if you don't go, you can't grow. So we got on a plane, we flew to Abu Dhabi in September of 2024. We were very impressed. We certainly started to get excited. Josh and I started doing some sketches on the plane of what we might design. And then we came back in February after talking with our partners and consulting heavily with the Disney board. And that began the negotiation, and it moved actually very quickly. Both of us were committed to getting this done, getting it done on a timely basis in a manner that worked for both sides. And here we are. So I'd say it's been quick, but it's been something that's been on our minds for probably the last 7 or 8 years.
You know, they've already got a SeaWorld. They've got a Ferrari World. They have a Warner Brothers World, a Water World. You know, there's a lot going on there already. Is there, is there a competition that is of concern to you at all in terms of you coming into this market, this particular island where all of these resorts already are?
Well, I think our results this quarter indicate that Disney is very special and different in a way. We stand very tall, and nothing against our competitors at all. You know, they've built some great things over time, and people certainly love them. But this is different both in terms of the Disney theme park experience, the quality of the experience, the Disney IP. And I will also say this is far more ambitious than anything that's been built here. And that will be reflected not just in the size and in the quality, but in the sheer scale and in the, I think, diversity and I guess the array of experiences that will be offered. We're not talking about anything small or anything in a box. This will be a significant theme park that we're putting here.
All right. Yeah. So you want to elucidate on that anymore, Josh? I mean, is it going to be 3 times the size of Warner Brothers World? I haven't been there, so I have no idea how much space that takes out. But how large are we talking about?
Yeah, it'll be much larger than anything that's currently here now. And I think to Bob's point, and you can see it in some of the renderings that we've released, we're being incredibly ambitious in terms of the architecture, use of indoor and outdoor space. One of the great things about the piece of land that we'll be building on is it's right up against the water, and so we'll be pulling water into this resort. We really haven't had an opportunity to do that anywhere else in the world. So this will be incredibly different from anything that's around it. And I think ultimately what this will do is be additive to the tourism market here. And so by virtue of Disney being here, I think kind of all boats will rise with the tide here. But this is going to be a really special project.
Yeah, you know, Bob mentioned as well sort of pulling, and I know you guys talk about the fact that I think it's a 4-hour flight from 1/3 of the world's population. But you do have parks in other parts of the world. Any concern, Josh, at all that you do pull attendance away from some of those parks that may be closer to people who come there?
No, we think there's a big opportunity here. Of course, we do entertain guests from this area of the world in our parks around the world. But For every one theme park visitor that we have around the world, there are 10 more that we know actually want to participate in Disney experiences, but they just don't have an opportunity to do so. And that's most clear in this part of the world. So these markets are incredibly relevant to us. As I said a little bit earlier, they're younger markets. The Disney affinity is high. So I don't really see this as a risk from a cannibalization perspective to any of our other resorts around the world.
Yeah. Bob, obviously you had earnings out this morning as well. I think later in the morning we may get a chance to talk with your CFO a bit more about those. But some may be surprised that experiences, parks, everything is held up as well as it has. Cruises, are you surprised, given the economic dislocation perhaps that many have feared, that things look as good as they have? And I'm just curious as well how you sort of see them in terms of future bookings right now.
I wouldn't say that we're surprised. We're certainly pleased. You know, we've been watching a pattern for some time that suggests that even with consumer confidence somewhat down and some issues in terms of the economy, that people still believe that a Disney theme park experience is really special, and they do whatever they can to preserve that experience, to get, to have the chance to visit. And I think that's what we're seeing. They're just incredibly resilient. And I think, again, that speaks volumes for what Josh and his team have built. And in addition to that, how they manage it. The experience is quite special. And, you know, as we think about what we're doing here, you know, we're mindful of that as well, which is why, while we certainly are aware of competition, and we don't really make light of it, but we have a lot of confidence in our ability to rise above and to really shine wherever we build.
Yeah, I'll add to that, if I could, for a moment. It's not only, David, about how the parks are performing in the quarter, but you know, we have the opportunity, particularly at Walt Disney World, to look forward at future quarters. We have 30,000 rooms at the Walt Disney World Resort, and so bookings continue to look strong for us. And I think this is, you know, we've been investing aggressively in these theme parks. There's always something new for consumers to come and check out, and so we feel really good about where we stand right now.
Even with the opening of, well, still my parent company's Epic in Orlando, is that going to be a challenge at all, Josh?
Listen, I think anytime something opens up in Central Florida, we get more tourists coming in. If you just go back 10 years ago, David, and you look at how we've been investing, every single one of the theme parks that we have at Walt Disney World, it's essentially a can't miss. Like, you're not going to come into Central Florida and not go visit Star Wars. You have to go see Pandora. You're going to have to go to Epcot and see all the new investments that we've made there. So as new families come in, tourists come into Central Florida, we feel that we're going to benefit from that, and the numbers would suggest that's actually happening.
Yeah. Josh, while I got you as well, obviously, given everything we followed during the day here, certainly involving geopolitics, China in particular, any diminution in attendance at Shanghai at all as a result of perhaps rising anti-Americanism in that country?
No, this is something we track very, very closely. Volumes in Hong Kong and in Shanghai remain at record levels, quite frankly. There is no detection of anti-Disney sentiment in the area. Again, we've built amazing assets both in Hong Kong and Shanghai, and we've continued to invest on that front. So, you know, although the Chinese consumer is a bit unstable right now, from a volume and demand standpoint, our parks are very healthy.
All right. Josh, Bob doesn't really do sketches on the airplane. Come on. Really? Sketches? He's doing sketches while he's sitting there? Yeah?
He absolutely does.
This is where AI is a powerful tool, David.
Yes, I've been learning that as well, Bob. Finally, people are going to see the two of you together, Bob, and think about succession. Does Josh have an upper hand here, given everything that's going on and the obviously efforts that you're making there?
David, clearly you know that you're not going to get an answer to that question. We're here to discuss Abu Dhabi, and since we're announcing earnings, or we've announced earnings, we're here to discuss that as well, and we'll just leave it at that.
Yeah, all right. Well, I'm going to leave it there as well, given I think we've gotten a good amount of time. I guess the final question, Bob, for you is, I mean, you're going to be long gone when this park is completed. I know you wouldn't tell me when, but it's got to be at least 5 years, right, before people are going to be in attendance in Abu Dhabi, correct?
Yes, longer than that, yes.
Longer than that.
But, you know, David, you know, there are many projects I'm working on that will be completed. You say I'm going to be long gone. I'm not sure I like the way you put that, but
no, I just
that
like
will
to
be
bother you a
completed
little
after
bit. You know that.
after I retire again.
That's exactly
Yes,
right.
I do.
I got to get a little dig in there somewhere.
I'm a big believer. I'm a big believer in managing this company for the future in the long run, and this step is a big step in doing that.
All right. Guys, certainly appreciate it. We'll be obviously talking, Bob, about earnings a bit later as well. The stock is up nicely, largely on the strength of those numbers as well, but certainly some big news to come along with them. Guys, thank you so much for joining us this morning. Appreciate it.
Thanks, David.
Thanks, David.
David, want to thank you for bringing us that great interview, making some news this morning.
Pushing up daisies? What did he say?
What did you say?
I don't know. What did he say? That was David. What was that, Faber? I mean, God, I'm afraid to talk to you.
I didn't say pushing up daisies. What are you talking
What'd you
about?
say?
What'd you long gone? I like to remind him sometimes.
Long gone from the company. He's in the pro. Did you see him? He seems sharper than you, Faber. He seems sharper than you.
Than me. What do you want from me? He looks better too. I know. Annoys me. That's why I like to remind him he's older.
Yeah. All right. That was a dig. All right. I got it.
Okay. Three handsome, many handsome men.
We're all
and beautiful women. Beautiful women.
Yeah.
Okay.
David, thank you.
Before HR calls, we're going to go. A preview of today's Fed decision and what Jay Powell may or may not say about future rate cuts. We'll talk about it, plus an exclusive interview with the CEO of DoorDash. She's going to talk about the competitive food delivery industry and its big new deal with Deliveroo. Love saying that word and so much more. We're coming right back.
Nuveen invests with the foresight and vision to anticipate the needs of future generations, to build strong portfolios that deliver lasting legacies, to innovate and adapt for what's just around the corner. Because after 125 years of yesterdays, Nuveen knows your ultimate stakeholder is tomorrow. Nuveen, invest like the future is watching.
Humankind. That's what we are, giving of our kindness and mercy, like the thousands of life-changing surgeries and trainings provided by Mercy ships, because we're all in the same boat called humankind.
Picasso is transforming luxury vacation home ownership with over $100 million in gross profit. Even though they're a private company, you can invest alongside world-class VCs for a share price of $2.80. Visit Picasso.com/invest to learn more.
A rich life isn't a straight line to a destination on the horizon. Sometimes it takes an unexpected turn with detours, new possibilities, and even another passenger or three. And with 100 years of navigating ups and downs, you can count on us to help guide you through it all. Because life is a winding path, made rich by the people you walk it with.
Introducing CNBC Plus, the new streaming platform from the #1 source in business news. Watch live or on demand. Access any market, anytime, anywhere. Start streaming. Go to cnbc.com/plus now.
Dear Texas, this is Kona Fancy, part of our premium line of Cafe Au Lait Reserve. With notes of nectarine, maple, and macadamia, this full-bodied coffee was grown just for you. Cafe Au Lait Reserve, brought to Texas with love from H-E-B.
My world is in constant motion. The gym, the airport, the spotlight. I've learned that when I'm comfortable, I'm able to slow things down. The Ori DreamNet moves with me, stretches as I stretch, and keeps me steady through it all. So even though I'm always on the move, it's the comfort of DreamNet that keeps me grounded.
The Golden State Warriors on top of the NBA world.
The Denver Nuggets can finally call themselves NBA champions. Banner number 18, the Celtics are NBA champions.
ABC, home of the NBA Finals.
Welcome back to Squawk Box. Futures have moderated a little bit, now 180 points in the red on the Dow. NASDAQ was up quite a bit more than that as well, so we pulled back just ever so much. Check out the shares of Novo Nordisk. We were talking earlier. The drug maker cutting profit forecast due to lower than expected U.S. sales of its weight loss drug, both of them, Ozempic and Wegovy. The Danish drug maker says it's being hit by generic versions, those compounding versions of the patented drugs, but I expect those copycat sales to ease later this year. And still to come, the Fed is going to be in focus for investors today as the FOMC wraps up its two-day meeting. Goldman Sachs Vice Chair and former Dallas Fed President Robert Kaplan is going to join us with his take on where rates are headed, where the economy is, what tariffs mean to all of this. We'll be right back.
Machine learning is advancing, but businesses wonder if some machines can keep up.
Let's welcome our new coworker, Jeff.
Copier has a great idea.
Wonder if it's the same idea as yesterday.
It's a performance issue, really. I know people push your buttons, but you still have to deliver.
Anything can change the world of work. ADP Assist is AI, informed by workplace data, and designed for the next anything.
Liver health is important, but do you know how important it is? What I have been doing that I have been really loving has been taking a shot of dose every single morning. It's so easy to be consistent with because it tastes really, really good. Here is to liver health.
At Franklin Templeton, we're expanding access to the growing opportunity in private markets, empowering advisors with solutions to build the portfolios of the future today. Alternatives by Franklin Templeton, your trusted partner for what's ahead.
Goldilocks needs a place of her own, and fast. Thankfully, she's on Redfin. They update their listings every 2 minutes. And with so many options, she's bound to find exactly what she wants.
This one's just right. Is she meeting? Yes.
Oh, it's happening. It is happening.
How will you shape the future of consumer products and retail with confidence?
Consumer products clients are relentlessly focused on driving profitable growth.
Whether it's untangling global supply chains, managing cost pressures, or leveraging emerging tech to create consumer value, EY teams bring real-time insights and deep sector expertise to the moments that matter.
The ability to truly provide personalized experiences requires an understanding of all channels of consumer behavior.
EY, shape the future with confidence.
The game has changed, and public companies are now using convertible bonds to stack Bitcoin on their balance sheets. Once reserved for Wall Street's elite, these are now available to all via ETFs. Introducing BMAX, a first-of-its-kind ETF that invests in convertible bonds of Bitcoin-related companies. Learn more about the Rex Bitcoin Corporate Treasury Convertible Bond ETF BMAX at rexshares.com. Not suitable for all investors. Investors should carefully review the fund's prospectus for objectives, risk, charges, and expenses. Visit rexshares.com to obtain it and read carefully before investing. Distributed by Foresight Fund Services.
So which leg are we operating on?
Asking the right question can greatly impact your future.
Are you sure you're an orthopedist?
Especially when it comes to your finances.
Are you a certified financial planner? I'm a CFP professional.
CFP professionals are committed to acting in your best interest. That's why it's gotta be a CFP.
The Wi-Fi is booming!
The Wi-Fi is booming. Xfinity.
Welcome back to Squawk. India attacking sites in Pakistan, it said, were part of a terrorist infrastructure following an attack by Islamist militants on Hindu terrorists last month that killed 26 people in Indian Kashmir. Now, for its part, Pakistan saying it had shot down 5 Indian fighter jets. It amounts, though, to the worst fighting between the nuclear-armed countries in more than 2 decades. Pakistan saying at least 26 people were killed, 46 injured in those strikes. And we should mention separately this morning, United Airlines announcing that it has now called off its flights to New Delhi for the day, citing escalating tensions between those 2 countries as well as subsequent airspace restrictions. So this is something we need to be watching. And I mentioned we were talking about it out in LA at the Milken Conference, a whole bunch of investors really concerned that this could actually escalate in ways that we have not been, frankly, talking and probably enough about.
But no flights to New Delhi or Newark.
Right.
That's...
Yeah, actually, they are flying back to Newark, but I mean,
well,
nuclear war or
canceled
or Newark Airport.
35 flights a day. It's
Yeah.
Yeah.
You ever fly out of there? I mean, it is.
Yeah,
I thought.
Andrew and I both flown
I mean,
in and
it's
out
the
of there
baggage
this week.
claim that gets me. It's like it can be as long as your flight.
I'm more concerned about the New Delhi situation.
I am too. I know, but we're talking about United, whether they're. I mean, that's kind of a small point of what's going. Yeah, they both have lots of nukes. Yeah. Lots of nukes.
All right, still to come this morning, DoorDash making some big news over the past few days, expanding their delivery service and buying a restaurant booking platform. DoorDash's CEO, Tony Xu, will join us in just a bit. Up next, though, the Fed is expected to leave rates unchanged. But investors will want to hear from Jay Powell on the state of the economy, tariffs, and much more about their statement and press conference. Goldman Sachs Vice Chair and former Dallas Fed President Robert Kaplan will join us to talk about this in just a moment. Squawk Box will be right back.
Hello, everyone. I'm Julie Sweet. Welcome to another edition of Reinvented with Accenture. Today is a very special episode. Normally, we're talking about reinventing a company. Today, we're talking about reinventing a country.
Payments have to be fast, they have to be secure, they have to be convenient, and they have to be inclusive. Those are things which are not negotiable. And when you think about it, there is no single commercial transactions which doesn't rely on a payment at some point.
Investment opportunities are everywhere you turn. Do you charge forward? Freeze in your tracks? Or let curiosity light the way? At T. Rowe Price, we ask smart questions about opportunities like advances in healthcare and how these innovations will create a healthier world tomorrow. Better questions, better outcomes.
Your shipping manager left to find themselves, leaving you lost. You need to hire.
I need Indeed.
Indeed you do. Sponsored jobs on Indeed are 2.5 times faster to first hire. Visit Indeed.com/hire.
Decking and railing that's ready for anything you throw at it, even John's 40th. Trex, performance engineered for your life outdoors.
With the president pressuring the Fed to cut rates and the outlook uncertain, how will the Fed balance the threat of lower growth and higher unemployment? Fed Chair Powell's message to investors. Power Lunch, today 2 Eastern, and streaming on CNBC+.
At the UPS store, we offer a lot because running a small business takes a lot. That's why we're the Help Protect Your Privacy store and the Give Your Business a Real Street Address store. So while you're juggling everything else like the boss you are, we're the extra pair of hands store. You can count on us as the shredding and mailboxing, anything and everything to keep you going store. Get $5 off shredding services. Visit the upsstore.com/shred and shred today.
It's a Winter Soldier. That guy is so cool. We are the Thunderbolts!
Federal Reserve widely expected to keep rates where they are. Today's meeting following those 2 days. Former Dallas Fed President Robert Kaplan is now vice chairman with Goldman Sachs. And it's good to see you, as always, Rob. Just start with just what keeps you up at night. Would you say that I'm talking about tariffs, is it the inflationary impact or the growth worries or the recessionary impact of tariffs that you think worries you more? Is it exactly equal?
The one thing that makes me feel a little better is that 77% of the U.S. economy is services, not goods. About 12% is manufacturing, another 12 or 13% is imports of goods. So I think the economy, if we get some clarity, can withstand this from a growth point of view. We're clearly slowing. And if we don't resolve some of these tariff issues, we're going to slow more. but I'm more probably concerned about the cost push and how that flows through to the economy. And again, that's going to be a function of whether we're able to de-escalate with China and de-escalate with these other countries, and we may be able to do that. So what I'm seeing in the economy right now is slowing, but it's pronounced in shipping, it's pronounced in hotel, leisure, tourism. But I hear from other clients, business is it's not great, but it's hanging in there. And I think that's where we are right now.
That sounded like if you take that to the Fed and say, here's what I'm seeing, that would be a reason not to cut right now. I think there's I've heard the other side is that, inflation, some people think is a monetary phenomenon, and since it's a second derivative, it's not just that first price hike that you'd see. It has to continue and, go up 5, 6, 7%. On top of another 5, 6, 7%, on top of another 5, 6, 7%. And that would be, I guess, a trade war, a tit-for-tat trade war. So sometimes I have trouble seeing the inflationary side of things, and I worry more about the growth side, which would argue for a cut with oil at $60.
Listen, everything I've ever read and studied on tariffs, and Texas is one of the largest exporting states in the country. Tariffs tend to slow growth, and they make prices stickier. And so that's why this has been a tricky thing for the Fed to handle.
Right. It's like the worst. I mean, those two things. That you're just describing stagflation. So when do you think that because there's been such pressure from President Trump, do you think that makes Jay Powell less likely to cut in the future?
No. It doesn't, and it shouldn't. And I think Jay Powell's got two objectives here. One, for the press conference, is to jawbone and make clear that the Fed will remain vigilant in fighting inflation. So why is he doing that? Because he doesn't want inflation expectations to get unanchored. And what I'm seeing actually in the economy with consumers pre-buying, with businesses starting to put surcharges on bills, I think you're seeing inflationary expectations get untethered. He wants to control that. And that will set the Fed up to be able to assess conditions and into the June meeting, into July meeting, and get prepared to cut. But it's going to be easier, ironically, to be able to cut in later meetings if he keeps inflation expectations anchored now. So he may jawbone tougher, even though I think he's keeping all his options open, and I think they want to get in a position to do something, but only if it makes sense.
We did see a claims number that, I don't know, but then we saw a good jobs number. No real worries there. What's the next? When do you expect to see something if there is a problem? And the same question for an inflation print. What's the next thing that will let us know what's really going on?
There's a couple of unusual things going on right now. Normally, when you see a first quarter GDP number that's this weak, and I know some of it was due to excess imports, but it was still weak. When you see GDP slowing, you would expect unemployment to start moving up or spiking up. You may not see that this time because the labor force is still very tight. And the lack of immigration, the deportations, the uncertainty about the status of millions of undocumented workers who are in the workforce, I think it's going to keep the labor force tight. So I actually wouldn't shock me if the unemployment number doesn't move up the way you normally see in a slowing. And so then the second thing I'm looking for is less, honestly, in the data. I'm looking to talk to contacts about what their behavior is, what they're seeing in their business. And what I'm hearing right now, and I think that precedes the data down the road, what you're hearing is they're worried about empty shelves coming in about 4 to 6 weeks. That's why this de-escalation this weekend with China could be very significant. It's ironically not as critical we come to a trade deal with China. I think it is critical that we roll back some of these tit-for-tat tariffs so we can get trade flowing again. Otherwise, what I'm hearing from businesses, you're going to see a lot more stocking out. It's going to particularly affect small businesses who really don't have other options. And so I'm watching the China discussions carefully. And then the other thing is I'd love to see a cooling off of preemptive buying and also the surcharging that we're currently seeing. And so as I hope as we see some trade deals and more clarifications, you'll see the average tariff rate start to cool down, but the jury's out on that yet.
Yep. And you got all of Goldman Sachs. You can call anyone you want and find out what's going on. Hatsi is, whomever. It's the vice chair of Goldman. Tell me what you're seeing. You can do that too, right? I mean, that's always that's
and
a good place.
We're talking about that. And we're talking to asset allocators around the world.
Yeah.
We're watching this very carefully and trying to weigh how they position their portfolios.
All right. Well, that's invaluable, and coming on here is invaluable to have you, Rob. We appreciate it. Thanks.
Good to talk to you, Joe.
Okay.
Okay, coming up next, the CEO of DoorDash on the company's expanding global business, including its quarterly results and, yes, competition in the food delivery sector. That after this.
What Tractor Supply customers experience is personalized service made possible by T-Mobile for Business. With T-Mobile's reliable 5G business internet, employees get the information they need instantly. Tractor Supply goes further with T-Mobile for Business.
I know how to make slick-looking goggles/glasses, but I have no idea how to make slick-looking social media stuff.
But GoDaddy Aero uses AI to create social content out of thin air, like this one.
Walton Goggins goggle glasses are great gifts for all guys and gals.
You founded your kayak company because you love the ocean, not spreadsheets. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job on Indeed, candidates can find it easier, so you can hire easier. Visit Indeed.com/hire.
Golf is not a religion, but it does have cathedrals. These courses do more than just test your character. They reveal it. Peter Millar, the official outfitter of the United States Open.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment. Call Coventry Direct to learn more.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
Our friends sold their policy to help pay their medical bills. And that got me thinking. Maybe selling our policy could help with our retirement.
I was skeptical, so I did some research and called Coventry Direct. They explained life insurance is a valuable asset that can be sold.
We learned we could sell all of our policy or keep part of it with no future payments. Who knew? We sold our policy. Now we can relax and enjoy our retirement as we had planned.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies, or call 1-800-514-7800. Coventry Direct, redefining insurance.
Squawk Box Friday, a special report on cargo theft. CNBC investigates how criminal gangs are attacking America's supply chain.
They literally have a license to steal.
Squawk Box, Friday, 6 a.m. Eastern, and streaming on CNBC+.
So many in this business try to scare you. We try to give you the confidence to do it yourself.
It gave me more confidence in my investing decisions.
You couldn't ask for more support.
Get invested. Join the club today. Go to cnbc.com/joinjim.
DoorDash announcing 2 big acquisitions for Deliveroo and 7 rooms worth billions of dollars. It's an effort to transform its business offering and expand its service internationally. Joining us right now in an exclusive interview is DoorDash's co-founder and CEO, Tony Xu. We are thrilled to have him here. Tony, good morning to you. A big quarter, a big sort of moment in terms of just what the expansion of this company looks like. I don't know if we want to go earnings first or we want to go deals first. I kind of want to go deals first.
Your choice.
Dealer's choice. So I'm gonna go deals first in terms of just what this ultimately means for the company in terms of how it's going to grow and frankly how you see the competition playing out.
Yeah, I mean, I think what you see is that DoorDash is a multi-product company now that's operating on a global scale. And I think that is in part, I think, what you're seeing. I mean, our aspiration has always been to grow and to empower local economies all over the world. You know, the willingness and the desire of every small, medium, and large retailer to become a digital powerhouse, that's true in San Francisco, that's true in London, that's true anywhere in the world. And so that's really what the nature of these partnerships are about. You know, in the case of Deliveroo, we are adding to our footprint in Europe. You know, should the deal close, we would then operate in 30 countries across the continent and 45 countries globally. In the case of SevenRooms, we are adding to the DoorDash commerce platform, where we've white labeled our services such as DoorDash Drive, which you could think of white label delivery, DoorDash Storefront, white label online ordering, and now with SevenRooms, white label marketing to help restaurants get a 360 view of their customers regardless of the channels in which they dine with them.
What's the integration ultimately look like behind the scenes in terms of, to the extent there are going to be cost savings, and how integrated will some of these services be or not be? Because I know that you're going to maintain some of the brands and whatnot.
Yeah, I mean, that's something we're going to have to figure out. Obviously, you know, our goal here is to maximize for success. And so while you'll certainly see certain, you know, services and tech stacks integrated to allow, you know, the best, you know, offering, especially the best of scale that DoorDash brings, we also want to learn and navigate all of the different local challenges that we see, given that this is a highly local business. And so it really is a best of both approach, where you're going to see, you know, a consistent service, but we're going to maximize our the offerings to each respective market.
We had the CEO of Uber on a little bit earlier. How do you see the competition with them playing out? I mean, is that, if you were to put one company on your sort of competitor board, is that it at this point?
No, I think the, you know, competitor I always put on the board is really rising consumer expectations. You know, I think that's always been what's driven us at DoorDash, and frankly, that's always the highest aspiration. You know, what we've delivered for a customer yesterday probably isn't good enough for what we've delivered, what we will deliver for them today. And so for me, it's always, you know, obviously we're careful about understanding, you know, the different peers that we compete with. We don't underestimate anyone. But truly what inspires us and motivates us is the consumer and their rising expectations.
You just mentioned the consumer. I think we're all trying to understand what's going on with the consumer in this economy here in the U.S. and abroad, given the tariff story, and whether these numbers are, you know, the expectations around a slowdown are playing out or not. Apparently this morning it did not seem that way with Uber. It does not appear that way in the context of your earnings. But what are you seeing?
Yeah, well, I think what you're seeing is a lot of fear in the system. I think that is very real. Consumer sentiment certainly has swung negative, you know, in past months, but we haven't seen the order behavior change. I mean, as you referenced, I mean, we saw record earnings where we saw, you know, 20% plus growth on our top line on a very large base. And we're seeing order rates of different cohorts continuing to improve as the activity levels grow with the increasing number of use cases, as well as different categories now of delivery that DoorDash is offering.
What's happening to your costs? And I'm thinking about, you've got a pilot program going on in Pennsylvania for this benefit program for Dashers. And I'm curious just how you see costs over time, either going up or I doubt going down.
Yeah, well, you know, our belief in programs like the one you referenced, the portable benefits program in Pennsylvania, which we're now taking to other states, is that Dashers ought to be able to have what they want, which is the flexibility of a type of work like ours, and also protection and benefits. And so you're right to say that, you know, in general, costs go up. But what I would also say is that, you know, efficiency as well as the ability to produce new features to grow the order behavior in our system, especially as now we are a multi-product company, also grows. And so it's always this balancing act. You'll obviously have to invest in order to, you know, achieve a certain outcome, which then delivers financial results. But, you know, job number one is making sure that we deliver for the customer, in this case, the Dasher.
You know, we heard 2 weeks ago that Lyft is going to go international. They have been a domestic player thus far. You've worked with them before. Do you see, how do you see that piece of the world playing out?
Specifically, you mean within ride-hailing?
Whether ride-hailing for you ultimately has to get matched up, whether you think you ultimately match up with a ride-hailer ever in a more meaningful way.
Yeah, well, I mean, the first thing I would say is I can't think of any other program or set of services that would be more useful than ones that connect local customers to local businesses. If you take something like restaurant delivery, that has the greatest, frequency of activity, both because of the type of use case, eating, but also because you're connecting you to everything inside your city. So I think for us, the focus is squarely on that, making sure that organically we build the best-in-class products, that we continue to do that and continue to meet the increasing standards from customers. I think with respect to other types of services, we do have partnerships. I mean, you mentioned Lyft. We have a partnership with Lyft that we're happy about in the United States. We have other types of partnerships as well. I mean, that's certainly a part of our ecosystem, but the main focus is organically building great products.
Separately, wanted to ask you, I got to, because we talked to Dara earlier, and maybe I should show you some tape of what he said. They have a lawsuit, which I'm sure you know about, against you. Let me just play it, because I'm curious what you think in reaction to it.
We wanted to go to court to essentially give merchants more choice. There's a direct business where ourselves and some of our competitors essentially empower merchants to be able to deliver for themselves, for their own website, et cetera. It's delivery as a service. We think that should be an open market. And right now, we don't see that as an open market. We see some of our competitors trying to make some anti-competitive moves. We just want to give our merchants more choice.
Tony, what do you make of that?
Well, I mean, as you stated, Andrew, it's a very competitive market, and I think merchants do have choice. I think merchants have chosen, and in the case of B2B services or delivery as a service, I think they've chosen our product. I mean, something that we pioneered and led with in the market over 8 years ago. And what we're focused on is always trying to innovate and bring new products to bear to match increasing standards and expectations from customers. We're not focused on litigation.
But in terms of the lock-in effect, if there is one, and should there be?
Well, there's no lock-in effect. I mean, merchants are choosing to use our service because it delivers the highest quality product at the lowest cost.
In terms of acquisitions going forward, what does that look like for you? We were actually also talking, Uber just bought a business in Turkey. How much of your business you think in the future is going to be just grown organically versus trying to buy into new markets?
Well, most of our work has always been organically built. I mean, as you can tell, our focus has always been on innovating on the product. And so, we actually haven't really made an acquisition since our partnership with Volt in 2022. And so these aren't things that you get to perfectly time. We don't get to choose when, assets are for sale or things like this. But most of our efforts really are focused on product improvements.
And then finally, this is a news you can use question for those of us who use DoorDash all the time, including the Sorkin family. What do you think a fair tip is these days?
That's a great question. I think it depends on the level of service. But what we have seen is that customers love to tip, and that's a very American phenomenon, I have to say. Obviously, I travel a lot for our work. Right. Today operate in but in the U.S., people do like to tip. They don't like to be forced, in terms of the amount or the frequency in which to tip, but they do like to tip.
Right, but Tony, here's my thing. I'm just going to go straight to my own problem. So we sometimes order from like a Sweet Green or whatever. Anyway, sometimes it's not. Sometimes the delivery could be late, but it's not the delivery person's fault that it's late. It's late because it wasn't put on the first end. So then I don't want to not tip or ding the delivery person. So that's why I'm sort of asking this question.
Yeah, it's a great question. I mean, and you're calling out like some of the challenges we face, which obviously is what we have to deal with a multi-sided marketplace. It's not just a relationship between you and the dasher. On every single order, 3 parties are involved to make, that job successful. And so that's something we're working on. We don't always get it right, but those are a lot of the nuances that we have to solve.
Okay. Tony, it is very good to see you. We look forward to seeing you again soon, hopefully in person. And thanks again. Congratulations on all these big deals. We're coming right back after this. We've got some.
QX80, you are cleared for takeoff.
Why go commercial
Order filled.
when you can have all the comforts of private? The all-new Infiniti QX80.
At WeatherTech, we don't need to bring jobs back to America.
You want to know why? Because we
Never left.
At WeatherTech, we've been manufacturing here in America for decades. So tariffs will never affect the prices of our products, ever. When you invest in the protection of your vehicle with WeatherTech, you're making an investment here in our country. WeatherTech, made right in America. Order American at WT.com.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
Franklin Templeton ETFs. With over 70 ETFs, we have solutions for every market, helping advisors build the portfolios of the future today. Franklin Templeton, your trusted partner for what's ahead.
Breaking earnings news. Disney, Novo Nordisk, Warner Brothers, Coinbase, reporting, market reaction, expert analysis, strategies for your portfolio. This week on CNBC and streaming on CNBC+.
Here, we'll never be told our concerns are all in our head. Here, healthier happens together.
It's Julia's birthday, so celebrate her. Celebrate her love of snacks or her elegant style. Celebrate the home she gave Alfie. Gifts that say I get you. Etsy.
Forget the last-minute panic. This is the one gift you know she'll love. Just pick, order, and relax. Ordering from 1-800-Flowers.com is the easiest way to find a thoughtful Mother's Day gift that she'll love. They've got tons of beautiful, high-quality bouquets to choose from, and you can add chocolates or gifts to make her feel exceptionally special. Plus, same-day delivery is available, but Mother's Day slots are filling up fast, so I'd order now. For a gift that truly shows her how much you appreciate her, give her her flowers. Check out 1-800-Flowers.com today.
Welcome back, everybody. We've got some news from the FAA on Newark airport operations. Phil LeBeau joins us with that. Hi, Phil.
Hey, Becky, the FAA out with a statement about steps they are taking immediately to improve the air traffic control system when it comes to the Tri-City area, specifically to Newark Liberty Airport. We're not going to go through every single thing that they're doing immediately, but some of the more noteworthy things that the FAA has said they are doing is, one, they're going to be adding 3 replacement backup telecommunication systems, fiber telecommunication systems that will add redundancy, if you will, so that there is no loss of communications between the Philadelphia TRACON and Newark Liberty. They're going to be replacing copper connections with fiber optic. That's something that Secretary Sean Duffy has talked about for some time. And they're going to be deploying temporary backup systems at the TRACON facility in Philadelphia. In addition, they're going to be adding some backup flight controllers. Not surprising, Becky, that they are making it clear they're taking immediate steps to improve the situation when it comes to air traffic control.
And you said adding some backup air traffic controllers, the human element side of this?
Well, not necessarily backup. They're adding flight controllers if possible. I mean, but we've talked about this before, Becky. You just can't take somebody who's working in St. Louis, Missouri and say, go to New York and you're going to do flight control. You've got to train them in that area.
Yeah. Phil, thank you. We have lots more to talk about with this. We appreciate it, and we'll talk to you again tomorrow. That does it for us today. We'll see you tomorrow. Squawk on the Street begins right now.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber, Mike Santoli at Post 9 of the New York Stock Exchange. Kramer has the morning off. Stocks get a bounce on this news that Bessent and Greer will head to Geneva this week for what's being dubbed an icebreaker with their Chinese counterparts over trade. Fed decision at 2 p.m. Eastern, and more guidance cuts today from Novo, SMCI, and others. Our roadmap begins with these China talks. Futures bouncing on the news. The Treasury Secretary and the top trade official, Jameson Greer, will meet their counterparts in Switzerland this week.
Plus, shares of Disney are rallying this morning. The company reported a perhaps surprising uptick in the number of streaming subs. Also announced its plans to build a new theme park and resort in Abu Dhabi. We're going to bring you more of my exclusive conversation with CEO Bob Iger. That'll be in just a few minutes. And keep an eye on shares of AMD. The company notched stronger than expected first quarter results. Its CEO Lisa Su will join us exclusively later this hour.
Let's begin with the markets. Trade and decision day for the Fed. Interesting news about going to Switzerland, Mike. Although at the same time, the EU continues to say they're going to ready some countermeasures in the event that their talks with the Americans fail.
Yeah, I mean, standoff on every front. You know, the market at this point, having come back the way it did, certainly prices in some measure of de-escalation and the absence of some kind of real economic calamity. So any progress in that direction is welcome. The market has shown a little bit of an instinct to bid for even rumors of meetings and deals. That being said, you know, we're down 1.4% in the S&P this week after a very strong 3% gain last week, after we've come 17% off the low. And to me, it's, okay, short term, overbought. We got back to the April 2nd levels. You regained 60% of all that was lost, and it's a now what moment. At the same time, you still have plenty of negative sentiment to burn off, I think, and institutions probably felt left behind by the rally. So to me, that's why we're in this sort of low volatility way, churning around in this area. Currency volatility has eased up today. That's, to me, the thing to watch in terms of whether it bleeds into everywhere else. Credit's been fine, but currencies has been, you know, that little bit of a tale of capital flight.
You know, we were talking, in fact, yesterday a good deal. I spoke with Sarah about it as well when we were both at Milken, in terms of the expectation in the market that there would be some signs of de-escalation in the next few weeks, and we already have gotten them. But I guess the key question remains, what has the market already priced in terms of those expectations? Obviously, you see futures are looking, pointing to a higher open 28 minutes or so from now, Mike. But, you know, when I speak to a number of market participants, it's now, all right, what are the tariffs going to be lowered to when we get this de-escalation? And again, that is still uncertain in terms of whether we get it and what it looks like. But is it 50%? Is it 40%? And of course, as is typical of hedge fund managers, they're trying to figure out, well, if it's less than 50, that'll be really good. And then we'll get a bump up in the S&P, maybe a few percent, and the Russell probably more so because it's been penalized more so as a result. But that's the kind of thing that's going on right now. Yeah. And obviously no surprise that that the market already has priced in this expectation to some extent that we will get this de-escalation.
Exactly, although I don't know if there's a way to determine exactly what precise net tariff level and impact on economic growth has been priced in.
It's up to one guy, by the way.
Exactly.
So, and by the way, it depends how Donald Trump feels that morning. I mean,
which,
you know.
Also is the argument against, well, the Fed should be proactive and get ahead of this. Let's just imagine the world in which the Fed sets up a rate cut for June. The economic data remains okay, whatever, maybe inflation comes down. They cut in June, and the president says, never mind. And all of a sudden, the pressure's lifted, and I mean, it wouldn't be a disaster to go down 25 basis points and then have the economy do what it does. But I think that's why everything's in play. What I will say, the market has priced in that we are in this in-between phase where either de-escalation and or the Fed coming in to help, and oil being down, and the carrot being dangled in front of the market of the tax package can have enough offsets that a good, you know, kind of starting point for corporate America and the economy means that we have time. I think that's what the market is suggesting. We're still down 8% from the highs. You know, the market is still kind of struggling in a little bit of a downturn here. It's just that, you know, the absolute worst case has been taken off. We bottomed at the exact moment of maximum tariff hawkishness and, you know, have benefited from all the incremental easing of rhetoric, at least from here.
Some argue that this move to begin conversations actually gives the Chinese some leverage. Right. Because if they wanted to make a ding into stocks, all they would have to say was that was not constructive.
Yes. No, it's a funny game of we have the cards, no, we have the cards. You know, that each side is suggesting that they have no urgency to move, the other one does. But that's right. And if we're just setting the terms for how we're going to talk and what's on the table. I know there was some hopeful reporting last week that maybe the Chinese are preparing some, you know, fentanyl control type package. You know, use that as the wedge to say we're going to do more here. Maybe we can ease things up. So again, I don't think it's a matter of a snap of the fingers and we're going to unwind it, but it could be, and that's the crazy part of this market.
Well, we've also, though, but when it comes to like positioning, for example, I mean, max bearishness is a while back now.
It is.
And, you know, there have been taking on more risk of late. So kind of where we are as opposed to where we were.
For sure.
Although long-short hedge funds are basically back to flat.
Hedge funds, it's kind of like a neutral. Yeah. They've kind of,
Order
they're
filled.
no longer leaning against the market.
Order submitted.
But if the volatility stays low and we keep going up from here, they might feel the instinct to chase, but not yet.
No. Obviously, as you point out, the key question, what do we end up with in terms of if there is a negotiation and where does it end up? How much pain is China taking, for example, versus what conceivably will be the pain felt here in the U.S. probably fairly soon, having just come from Milken and spoken to any number of different chief executives, both on and off the record, on camera and off. I mean, it is a matter of weeks here until things really become tested, they believe, at least when it comes to sort of certain parts of the economy. Guys, wanted to move on to Disney, of course. The company reported earnings this morning that are being well received by investors. You can see the stock touching 100. We'll see how it opens, but could be up as much as 8+%. That is largely on the back of better than expected numbers, sort of across the board. Perhaps something somewhat surprisingly, for example, the parks, cruises, experiences overall doing quite well. And there was also the addition of 1.4 million Disney Plus subscribers, taking that subscription service, direct-to-consumer subscription service, to 126 million subs, and making it even more profitable. Remember, we've talked for so many years now about direct-to-consumer, of course, and how much capital it consumes. But on the other side of it, if you can get to scale and your costs sort of stay the same, every incremental subscriber is incremental profitability. And investors are watching the ramp up in EBITDA there in particular and are quite encouraged by that ramp up in EBITDA, not to mention profitability, which was up sharply as well at direct-to-consumer operating income up to $336 million. But it can ramp like that, given that's what you want. It's a scale game. Netflix is one, right? Sure, but Disney is fighting for that number 2 position and seemingly doing a pretty good job of it right now.
Order filled. Order submitted.
Then we've got the announcement that we brought to you, of course, at the top of the hour at 8 o'clock on Squawk Box. Bob Iger, Josh Tomorrow joining me to discuss the plans, or not the plans, what will be the opening many years from now of a new Disney park in Abu Dhabi. It is completely being funded by their local partner. And so they will basically oversee the development, and it will be a royalty based revenue sharing approach, if you want, or based on the revenues. They didn't give any more details than that. We're talking probably 7 years until it sees the light of day. But Bob Iger, of course, as you might imagine, had a lot to say about what was behind it and what the expectations are. Take a listen.
This will be our 5th location outside the United States, and no two are the same in terms of the deal structure. The deals have all been tailored to the market, to the partners, to the available capital, and also timing-wise from a Disney perspective. So as you know, we announced some months ago a decision to turbocharge the business that Josh oversees. And by that we mean investing significant amount of capital across the world, really, but more importantly, we're going to invest roughly $30 billion in the United States to expand Orlando and California. And what this deal gives us the ability to do is to continue to invest the way we said we'd invest, particularly in the U.S., which will be obviously job accretive, while at the same time expanding our reach to a part of the world that we really have only reached superficially. We talk about Disney Affinity, but it's a long trip to get to one of those 6 other locations, and this will basically put a Disney theme park really right in the backyard, so to speak, of a whole new consumer base. But this deal made sense to us in part because the available capital, and it also allows us to continue to invest the way we talked about. And also we've structured it in a way that, and Josh described it, that not only will we have total say really in the design and development, or design and creative rather, but we'll have considerable oversight as well.
So interesting, guys, in the sense of, yeah, we're not putting capital up. That lets us spend more capital other places, but we're obviously expanding the Disney brand to a different part of the planet, so to speak, where we're going to be able to attract new people who are going to attach themselves to that brand.
Right, and it's not going to pull from the other regions, and it seems like it works on paper. And I think it also accentuates what sets Disney apart. One of the things that sets it apart from the other kind of legacy media brands, it's still kind of a growth brand. It has the physical theme park business. Yeah, I thought that the numbers for the latest quarter, among all the other things you mentioned, 6 months, first 6 months of the fiscal year, free cash flow is like $5.6 billion. Remember, a couple of years ago, when they sort of teased fiscal 2024, they would approach pre-pandemic free cash flow, which was like almost $10 billion. Didn't quite get there. It was like 8 and change. But now they're on pace for it.
Right.
So that tells you something. It's kind of this round trip. Now, it was 7 years ago, that pre-pandemic peak number. But it's very significant. And it's the reason the market, I think, views Disney as the obvious second to Netflix in this entire business, right? So Netflix is the one everyone needs to own. It's your primary service on streaming. It's 32 times cash flow, even cash.
Yes. Disney is far below
Disney's
that.
10-ish,
yes.
But then WBD and Paramount are 6 and 7. So that's the market saying who's got the better positioning.
This is going to be the best reaction to Disney earnings in about a year. I think to Q4 of last year. But it's flat over 10 years.
Oh,
and
sure.
it's flat over 5 years.
Yeah, 100 was a kind of a beacon for a while.
And to your
Absolutely.
point, the stock inhabited far higher territory prior to the pandemic in terms of the multiple it was getting to that free cash flow.
Much higher. It's at like 16 times earnings now, maybe a little higher with this pop. But
Order
so it's a
submitted.
reasonably valued stock, but it used to trade at a premium to the market, obviously.
Yeah. We're going to have a chance to obviously talk. I mean, listen, some of that may be wrapped up in the fact that they're still concerned about the overall economy, people's willingness and ability to spend in the parks, even though, of course, as we indicated, I mean, they had operating income $2.5 billion. That was up overall. Domestic parks and experiences up 13% in terms of operating income to $1.8 billion, guys. So still quite strong there. We're going to have a chance to talk about a bit more with Hugh Johnson, the company's CFO. The earnings conference call, actually, I believe, going on right now, and we'll get him once he comes off that call a bit later.
It's going to be interesting to see a lot of mixed signals in travel between Airbnb booking and Norwegian on the weak side.
Yeah.
Marriott a little more constructive. Win last night saying the trends are okay, but we're actually going to postpone some capital improvements to the Encore because of tariff costs.
Yeah, it seems right now the hardest hit or the areas of greatest pressure are just strictly inbound to U.S. from certain areas. Like if you look at other indications, and I guess corporate is a question for air travel in the second half of this year. But it seems as if, Marriott had a pretty strong reaction to its numbers. I think people are geared for worse, but not getting it yet.
Yeah. Meantime, still to come this morning, a change at the FDA that has taken a toll on shares of vaccine makers. Also ahead, AMD with a quarterly beat. We'll talk some chips, China, these U.S. restrictions, and AI with CEO Lisa Su in just a bit. Ton of names to get to. We'll dive into Uber, EA, Rivian, CrowdStrike, Scott News, SMCI, and Novo in just a moment.
At Morgan Stanley, old school hard work meets bold new thinking. Partnering to unlock new ideas, to create new legacies, to transform a company, industry, economy, generation. Because grit and vision, working in lockstep, puts you on the path to your full potential. Old school grit, new world ideas. Morgan Stanley.
When you partner with CDW, something amazing happens. Cloud transforms the way you work and learn. Security protects critical data and stays ahead of threats. AI finds new opportunities and more sustainable strategies. CDW designs and builds custom services and solutions so you get more
Order
out of your
filled.
technology.
Order
Make
submitted.
amazing happen. CDW.
Order filled.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
With the president pressuring the Fed to cut rates and the outlook uncertain, how will the Fed balance the threat of lower growth and higher unemployment? Fed Chair Powell's message to investors. Power Lunch, today 2 Eastern, and streaming on CNBC Plus.
Welcome to CNBC Plus. Where to?
CNBC Plus, on-the-go access to global market data, news, and analysis as it happens. Start streaming at cnbc.com/plus.
Dear Texas, at HEB, we partner with farmers around the world to bring you Cafe Au Lait, made from 100% Arabica beans. And from the world's finest coffee beans, we create blends in over 40 different flavors that Texans love. From whole and ground beans to single-serve cups, iced coffee, and cold brew. No matter how you drink your coffee, every time you take a sip, you'll know it was grown just for you. Cafe Au Lait, sourced around the world, brought to Texas with love from HEB.
The Golden State Warriors on top of the NBA world.
The Denver Nuggets can finally call themselves NBA champions. Banner number 18, the Celtics are NBA champions.
ABC, home of the NBA Finals.
Shares of vaccine makers, including Moderna, trying to rebound after taking a hit yesterday. That decline was a reaction to the FDA announcing its name Dr. Vinay Prasad as its new vaccine chief. He's an oncologist who has been an outspoken critic of the agency and COVID mandates. He replaces Peter Marks, who led that division for 13 years and actually helped shape what we now call Operation Warp Speed, which brought us a lot of those deliverables during the pandemic.
Without a doubt, and was in part pushed out as a result of that. This is not just about vaccines, though. This is also about oncology. It's about cancer drugs as well. Kind of simply put, Dr. Prasad has sort of believed that it's way too easy to get cancer drugs approved. That, at least, is what those who've been following him closely are telling me. I've not spoken to the man myself. He's been critical of the FDA, as Carl just indicated as well. But the idea that we've been way too lenient in terms of cancer drug approvals, well, if that is the case and he's the man in charge, then you might imagine that it will be a more difficult road that the biotech companies that develop many of these therapies will face. And of course, if that is the case, Mike, then their own funding may dry up. Remember, in many ways, the way it works is you get sort of venture capitalists deciding on any number of different areas of the world that they want to invest in. Biotech is one of them because it can sometimes result in massive returns. If that money dries up, those biotech companies don't get funded. They don't necessarily do the necessary research or some of the get the early data that they need. Then they get sold to big pharma. That's the way it typically works, which then takes the drug through perhaps phase 3, or maybe they've already gotten phase 3 and into marketing and everything else. So this could be a real problem, hence why you might saw the reaction you did.
Sure. I mean, there's like many hundreds of biotech companies. The Russell 2000 is packed with early stage biotech companies. And the other piece of it is, and this used to be a very steady and strong group in the market. Look at the life science tools and research products to companies like Thermo Fisher and Agilent on a year-to-date basis. Now, a lot of that was also just because of the general pullback in funding. You know, obviously all these labs being shut down. And so that's just a year-to-date. These used to be really kind of sort of bulletproof blue chip type name. So it is complicating this idea that, oh, healthcare is defensive and maybe it's going to work in this environment. So, yeah, a lot of things getting scrambled.
Nothing compared to Sarepta yesterday.
Yeah, wow.
And Prasad's been specifically critical of Sarepta's therapy for, say, muscular dystrophy.
Yeah.
Lost a quarter of its value yesterday.
Yeah, exactly. I mean, there's any number of these, single disease, relatively narrow market, real binary situations for these stocks. And obviously, this has been a really volatile one, but one that had a lot of hopes attached to it for many years now.
If you also come down on the pharma side, perhaps as well, or limit their ability to profit from drugs, conceivably the price that they're willing to even pay for biotech companies in which they can buy those new drugs goes down as well, because the life cycle of the drug itself, perhaps, and its profitability over time may not be quite as much. So there are a lot of challenges right now.
To say nothing of people not potentially having cures for diseases, right?
There's that as well, yes. I think there are many cancer patients who would certainly look at this and not be particularly pleased.
Yeah.
We'll get to some more movers this morning, including Uber. Pretty interesting guidance regarding deliveries and bookings. Stock's been on the move. Dara Khosrowshahi was on Squawk Box earlier this morning. Pre-market holding on to gains, although off of early morning highs. More Squawk on the Streets back in just a minute.
Sarah Benzino, Brandon Coley, Jablonski Auto Body, LLC.
What'd she call Harper?
Oh, you mean Jablonski Auto Body, LLC.
We actually sold the twins naming rights.
You know, like stadiums do. Kids are so expensive these days. Here he comes.
Oasis Breeze Tan and Spa.
If you need a tan, I'm your man. Could do business with you.
Or we can look at some investment options for you.
Works for us.
The right money moves aren't as absurd as you think.
It's not about dreams. It's about making them possible. It's investments. It's growth. It's confident access to capital. It's building up business. It's job creation. It's the stadium, the hospital, the new school gymnasium, the factories, the farmers, our first responders. It's making the future. It's our story, our country. For over 100 years, Moody's has brought clarity to capital markets so that economies can grow with confidence. Moody's makes it possible.
Good morning with Vocalax. Good morning.
Yeah. Oh, yeah, I do have, yeah. I have one kind of long at 85.
Making your good morning even better with Vocalax.
But,
weight loss for so long.
I felt stuck. But Zepbound means change. Zepbound is for adults
I was long at 92 earlier, and that helped though.
Keep it off.
It's changing what I believe is possible when it comes to weight loss.
15 minutes looks like it's going to go down
weight I
more,
lose.
so.
Up to 48 pounds. And some lost over 58 pounds.
Don't take if allergic to it, or if you or someone in your family had medullary thyroid cancer or multiple endocrine
Desktop audio. There we
Tell
go.
your doctor if you get a lump or swelling in your neck. Stop Zepbound and call your doctor if you have severe stomach pain or a serious allergic reaction. Severe side effects may include inflamed pancreas or gallbladder problems. Tell your doctor if you experience vision changes, depression, or suicidal thoughts before scheduled procedures with anesthesia. If you're nursing, pregnant,
Hey, Cat Daddy, can you hear me?
birth control pills. Taking Zepbound with a sulfonylurea or insulin may
Hello?
cause low blood sugar. Side effects include nausea, diarrhea, and vomiting, which can cause dehydration and worsen kidney problems. Zepbound needs change. Ask your doctor about Zepbound.
What was about understanding what just happened in the markets that day and preparing for tomorrow. I'm looking to talk to sophisticated investors, beginning investors. I'm always looking.
Closing bell overtime, weekdays 4 Eastern, and streaming on CNBC+.
These back above the 50-day, looks to crack 100 this morning on this earnings beat, but also forecasts a $1.5 billion revenue hit from these U.S. curbs on China chip exports. Shortly after the bell, we will be joined by Lisa Su, the CEO. Don't go anywhere.
News. Disney, Novo Nordisk, Warner Brothers.
Are you gonna YOLO anything for after next year?
Strategies for your portfolio. This week on CNBC and streaming on CNBC+.
Yeah.
Gina Costa, looking simply stunning. What's this? She's
I'm
opening
trying to pass that
Fidelity
G Trader
app to buy
5.
back stock. with no fees or commissions. Because what does Gina got? Gina's got the look.
Just
It
do.
never gets old.
Talk about easier investing. There's a reason Chevy is
Oh, the time I tried to file everything. Total is 8. 4 long, 4 shorts. Yeah.
Like the people who keep this country moving. For them, only America's most
I had this trader flags before my trip, so I gotta hurry up and use it before we go.
Dependability comes standard.
Now, well-qualified buyers can get 0.9%
So
financing
dumb.
for 60 months on this Silverado. That's over $6,600 in average finance savings. Chevrolet.
Yeah, we should have long it out on there. I think I'm gonna set it in.
Order submitted.
Oh shit! Apex just but they gave me some freebies. Sweet. 5 any size they want. Oh shit, my 900 hit. 906.
Order submitted.
Hell yeah. Morning. I got some Apex now.
Order canceled.
They gave me some freebies. I gotta tell them thank you first. Let me how do I post? I gotta post this on Twitter too. I gotta change the.
What GoDaddy Hero does with its magical AI power. It not only creates it, it slaps that sweet thing everywhere. Here, there, all over the dang place. Well, that logo was sexy with those salmon seersucker suit on a summer sun.
Let's go.
Look like you know what you're doing at GoDaddy.com.
You wanna trade some? You wanna trade some Apex?
Anticipate the needs of future generations. To build strong portfolios that deliver lasting legacies. To innovate and adapt.
You want a YOLO?
After 125 years,
I should give this. That one is free. I need to give it out before the thing comes out.
Invest like the future is watching.
Yeah. They have Tradeovate on Apex too, so.
Uber shares under some pressure in the pre-market. Quarterly revenue was up
I gotta
14%,
post this first. Give me a
but still
second.
below consensus. Meantime, Q1 earnings and bookings guidance both above consensus. This is what Dara Khosrowshahi had to say about pricing earlier on Squawk Box.
It's up a lot since last night.
Increases. We passed that on to the consumer as it relates to our mobility business. And we did see a slight mix shift in terms of trips to more international trips, especially as we saw outbound travel to the U.S. slow down a bit compared to the overall travel sector internationally as well. So
I don't think I'm gonna long it anymore.
and actually we're happy
Doesn't
to
look
pass
good.
on some
Yeah,
of the
it's
pricing
kind of
relief we
staying.
saw to our consumers.
Interesting comments about the Waymo partnership in Austin.
Yes.
These cars are busy.
Pretty excited about, yeah, that was fascinating that just the capacity utilization of the Waymo cars way in excess of the driver cars. And, you know, the market has seized on a lot of that excitement. This has been a very strong stock. It's basically trading at a high of 40% coming in. There's some commentary that maybe the buy side is looking for even a little bit more on bookings guidance. So it didn't necessarily, you know, kind of run the table versus expectations. But, you know, he also mentioned like no real outright consumer stress that they're seeing at this point. So to me, I think it's just kind of a little bit of a sell the news, and it's trading rich again. You know, it's 30 plus times earnings, and you're going to be sensitive to this idea that you can have some bumps in terms of domestic growth or travel related growth. At the same time, nobody quite knows what the transition long term is going to be, you know, in terms of the economics of the business as it maybe goes.
Yeah, a little
I
bit.
think it's much more about it's been a really strong stock, and you know, it didn't necessarily light up the board.
5 years after COVID, we're still asking Dara about return to office.
The market's gonna open on
Sort of the rainbow of policies that different corporates have. Take a listen to what Dara said.
We want people, again, in the office. We want them working hard. The company, our company is executing really well, but we need to be at the top of our game, and that means people working together in the office. The good news is, you know, the economy's still really strong. The job market is strong, and people who work at Uber, like, they have lots of opportunities everywhere. We want them obviously to take the opportunity with us, to take the opportunity to learn. But this is a company where you have to work hard. We're not going to make excuses for that, and you have to work hard together.
We always like to say we've been coming in for 5 days.
Pump it up.
I still noticed today in the subway things were more crowded. Wednesdays, yes, they're coming in more often, but not 5 days.
3 minute doesn't look good. There you go. It's gonna do it.
It's strong enough land somewhere. It's not as strong as it was. And so that might be a little part of it, too. Let's get the opening bell here in the CNBC Real-Time Exchange. The big board. Right into Novo, which did have a sales miss, and they do cut the full year sales guide, but they kind of tried to reassure the street that compounding is not going to be the headwind that it's been already. It's fascinating because you have stocks that trade on both sides of that idea of whether compounders are going to really take off or not. It's the only thing that seems to matter is sort of like we've enlarged the market enough. Who's going to serve it? So yeah, a little bit of a relief trade on Novo off of that, and Hims has obviously been kind of like whipped around on every iteration of one of these things, and that's almost the exception to all the rules in terms of what we were talking about with other pharma and other biotech, which is those drugs are not suspect in the streets now because it's just runaway demand. Yeah, Wegovy, even with the compounding effect, Wegovy up 83 year on year. Would you have expected more of a bounce on the Switzerland stuff? Not really. I think it's Fed Day. It gets a little bit complicated. I think there was a little bit right after the initial burst of futures got a little excited about it. Plus, also, by the way, more stimulus moves in China. Yes, the domestic economy. Cut some rates and reserve requirements. So, I think it's more about, we're staying supported here at this level where, again, the premise is we get some kind of progress. If it's just a meeting in Switzerland to show that you had a meeting and to mutually agree that 145% is not sustainable, we'll see. This, I guess, there's room for surprise, but it also has to be taken against what the president said yesterday, which is maybe there won't be deals, or maybe we'll just dictate terms and they'll have to take it or leave it. So it seems silly that we have multi-trillion-dollar moves in incremental value of the stock market based on each headline and each nuance, but it is the most material incremental swing factor that all the traders are going to seize on, on their given day. I mean, every day it's a new basket of corporate news related to tariffs. We mentioned Wynn and the CapEx delay. Marvell postpones their investor day. Right. Ford today, cars made in Mexico will be raised in price. This is Reuters by as much as $2,000 as of May 2 at the dealer notice. Mattel earlier in the week raising price as well. And the market has been attempting to punish those right in the direct path of tariffs where you have a pretty clear and obvious effect, and then try to exempt everything else. And to me, the question, big picture for the market is, earnings have come through fine. Second half earnings growth has been downgraded to a degree, but still at a healthy level. How much conviction do we have in that? Do we have evidence that's going to have to come down more? And on top of that, do we have a way to get back to 23 times forward earnings, which is where the market traded basically at the peak, when we thought it was going to be no landing, the Fed was going to help. We still have an AI boom, and we're not really worried too much about tariffs. So I think that's a tall order, and that's what it would mean to get the S&P back toward the old highs.
That said, I mean, we're not getting any real commentary, certainly after hearing from all the hyperscalers, that indicates a slowdown in real spending in terms of the data center or AI.
Nope.
There may be a different perspective on that trade, so to speak. I mean, I would even reference my conversation on Monday with Jonathan Gray, of course, president of Blackstone, given they are the largest owner of data centers in the country, and he as well said there's no let-up. And even when you see a Microsoft possibly, and again, not in the numbers, but in terms of their approach, perhaps pulling back, and you've got an OpenAI that literally is just has an endless desire for compute capacity.
Right. So I think that does mean the numbers are safe for this year.
but I don't think the market is ever going to give them as long a leash as we had in the real excitement of this is open-ended growth. We're never going to have enough power. You know, every aspect of it was firing. So I think that's the question. This is why NVIDIA, despite all the growth that is in the pipeline right now, this year and next year, it's going to have $250 billion in revenue next year. And the market, it's been dead money for almost a year. It's not, right? Because it's just trying to, you know, digest that massive move and figure out what the long-term
path is. And the ramp is it's going to slow. Of course, yes. And of course, so you have to discount that. And so you're looking at 28, like what? Yeah, to your point. What really is a worthwhile multiple based on at least that expected slowdown? It is interesting to point out NVIDIA's been dead money for like years.
Yeah, June of last year is kind of when we got to these levels, and you know,
it sucks.
So you know,
and then you got Supermicro cutting its outlook once again for the full year, warning of what they're calling some delayed customer platform decisions.
I want a long scare.
Yeah. Obviously, the penalty box name
Orders
for
submitted.
a while. It was always a question in terms of exactly how much was worth paying for in a multiple for the, you know,
I'm on at 72.
And
5
points
points.
that they deliver, but that definitely is getting dinged.
That's not. I'm just playing a little bounce on a.
It seemed like it was
on a 1
taking a
second.
little bit back.
Meantime, AMD, as we said earlier, topping estimates driven by data center revenue up 57 year-on-year, also providing a pretty strong forecast for the current
I just hate shorting near low day. You know what I mean?
lost revenue through the end of the fiscal year as the U.S. limits the export of the company's AI chips. Joining us this morning in a CNBC exclusive is AMD CEO Lisa Su. Lisa, we were just talking about when was the last time you joined us when Kramer wasn't here. Our apologies, but it's great to have you.
It's wonderful to be here with you. Good morning, guys.
We mentioned this number that you put on the restriction effect. How do you get to the number, and how do you think that, what's the trajectory of that figure as we go forward?
Well, Carl, let me start with first, you know, we reported a great first quarter. I think we saw strength in across all of our businesses. We saw strength in our client and gaming segments. We saw strength overall in our data center segment. And I think that just goes to, you know, the foundation of our business, which is, you know, really on high performance computing. Now, to your question, as it relates to some of the China export controls that came out earlier in April, I would say that, you know, it is a headwind in our business. We said it was a $700 million reduction in revenue for the second quarter and $1.5 billion for the full year. But even within that backdrop, what we see is an environment which is very, very favorable to our product cycles and all of the great technology that we have coming out in 2025. So we still see the opportunity to grow strong double digits in 2025. And, you know, that is really on the strength of the overall portfolio that we have.
Yeah, a lot of the bullish notes today take note of new chips, right, that will be debuting relatively soon, going to impact favorably the second half. And then this notion, Lisa, I'm not sure how comfortable you are addressing it, of Intel as a shared donor.
Well, you know, let me take, you know, both aspects of it. First, you know, let's start with, you know, what we're doing. We are really about, you know, having, you know, very strong product roadmaps out there. We've always said that for, you know, all of the years that we've been talking. It's about having, you know, a great product portfolio that really plays to what customers need right now. So we see excitement in our data center portfolio. You know, today our EPYC processors, our server CPUs are, you know, all over, you know, every major cloud provider is using our server CPUs. We have tremendous opportunities and growth in the enterprise market where you see many of the Forbes 2000 companies also selecting AMD. And I think that's because, you know, we've shown them year over year that we continue to give them significant total cost of ownership to make it more efficient for them to get their job done. We're also very excited about the AI opportunity. I think, you know, AI, I heard you guys talking about it as I was coming on. I absolutely believe we're still in the very early innings of AI when we think about the opportunity. And yes, there are some, you know, puts and takes and bumps in the road, but overall, we're still at the place where, you know, enterprises are just beginning to feel what AI can do for them. And then also the PC market is a market that has done extremely well for us and is a place where, you know, again, you know, people are upgrading their PCs. They want to upgrade to the best technology that has, you know, great performance as well as great efficiency. And, you know, that's what we have in our roadmap.
Lisa, you can't get away from the questions about tariffs, I'm afraid. I know on the call there were quite a few, and I'm going to go there as well because it is a key part here. I mean, do you have any expectations as to whether there will be sectoral tariffs or what they might be? And I'd also be interested to know whether you expect there was some pull forward in terms of demand as a result of fear of potential tariffs.
Sure, David. So, look, I think we're all watching the regulatory environment, very, very carefully. As it relates to sectoral tariffs, we're in active conversations with the administration as they're thinking about both the short-term as well as the long-term policy. The long-term policy arc is we want more U.S. manufacturing. We want more manufacturing here in the United States, and we are actively moving a bunch of our manufacturing here, but we realize it's going to take some time, and I think that's the balance that has to come in play with sectoral tariffs, and we'll have to see how that comes forward. Now, to your question about the strength in our business relative to tariff pull forwards, I believe that again, every customer and every industry is looking at this slightly differently. From our standpoint, our strength is actually very much focused on the strength of our product portfolio. I think the relative tariff impact was small, whereas the opportunity for us has been just end user demand for our products. But we're going to continue to watch this very carefully. And the beauty of the business, David, is we've learned to become very agile through all of the things that have happened in the semiconductor supply chain, and we're going to continue to watch all of these
your drug's gonna kick in soon, man. You're gonna start
gambling
gambling.
going forward.
Yeah, you mentioned being agile as well on the call and said
So
you have a
Gambit?
good overall inventory position. I guess my follow-up would be, what does it mean to be very agile? What
Got
does
them
that
Apex
actually mean?
giveaway.
It means we have a great balance sheet. It means that we have great
Yeah, it's gonna be on the stream now.
I think we plan for success, so we make sure that
That's a good
we are
pump.
planning for a market that is, robust to our products. But we will certainly adjust as needed if we see the macro weakening. Now, I have to say, for customer ordering patterns today, we're already, let's call it a month into the second quarter. The month of April was actually quite robust. So it gives us confidence that, people aren't making very short-term decisions right now. I think they're all wanting to ensure that we watch the environment, but recognize that, we've been through many of these types of situations before, and we're able to adjust the supply chains and our inventory levels as needed as we see how the macro does over the next couple of quarters.
Yeah, well, we talked to so many CEOs here, and I've just been to the conference with many of them. Certainty keeps coming up. I'm sure you want it as well. So on the sectoral tariffs and on the certainty, at least, that you hope is out there at some point, so you know how to
It looks
run
like
your
it's gonna
business
go
the
up
way you
more.
want to. Any timeline, any expectation on your part as to when and if that will come?
There's no question that we would prefer a more certain environment, but there's also belief that we're not just managing what happens month to month. I mean, our roadmaps are multi-year roadmaps, and we must invest, and we're continuing to invest. And the best way, from a certainty standpoint, is for us to stay, very, very tied in through our industry associations, like the Semiconductor Industry Association, as well as significant conversations with this administration to ensure that we stay in lockstep with what their priorities are.
So we've had some high-profile guests on our air this week talking about AI and warning us of sort of black swan, adverse scenarios, security concerns, the possibility of humanity getting wiped out. How do you roll all of that into your customer pitches, your internal discussions, and the way you speak publicly?
Well, Carl, what I like to say and what I truly believe is that AI is the most important technology that we've experienced over the last 50 years. I mean, I think it's that transformational. I think these black swan events are on the unlikely side. There's no question that as an industry we have to have safeguards. There's no question that there's work to do in those areas. But we can't underestimate the power of this technology. And the way I look at it is it affects every enterprise, every research institution, every person in terms of how we can utilize technology to really make our lives more efficient, more capable, and eventually more productive. So from my standpoint, I always believe that this is a long technology arc that we're on. It's not a short technology arc. And we're still in the very early innings of AI, and we need to continue to work and make sure that we get the full benefit of the technology.
But to the degree that we're looking for a stair-step function, right, by ability, would you say that happened? Is that a 25 sort of narrative, or is it more about 20? Is there a year that
I haven't said anything yet. Can you hear me now, Kel?
I would say I think it's hitting us every year, Carl. And I mean, I think all of us can see how AI has impacted our lives even today. But yes, I think we're going to see, more as, these models get better, as they get more deployed into more applications. I think we're going to see more benefits. I think for enterprises, I can tell you just within AMD, we are using AI actively across our enterprise. We're ramping that up further. And so I think each year we're going to see continued usage of the technology. And it'll be at a point where you're not even thinking, is it AI or is it not AI? You're going to think that my computing
We missed out. It's too late now.
much more capable, for me.
Oh, yeah,
And that's a great thing.
Lisa, how do you think about the premise and the intent of the restrictions on sale of certain products to China on the basis of trying to withhold, the latest capabilities from that country? I mean, there's been this big debate out there of saying, look, they're creating domestic competitors. You're kind of excluding certain U.S. producers from those markets, and maybe it's not even achieving what was necessary. On the other hand, staying 6 or 12 months ahead of the Chinese capabilities also seems like it might be worthwhile.
How long just hit? 907. Putting 914 to get out.
Ensure that our technology is being used to really advance U.S. national security interests and all that stuff.
There you go. I'm out.
China is a large market, and there's a balance to be played between sort of restricting certain chips and enabling sort of the larger access to the market, which I agree that
I'm
there's a
Tradify?
large opportunity there. So my view is it's important. Probably the most important thing.
Oh yeah, that's fine.
That,
It's
the U.S.
it's average 15 seconds, so just 1 or 2 trades. They're not gonna care.
We want as many countries as possible to adopt our AI technology, and I think that's one of the things that we feel very strongly about. And then there's a balance between export controls for national security as well as ensuring that we get the
don't do the MNQ. Do the MGC because it's slow moving, so you won't lose anything. You know what I mean?
But look forward to having you on next time.
It's really slow, so 30 minutes won't move much after hours.
Guys, worth taking another look at shares of Disney. Of course, we mentioned the top of the hour, but they are up over 10%.
Wait, which one? MFU? Am I funded?
Earnings that were well above expectations and sort of across the board. Mike as well mentioned free cash flow generation at the company. That also came in well ahead of what estimates were from the analyst community. That said, there's also probably a bit of a bump as well on that big announcement that we shared with you at 8 a.m. Eastern this morning, namely plans for a new park.
Order submitted.
Theme park, Disney Park in Abu Dhabi would be the 7th park for the company. No capital being expended by Disney to build it. Its partner in Abu Dhabi, Miral, will be actually doing all of the building and spending all the money, but Disney will have a royalties agreement and will be in charge of all the creative, essentially, of the various attractions and overseeing it. But certainly a positive reaction. Again, what was, whether it was parks where there certainly was going to be some worry of a slowdown on the consumer, or direct to consumer where they're showing real growth in both subscribers, but even more importantly in underlying operating income.
Company thinks they have a pretty decent, studio slate. Market doesn't always pay up for that in advance. If I'm a little bit surprised about one thing, it's actually that Netflix isn't down, because it seemed to me like all the energy and focus was in crowding into Netflix as the only stock you can own in the group, and it's up slightly, still near its highs, up 40 basis points.
Definitely leading the Dow, by far the best performing Dow component at the moment, as we said. One of the best earnings reactions of the year. As we go to break, watch bonds. Of course, haven't talked a lot of
got 200 out of it.
big expectations for a move.
Whoa, what was that? What the fuck? What was the news? Holy shit.
Stay with us.
Yeah, I'm long somehow. Oh man. Damn.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
Damn, that was going on. Stop. Holy cow.
You definitely do it.
Yeah, everything's like frozen.
So why not with your stock market
What the
investments?
hell? I don't see anything on TV.
Opportunities you may be missing. And Henry and Walsh
Was the data? No, no data.
to schedule your free second opinion. So what's there to lose? Speak to Henry and Walsh.
Dang,
It's
down
second opinion
120.
people. Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment. Call Coventry Direct to learn more.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
Our friends sold their policy to help pay their medical bills. And that got me thinking. Maybe selling our policy could help with our retirement.
Come on, go back up. I just want to get out now.
So I did some research and called Coventry Direct. They explained
Yeah,
life
I just want
insurance
to
is a
get out.
valuable asset
Stay
that can be
out.
sold.
We could sell all of our policy or keep
That 907.
We sold our policy.
Yeah.
Now we can
Going down to
relax and enjoy our retirement as
860.
we had planned.
If you have 100
No, I took that profit. I went back in.
qualified to sell your policy. Don't cancel and let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies. Or call 1-800-514-7800. Coventry Direct, redefining insurance. For plant-based, healthy blood pressure support.
Bot? Let me see. I think bot's still short, yeah. Bot's been short since 2021.
And cardiologist recommended B brand for heart health support.
That's from last night, 9 o'clock. So I made like 300-400 points
That's why
already.
I trust QNO Ultra High Absorption Turmeric to support my joint health. It's the #1 doctor recommended form of turmeric. It helps you keep doing the things you love at every age. QNO, brand I trust.
New projects means new project managers. You need to hire. Indeed, you do. When you sponsor a job on Indeed, it's easier for talented candidates to find
Trying to
it,
go back
which
up.
makes it easier for you to hire them. Visit Indeed.com/hire.
I guess I'm not the easiest person to please. I like things just right. That's why I love Redfin's home recommendations. They know what I want even before I do. A home that's just right.
Yeah. Yeah.
CNBC Pro. All new investing tools securely linked to your brokerage accounts. Become a smarter investor with the power of CNBC Pro. Go to CNBC.com/getpro now. Not a bad day for some of the heavy industrials. Rockwell Automation up almost 12% as they raise their guidance, regardless of the uncertainty the tariffs have brought to the economy. Meantime, Honeywell, another big down name, gets an upgrade over at B of A as they move to bond. We'll watch that closely with the overall blue chips up 172. Be right back.
Mental health challenge requires bipartisan solutions.
And that's why we're partnering with a coalition to empower our
What was it? Oh, it's a wow.
That should all be considered.
Economic hardships, social isolation, overuse of devices, fear of violence, and bullying.
They ain't talking about it on TV.
The complicated challenge needs a comprehensive
Check
solution.
that, Daddy.
May is Mental Health Awareness Month.
What's
Let's
up?
convene a conversation about empowering parents to keep their kids safe.
Looks like we're going back up. Let me get out.
Order canceled.
709.
Order submitted. Order
Yay, I'm out. Fuck this market.
Introducing AG1 next.
We're good. Everything's green.
The daily
For now.
entry backed by
Order canceled.
rigorously designed clinical trials. Next
I'm gonna do my 885 for long.
Order submitted.
Over 10 times. And to close common nutrient gaps. It's one drink for whole body health. The next generation of AG1.
Yeah, you shouldn't. Well, you have to tradeify, right?
Custom SMEs with our Canvas platform.
YOLO Apex.
And help investors keep more of what they earn.
Well, you have 2 Apex, right? Just YOLO it.
Your trusted partner.
Order filled.
Ahead. Swap Box Friday, especially
Yeah.
Order submitted.
CNBC investigates how criminal gangs are attacking America's supply chain.
Well, you need 2. You need 2 for YOLO.
Box Friday, 6 a.m. Eastern, streaming on CNBC Plus.
Order submitted.
Texas. At ATB, we partner with farmers
around the world to bring you cafe au lait.
I'm just going in and out real quick. Get some 5 to 10
And
points.
from the world's finest coffee beans, we create blends in over 40 different flavors that Texans love.
What's up, bud?
Ground beans to single serve cups, iced coffee, and cold brew. No matter how you drink your coffee, every time you take a sip, you'll know it was grown just for you. Cafe au lait, sourced around the world, brought to Texas with love from HEB.
Steve, you always buy books, but I never see you reading. Paperweights.
Hey, do you mind getting this? Because I only have euros.
My pleasure, because I earn unlimited 2% cash back.
We split that.
No.
Unlimited 2% cash back. The Wells Fargo Active Cash Credit Card.
So how you end up trading 5 NQ on your tick? Yeah, crackhead.
A lot of news in EV today. We got more sales numbers on Tesla-made EVs in China, down 6 in April, despite some wildly higher numbers for BYD. And then we got Lucid and Rivian to look at as well.
Both stocks trading up. You know, it's one of those, like, you know, you have to have a real kind of theory of the case, size of the market, how much they can incrementally get. But they got funding, you know, is pretty solid in both cases. And, you know,
Red,
it's moving in the
super
right
red.
direction. Although, if you look at those longer-term charts, 4-year chart or something like that, they're down 85, 90% from the crazy days.
Remember when Rivian was $100 billion market value? To put that in perspective, it's now
15 or so,
They do guide below the midpoint on deliveries for the year, but above, they expect a narrower than expected EBIT loss for the year.
Now
So
we're
the
back
guidance
up
was
where we
based on
were earlier
some
before
noise
the dump.
around the EV credits, you know, the budget getting through Washington. We'll see. Yeah.
The Tesla numbers in
Had a good night last night. Nothing to do now. What's up?
Just waiting because they're anticipating the new revamped Model Y.
Yes.
But in April, you had Spain down 36 and Denmark down 67, and even with that new Y shipping,
There's a lot of EV models to choose from in Europe. I mean, that's the thing I think maybe people don't recognize as much. It's just pretty much, you know, it's not like here where, you know, Tesla was synonymous with an EV sedan for a long period of time. So we'll see. Yeah, Tesla's still down like 40% from the size.
yeah, one not
What up?
kind of a standalone within the Mag 7.
Yeah, you almost wonder if Mag 7 is. We gotta edit that a little bit because you know, you got Berkshire is much bigger than it, and of course even Broadcom.
Yes. Early session highs
You
here,
a bag
then,
holding?
S&P 5630. Mike, thanks for joining us. Disney CFO Hugh
Oh,
Johnston
thanks.
is up next on everything from the company's quarterly beat to this new plan for a theme park and resort in Abu Dhabi when we return.
Nice. Yeah, I got out too early.
Sir, seems that the gladiators get a lot of positive social sentiment.
I don't think we're gonna hit 20,000 before FOMC. Yeah.
Catches up with everyone. Even
Was it Ninja Trader?
I trust QNO Ultra High Absorption
Project
Turmeric
X?
to support
Oh.
my joint health. It's the #1 doctor recommended form of turmeric. It helps you keep doing
Nice.
the things you love at every age. QNO, the brand of trust. As a
It's not Top
contractor,
Step, right?
sometimes the most impactful thing you
Okay.
can say is what you do on your own home.
Yeah, someone got denied on the payout because of that shit.
There was only one
From
choice
Top
for
Step.
protecting around the new pool. We use TimberTech because of the low maintenance on
Yeah,
the
I forgot who. Someone told me.
and just enjoy
Yeah, I
it.
ran through and he got out green. And they let him trade for like 4, 5 more days, and he requested a payout and it says denied because of that. They said, oh, your account's supposed to be gone doing that, whatever, slippage.
Goldilocks needs a place of her own, and fast.
Yeah,
They
it's
listings
kind of
on
BS.
Redfin. They update their listings every 2 minutes. And with so many options, she's bound to find exactly what she wants.
This one's just right.
Yeah, yeah.
Oh, it's happening. It is happening.
Guys,
This is the start of a cyber attack. I haven't seen
You can't blame him. You blame Project X, you know?
This is the chaos it causes. But what if you could rewind to before the attack? Commvault recovers not just your data, but your business 10 times faster. Like it never happened. It's the
Right.
fastest, most complete recovery anywhere. So you can be a continuous.
Hi, crackhead.
University of Maryland Global Campus believes in its students. You can get credit for life and job experience that
You long?
translates to
Where at?
coursework and helps cut down the cost of school. The UMGC helped me become a highly attractive
Yeah.
candidate in the job market.
3 minutes. It might go up more, but it's been hard for NQ at 9:40, 9:45. Keeps going back down. Yeah. I'm just gonna wait for the dip. I think block went long. Oh, that's an ES. Don't follow it. Don't follow it. Several dollars. We got some Apex giveaway, man. They came through. Yeah, Apex. Yep. Yeah, I still love Apex.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber here at Post 9 of the New York Stock Exchange alongside Sarah.
Really? It's a lot better now this year. A lot better. No, I can't hear you. Say something. Move on.
S&P back to 5630 or so as the bulls take heart on news that the Treasury Secretary is going to Geneva for some early talks with the Chinese. It is Fed Day, 10 years south of 4.3. VIX pretty steady at 24.
Yeah, you do.
Yes, de-escalation continues, and that provides hope. We are 30 minutes here into the trading session.
Are you done trading, Gambit?
Disney is a top gainer in the Dow and S&P, beating on the top and bottom lines, raising guidance, and announcing plans for a new park.
You're not touching the Tradify, right?
Much more on the expansion plan. Disney CFO Hugh Johnston will
don't
join us
touch
to
it
break
yet.
down the latest earnings
Monday would be
and
good.
outlook this hour. Uber missing revenue expectations despite trips being up 18% from last year.
Get on YouTube. We have a Apex giveaway soon.
Earlier this morning, growth remains, quote, very healthy. And then Novo Nordisk gaining despite weaker
Not
numbers.
yet.
Sales coming in
Later
lower
on.
than
You just gotta
expected.
type your
The company
Twitter.
cutting forecasts. But that said, executives do
Twitter
expect
handle.
sales of its blockbuster weight loss drug Wegovy.
I'm still waiting on
in the second
TPT
half. The
to
stock has also been
hopefully
under a
give
lot
me
of
some
pressure
giveaways
into
I can
these
use next
results.
week.
But guys, it is Fed Day, so we're talking about the
Yeah,
economy.
must be
Nobody
auto
expects the
sponsor,
Fed to
guys.
do
That's
anything.
pretty
The
good.
question is, what Fed Chair Jay Powell will say. Will he be dovish? Will
You're
he
not?
be hawkish?
You were doing
Will
really
he just
good.
remain wait and see? You can make an argument for all of those cases. Since I'm here in LA today, I just got some sort of local data that I thought was interesting as far as how the tariffs are starting to impact the two busiest ports in our nation. That's Port of
That's
LA
good. So
and
why
Port
he
of
said
Long
no?
Beach right here. So in the week of May 4th, guys, 44% drop
Wait, hold on.
in
Not
that's
5 to make 2?
last year. So they're starting to bite. That means
Oh, that's not good. I thought you said you made 2 like profit. 2K.
from China and potentially other parts of the world into the United States.
Oh, okay. Dang, you spent that much?
Peak when all the retailers are gearing up for the holiday inventories and holiday stocking holiday shelves and
Yeah, I haven't blown any accounts in like a long time.
from last year. But overall, you know, the
Stop
question
trading
is,
after hours. That's why.
which is a bigger
Most of your
problem?
shit's after
For
hours.
the Fed, for the markets, is it inflation or is it a drop in economic activity? We were there at the Milken conference here in LA.
Look what I have to ask. It's still MIA. Vince, fine. He's just checking out for now. We'll come back later. Ads, I don't know.
There seems to be little doubt that tariffs
No, he's in Brazil,
if
so
they're substantial,
either his
will
trading was dead.
increase prices, tougher times for
Oh,
consumers,
Ben, yeah. Ben's taking a break. He'll come
or
back.
possibly leading to a recession, and those
Yeah.
problems will arise in the short term. So I don't. It's hard for me to believe
Who?
that everything is just as good as it
Google?
was.
Google guy?
Let's say 6
Robin
weeks
Hood,
or
yeah.
3 months ago.
And response to a question about the equity market, which is fully recovered from the so-called Liberation Day losses. Howard Marks seems pretty skeptical that everything is as good as it was, given the the dual risks that we face.
Ooh, Apex is on sale, and who else is on sale? Traded by. And oh shoot, hold on.
We're starting to look for some of the hard data.
Do my fund the future. It's like 50% off for you.
Today, Sarah, is a bit of a story. Manheim comes in for April up 4.9.
Yeah.
That's going to be the biggest jump since August of 22.
That's like $60.
Some people to start asking for a little bit more for a used car, knowing that what's going to happen to the list price of a new one.
Right, rates are still high too. You know, on Fed Day, we always do this great chart. Thanks.
I think my buddy got it for $60 and got $800 payout for that, so that's pretty good.
First, right before the Fed started raising rates, that was March 2022, and where we are right now, just to show you how it impacts Americans, right? So the 30-year mortgage rate, when the Fed was about to start raising rates, 4.29, and that's elevated because going into the Fed rate hike, it had started creeping up. We're now just below 7%. Credit card rate still in the 20%. Used vehicles, because you mentioned it, still high loans to borrow. And this is something the Fed knows. When they say we're still restricted, David, this is what they're talking about. Meaning they still have high rates.
9:30. We can do the Apex, huh?
Put a damper on spending and on the consumer. The problem
I don't get it.
why it's not such an obvious bet that they should be cutting right now is inflation. And inflation expectations have started to rise in surveys. Pantheon Macro put out a great chart showing inflation expectations in surveys like the University of Michigan. When they ask consumers, what do you expect for inflation? Expectation is higher. Look at that spike we've seen in 5 to 10 year inflation views. The thing is, the market views, which the Fed also pays very close attention to, 5-year forward as an example, hasn't really flashed any signs of inflation. So it presents a bit of a predicament, and that's why I'm curious how the Fed chair is going to talk about the inflation risk and what they're bracing for, because it really is too early to see.
Yeah, I'm going to YOLO FOMC later.
Yeah, well, there may be an impact from lower fuel prices or lower oil prices, Sarah, as we continue to bounce around below $60.
And that ultimately could have a big impact on the consumer as well. I was talking to Steve Leeson about it yesterday. Consumer prices, usually oil and consumer prices are correlated. The thing is, this time around, and that will keep inflation rates down and maybe make it easier for the Fed to start to cut earlier rather than later. The problem is, are we going to start to see it in building materials, in some of the places that have put tariffs on,
too bad.
That do filter into those consumer prices and the overall economy, apparel prices, for instance, and accessories prices, where a lot of the goods do come from China. I think that's the question.
NQ to go back to like 16,000, get some cheap shares.
I mean, the Treasury Secretary, Scott Bessent, has
I went tested like 120 or something.
Which is the closest bond yield that tracks the Fed
Yeah,
policy rate.
it was it 105 last time?
The orange is the 2-year. Obviously, they track each other pretty closely.
Last year.
Market telling you that the Fed is too tight and it should come down. As you can see, it's below that blue line. So again, the Fed's going to have to balance a mixture of market signals and economic data that doesn't necessarily point them in one direction or the other at this point.
Yeah, we were mentioning Wynn earlier this morning. Last night, delaying a remodel of the Encore Hotel in Vegas because of furniture and fixtures coming from countries that have been hit by tariffs.
A little bit, not a lot.
I
think it hit 16 when I got it. So a lot is going to be at 1,200 and under. That's what I'm going to load up.
Our next guest is in charge of corporate credit at Goldman, advising America's biggest companies on multi-billion-dollar financings. Johnny Fines here at Post 9, Goldman Sachs Global Head of Investment Grade Credit. It's great to have you back, Johnny.
Ethereum's not great like it used to be, so I don't know about that anymore.
Corporate bond liquidity has never been better in your career, in your view, correct? What accounts for that?
So I think there's been a lot of evolution within the corporate bond market over the last 10 years, and probably more accelerated so over the last 5 years with electronification. The growth of ETFs that have become a major source of risk transfer in the credit markets, as well as portfolio trading, which you can think of as a bespoke, customized ETF that now together represents around about the third of all the trading volumes that we do between IG and high yield at Goldman Sachs.
And all that volatility in April kind of didn't really impact volumes.
Actually, it created an increase in volumes. And when I kind of think about one of the markers of liquidity, it's the volumes that trade, it's the response under stress, and it's bid-ask spread. When we kind of think about that second factor, response under stress, I mentioned ETFs. They represent, for the most part, around $10 billion on an average daily traded volume basis. During April, they went up to $30 billion. And we've seen this time and time again over the last several years, that this response is a greater array of trading activity in times of stress in credit markets, very much in the same way that it has been in equity markets as well.
Didn't think we'd start off on liquidity, but since we're there, Johnny, I wanted to get your take because I, spoke to Mark Rowan on Monday and Jonathan Gray, both, of course, who have very major efforts underway at their respective alternative asset managers in the private credit markets. Rowan, in particular, has been a spokesman for those markets for some time, talking about, hey, in 18 months, you're not going to know the difference between private investment-grade credit and public. Take a listen to what he said, because I would love to get your response.
We have 10% of the trading capital in the world for fixed income that we had in 2008, and markets are 3 times their size. We have a historical view that there's liquidity in fixed income.
Is he live yet on Tradify?
There's only dealer liquidity. Why should what's happening in a private investment grade be any different than a public investment grade?
All right,
showing off.
Your chance to respond to Rowan. So I never like disagreeing with Mark, first of all, because it hasn't really paid.
It ain't doing good live because he's not in the top 5.
I think when I think about private credit,
Yeah, on Twitter, let me see those top 5.
I see this as an incredibly workable alternative to the public credit markets. The public credit markets are
What's Biggie's first name?
Standardized disclosure. They have credit ratings from S&P, Moody's, Fitch, the 3 biggest rating agencies in the world. They have
I don't think that's him.
reporting, and the
Ask
securities
him.
that are issued in the public market are standardized in many ways as
If
well.
he's number 3.
That means that the investors that traffic in those securities generally
So
will pay a
PW
premium for that
is 1.
standardization. The wonderful thing about private credit as it
Yeah.
has emerged is, first of all, it's emerged at scale, and secondly, it's emerged as a bespoke, customizable source of credit for issuers who want to access that channel. And so, of course, it will grow in liquidity because the size of the market is growing as fast as it has been. But the relevance of it as a solution for the clients that we cover, we've rebranded our business the Corporate Solutions, the Capital Solutions Group, as opposed to solely just the financing group, because we want to be able to advise our clients on all the alternative ways that they can think about raising capital, whether it be public intermediated, whether it be private capital from our own asset and wealth management group, whether it be intermediated private capital, which is looking more.
But what about this argument that really you guys, you just started off talking about liquidity and there being a lot of it. Rowan says that's nonsense. It's not true. We're nowhere near where we once were prior to the financial crisis.
So the amount, where is correct is 100%, is that the dealer capital and dealer inventories that once sat on balance sheets of the banks, that doesn't exist anymore. That doesn't exist anymore.
Damn, good shit, Mountain.
Because of the way that financial regulations changed post the global financial crisis.
Yeah, he won a Tradify yesterday and he's up 1,000.
And they bemoaned the lack of kind of change in regulatory reform to enable balance sheets to be committed to this business more successfully again. So instead, they created these evolutions. And the evolutions that were technology-based, again, ETFs, portfolio trading, that has been what's re-liquefied the corporate bond market, and that's it. Made it more liquid than in any other time that I've seen during my career. Sarah has a question.
Yeah. Well, okay. Now that we've established the liquidity, I'm curious what you think about Fed Day, Johnny, and whether the market's now expecting
anytime soon.
not fully priced in until July. Where do you think the scope for disappointment is today in the news conference?
So I think that the Fed chair will continue to be non-committal. I don't envy his job right now because there are so many cross currents that are taking place within government policy. It's hard to really ascertain which ones are going to be inflationary, which ones are going to be contractionary, and which ones are going to impact unemployment. What's pretty clear is that economic growth is going to deteriorate potentially meaningfully into the end of the year.
Let me see the codes for the Apex.
The GDP measure. It has an inflation and an unemployment mandate. And while soft data looks weak for both of those in terms of higher inflation expectations,
Let's do 2 Apex giveaway now, since it's
soft data says
boring.
unemployment is likely to tick up. I think they're really going to wait for that to be affirmed in the hard data, and we may not see that for the next month or two. And I expect the Fed chair to say we're going to be in a wait and see mode until we really see this impact the hard data.
Johnny, I want to finish up on our conversation here in terms of liquidity. There's a proliferation potentially of ETFs that are going to feature a good amount of private credit and potentially offer daily liquidity. Apollo has tried. Others are going to follow. Do you think those products can be successful?
I think they can. I think at the end of the day, one of the allures and attractions of private credit is that because it's not standardized, it's going to be invested in by capital that is looking for a higher return than standardized super liquid markets. And therefore, that's going to be attractive for investors to kind of think about whether it be like direct investment or ETF investment. If they can get incremental yield via these ETFs, I think they will find that as an attractive.
Later, buddy. Hey, the Apex thing is on YouTube. You want to get in real quick?
And to be able to maintain daily liquidity without, I mean, what
Later,
happens if
buddy.
there's a big event and everybody's got to sell?
Of course, but it's the same with any ETF, whether that be in stocks, whether that be in public corporate credit, or whether it be in private. I would always expect that these private credit ETFs would have a mix of both public, easy to trade, liquid corporate credit, as well as private, more difficult to trade credit. But the underlying market makers will be able to provide daily liquidity in those ETFs.
We had Jan on Friday, Costin yesterday, Kaplan this morning, and you. So we're grateful to Goldman for helping us understand the environment we're in. Johnny, thanks. Good to see you.
Thanks for having me on. Great to see you.
All right, we had to break. Here's our roadmap for the rest of the hour. Home builders under pressure this year amid concerns about the broader economy, higher rates. Taylor Morrison, CEO, joins us with her pulse on the housing market.
Farmers under some fire. Shares of the
I'm gonna
vaccine
cancel
makers
this
getting
long.
smaller
Not
this week following
gonna
the
hit
appointment
800.
of that new
Order
FDA
canceled.
vaccine chief. We'll talk about what's ahead for that group.
And Disney shares having a good morning so far. This after strong financial results and also, of course, plans for a new theme park and resort in Abu Dhabi. We're going to be joined by the
Yeah,
company's
2
CFO, Hugh
o'clock or
Johnson.
1 o'clock for
We'll
us.
talk a lot more about the results. That's after this.
Oh, my wife and I every day. It's across the room. Every day. Well, except for the weekends. Yeah, so it's good. Like when she gets off, my trading's done.
For plant-based, healthy blood pressure support, there's one brand that stands above the rest. It's Super Meats by Human, the #1 doctor.
Oh, she does the overnight, right?
Cardiologist recommended meat brand for heart support. Find out how to get a free month with your first order.
At a pharmacy? I mean, like retail or like at work from home?
Looks like he's making a lot of people happy.
ZipRecruiter's new tools.
Yeah, that's good though. So you work 3 days and get 4 days off, like vacation every week.
Just pick a time, and it handles everything. From finding great candidates to setting up
You
interviews.
messed up, dude.
No more back and forth.
Right. I can just choose from this list and meet with them as soon as tomorrow.
Well, she's making like 140,000.
Zip Intro. Post jobs today. Talk to qualified candidates
Yeah, you
tomorrow.
fucked her.
Try it free. Only at ZipRecruiter.com/.
Tell me on YouTube, I'll tell her sorry for you.
Where did you get these seats? They're trash.
It's probably married by now, right? Which is not.
Yeah, it's also
Damn.
the best way to guarantee you're getting the lowest price to your favorite
Alright, let me pick
even
the
at the last
winners.
minute. Get it last minute with game time.
Who? Oh. I think he is.
At Great Wolf Lodge, the splashes are huge, the action never stops, and the smiles come easy. So bring your pack together and book your stay today and strengthen the pack.
When I started college, so many people warned me about
Let me
credit
get my
cards.
codes
They just
out.
moved really
First
scary. When I
one.
needed a car, I realized that I needed to build credit. So I got the Chime Credit Builder card because I could safely build credit without being afraid
Yeah.
of police or
I need to find a
And
better
there was
system
no
of
credit
doing it.
check. My score went up over 60 points, and I bought my first car.
Let me pick
As
the
a busy
second winner.
college student, having a car is an absolute must. I feel like I could do anything. My next goal is 700 credit score. Join me at time.com.
All right, take a look at shares at Disney having a very strong day. Have been up as much as 10%, but this right
What'd you
here,
say?
the highs, of course, largely on the strength, as we've told you, of earnings that were far above what the analysts who follow the company had anticipated, whether it's
I'm
direct to
sorry.
consumer profitability there soaring, or parks and Cruises overall experiences showing real underlying strength, free cash flow generation far above what had been anticipated. Even linear cable networks actually were up 2%. Yeah, imagine that. That all contributing to a very strong morning, but also this announcement as well. Hard to say how much of that is a result of the increase in the stock price as well, that they're going to be building a new resort. The they here, though, really is a partner, Miral, in Abu Dhabi, which will take on all of the building and all of the capital allocation as well. But Disney will oversee it and will make decisions, of course, about all the attractions and everything of that nature, resulting in a royalty payment stream. Did have a chance to talk to both Bob Iger, of course, company CEO, and Josh Damaro, who runs parks and experiences. I asked Damaro as well about whether the company is seeing any weakness in another one of its parks in Shanghai, given, of course, the increase in tensions between China and the U.S.
Something we track very, very closely. Volumes in Hong Kong and in Shanghai remain at record levels, quite frankly. There is no detection of anti-Disney sentiment in the area. Again, we've built amazing assets both in Hong Kong and Shanghai, and we've continued to invest on that front. So, although the Chinese consumer is a bit unstable right now from a volume and demand standpoint, our parks are very healthy.
Carl, perhaps, something of a surprise there that they've seen no weakness. Of course, strength across the board in parks, again, is contributing, because you might have imagined, particularly, towards the end of March, that there might have been some weakness. And by the way, the guidance at this point seems to incorporate continued strength. And while our parent company, Comcast, is opening Epic not too long from now, they don't see this necessarily taking away in terms of share.
We always think back to Hugh Johnston's comments last year about, I think the term he used was normalization regarding guest count at the parks. It'll be interesting to see if he comes up with another word to describe the environment we're in right now.
Yeah.
All right. We'll find out in a few minutes.
We are going to find out. There he is. Hugh Johnston will join us, of course. Go over really the earnings, given we had a good long conversation with Mr. Iger and Mr. Damaro about the new park. Sarah?
Also, David, I think Abu Dhabi. I mean, interesting. We've been here at Milken. How many investors are talking about the Middle East right now? I think there was a greater presence here, and I think that there's a lot of interest in capturing what is a whole new segment of the population, like the younger population for Disney, right? Abu Dhabi, it's Africa, it's the Middle East, it's South Asia, all within a few hours. And I know there's a Ferrari world already there and other types of attractions.
Yes, they got a water world, a Ferrari world, a Warner Brothers world. I don't really know. Yeah, they got a lot of worlds.
Big boots for you.
There we go. It's finally working out.
Next week. I was thinking either Dubai, Abu Dhabi, Riyadh. I'm sure they're all competing for tourism as all of these economies try to diversify away from oil.
Yes, and it's interesting because they have been typically an allocator of capital. They still are largely, but they are also now looking for significant investment in the region itself, Sarah, which is somewhat different in the way that they've been viewed for years, of course, which is simply a lot of money coming out. Obviously, that is still the case. Mumbatala, for example, I had joined me on a panel as well. 40+% of their assets are invested in the U.S., but a lot of that money is now going to help development in the region as well.
The other thing I might add is that I think the phrase they used was this will be the most tech-forward park, right? If you're curious to see what you can do with the theme park starting now, as opposed to Disneyland or Epcot in the 70s or 80s.
Yeah. And Iger said they were doing AI-generated drawings on the airplane. I don't know. All right. Interested to see what they look like. Yeah. We'll go, Sarah. 7 years from now. We'll all have
I love it. Great. Let's go for the F1 race. It's the last race of the year. And it's increasingly, I think, a destination for big business and investors. As we head to break, check out the biggest losers on the S&P 500 this morning. Overall market is higher, but do have some losers, some tied to earnings. Dayforce down 9.5%. Flavors down 6. Plus, we're keeping our eye on healthcare, one of the worst performing sectors this quarter. The threat of tariffs, tough regulation, and now the appointment of a new FDA vaccine chief. We're going to talk about how to navigate all this volatility in the space and the key names that are being picked.
Still on?
Right after a quick break.
It's a rare thing when someone you've been with for so long finds a way to surprise you. It's like discovering E-Trade's easy-to-use platform now comes with the power of Morgan Stanley.
Mom can speak Walrus?
Double check that. That's pretty good.
Nice.
Ooh, wait, what was that? What?
Asking the right question can greatly affect your future.
Are you qualified to do this? What?
Especially when it comes to your finances.
Do you have a question?
Are you a certified financial planner?
Yes, I'm a CFP professional.
CFP professionals are committed to acting in your best interest. That's why it's gotta be a CFP. Find your CFP professional at letsmakeaplan.org.
When you're the leader, disaster cleanup and restoration, how do you make like it never even happened? Happen? But be prepared for anything. Whatever comes your way, there's a pro for that. Serve pro. Like it never even happened.
It's odd how, in an instant, things can transform. Slipping out of balance in a free fall. But there are so few certainties. As we navigate a future unknown. I'm glad I found stability amidst goals, standing the test of time.
Corporate types think you're rock stars. That's as ridiculous as us, being corporate types. Let's begin.
Rockstar movements and Workday to handle all our AI agents.
Well, why don't we handle my agent, Gary? Bubbly water, no bubbles. So what'd you do this weekend?
The huge. Shout out to Carmen for using Workday to manage our people and AI agents.
What are we doing?
Just clock.
The Wi-Fi. Boom. Xfinity.
Every day, we're checking the market
I go to the chat and look at all the texts to see who to win.
Insights, information, and all of the details that you need to make money.
Closing bell overtime for Easter and streaming on CNBC Plus.
Number of drug stocks got hammered yesterday after the FDA named a key critic as its new chief of vaccines. Our Angelica Peebles is tracking that action and joins us with more on what's ahead for some of these pharma names. Hey, Angelica.
Hey, Carl. The new Favor Director Vinay Prasad is very vocal about his beliefs and his
Oh, no, I think
criticism
the
of
button
the
was
FDA.
wrong.
He's called
Let
annual
me check.
COVID boosters a failure of the FDA regulation. He's
Yeah,
criticized
the
the use of
button went wrong
accelerated
at
approvals, and he's
963
accused his
on
predecessor,
NQ.
Peter Marks, of rubber stamping drugs. For example, one of the things he wants to see is cancer drugs to show that they can actually keep people alive longer versus just stopping tumors from growing. And that's a difference that can add years and millions of dollars to clinical trials. So his appointment adds yet another layer of uncertainty for drug makers that have really been under pressure since RFK Jr. was named HHS Secretary back in December. Then you have the White House trying to add most favored nations drug policy to the reconciliation bill. Now that would tie the price of drugs in Medicaid to the lowest price that similar countries pay. And initially it wasn't seen as a huge deal when this came up last week because Medicaid already gets the best deals around, but the industry realized that it would also affect the price of drugs in an even bigger program called 340B. And one lobbyist told me that it's like preparing for war right now. Pharma CEOs had an emergency call over the weekend, and they're taking their case to the Hill today while they're in town for a pre-planned pharma board meeting. And of course, don't forget about tariffs. The public comment period for the formal Section 232 investigation ends today, and President Trump said that he plans to announce those tariffs within the next 2 weeks. So there's just a lot going on right now, guys. I'm glad you highlighted it. I was with some healthcare execs this week, and they were saying the most favored nation status issue is a potentially bigger one, a bigger problem than even pharmaceutical tariffs. So that's something to watch with the reconciliation. Angelica, thank you. Angelica Peebles. Time now for CNBC News Update. Let's get to Courtney Reagan. Hi, Courtney.
Hi, Sarah.
Pakistan's Prime Minister vowed retaliation today for Indian missile strikes that he also called, quote, an act of war. At least 26 people were killed. India said it struck 9 terrorist sites, some of which are linked to an attack by Islamist militants on Hindu tourists in Kashmir last month. Tensions are rising between the nuclear-armed neighbors and have been since the attack, which India has blamed Pakistan for backing. The conclave to elect a new pope is set to begin in just minutes. There are 133 voting-eligible cardinals who will be sequestered inside the Vatican to decide who will be Pope Francis's successor. The first vote will take place at 7 local time, or around 1 p.m. Eastern. The cardinals will send up white smoke if they have made their selection, or black smoke if they haven't reached a 2/3 majority decision. And President Trump will reportedly announce next week that the U.S. will refer to the Persian Gulf as the Arabian Gulf or the Gulf of Arabia. The Associated Press says 2 U.S. officials confirmed the move. Iran is already pushing back, saying the renaming would indicate hostile intent towards Iran. Sarah, back to you.
Changes in a matter of months on the names. Thank you, Courtney.
Thanks.
As we had to break, biggest gainers right now on the S&P. Bunch of earnings stories in there. Look at Disney, up 10.3% on the beat and the raise. Plans for a new theme park. CFO Hugh Johnston joins us exclusively to discuss the latest results and the outlook for the media giant. We're back in just 2 on Squawk on the Street.
At Franklin Templeton, we're expanding access to the growing opportunity in private markets, empowering advisors with solutions to build the portfolios of the future today. Alternatives by Franklin Templeton, your trusted partner for what's ahead.
Some people like doing things the hard way, like doing their finances with a spreadsheet instead of using Quicken. Quicken pulls all your financial info together in one place and updates it automatically. How easy is that?
American manufacturers power our economy. At Biz2 Credit, we help them grow with fast, flexible financing. Financing that means more jobs, more growth, and more made in America. Biz2 Credit, funding what's next. Scan the code to learn more.
These bills are crazy.
She has no idea she's sitting on a gold mine. She doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy. Even a term policy?
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit coventrydirect.com.
It is amazing. They used to have collagen, used to have a probiotic, a green juice. I replaced it all with this mono colostrum. I don't know what colostrum is. It is amazing, but it's a bioactive whole food. It has all the essential nutrients you need for your skin, your gut, energy, focus, mood, performance, your hair, like immune system, strength, and supports all of that. I think the first thing I noticed was the energy and recovery that it had after workout. But if you want to try it, then try armor.com.
I am Polestar 3. I am pure electric performance. From the straightaways to the hairpin turns, I am designed to be driven. The drive of tomorrow. I am Polestar 3. View offers at polestar.com.
Good shit, Chip.
$273. This is how much you spend every month on subscription.
Good shit,
And we
Gavin.
have
I
like
just
2
saw
or 3.
the P&L.
That's what we all think. But in reality, there's so much more that we don't even know we're paying for. So I'm going to put more of this cash back in my pocket. Rocket Money is a financial app that shows you every subscription you're paying for, even that one you forgot about from 5 years ago. Oh, I can't believe I'm still paying for this.
Don't do it at like right at open tonight, just like a couple hours later.
Yep. All you have to do is tap a few buttons and they take care of it. Download Rocket Money today.
Fed's gearing up for its latest rate decision, followed by Fed Chair Powell's news conference this afternoon. Our senior economics reporter Steve Leisman's in D.C. with more on what investors can expect on, I think, the first meeting post-Liberation Day, Steve.
That's right, and the April 9th rollback. So, Carl, in the movie Dumb and Dumber, Jim Carrey famously utters the lines, So you're telling me there's a chance, and that's what the market needs to hear.
Someone
today from
mom?
the Fed and Chair Jay Powell when it comes to the possibility
I heard
of
Orderfield.
rate cuts amid all this tariff turmoil. Here's what I see in the keys to the meeting today. The tariff levels remain greater than expected, even with the April 9th rollback by the president. Soft data, it's cratered, but the hard data held up, especially that jobs report we got on Friday. So leading to the main question, does the Fed lean towards the inflation or the recession risk? The last statement emphasized the uncertainty in the outlook, but the most important line read, quote, the committee is attentive to the risk to both sides of its dual mandate. That, of course, keeps the door open for rate cuts, doesn't promise them, at least till it's clear which side of the dual mandate needs urgent care from the Fed. As Jason Furman said in a recent New York Times interview, quote, the best thing for the Fed over the next few months is to be behind the curve, because the alternative is to risk being ahead of the wrong curve. Futures markets continue to look for 3 rate cuts this year, one in July, one in December, but markets have shown they can adjust to incoming data. That first cut, it had been firmly priced in for June. It's now just at 30%, and the odds on the first cut have shifted to July. So markets, they seem to have come to grips with the idea that the Fed is not moving preemptively despite the president's protestations. Now we wait for the data to affirm the expectation for rate cuts and for Powell and Fed to keep alive the idea that there's a chance for cuts as soon as July. David?
Steve, thank you.
Yeah, we're doing a
Let's
futures
turn back
elite
to
now.
Shares at Disney. They are certainly one of the highlights of the morning.
Giveaway.
Up over 10%. This in the back of what were stronger earnings on both the top and the bottom line. Also, perhaps a somewhat surprising uptick in the number of streaming subscribers quarter to quarter. Disney CFO joins us exclusively. We'll talk about these numbers and, of course, the outlook. He is Hugh Johnson. Good to have you this morning, Hugh. I want to start off on the outlook itself, because you've spoken very positive terms on the conference call in terms of even 2026 and your confidence. And I just wonder, given your guidance and obviously the quarter you just reported, but the overarching economy, Steve Leisman just talking about it, worry still about the consumer. What is underlying the confidence that you guys can meet these higher expectations?
Yeah, good morning, David, and great to be with you from Abu Dhabi, the home of the next great theme park for the Walt Disney Company. Couldn't be happier.
All right, later, buddy.
To talk about our performance. In terms of the outlook, obviously, we tend to be more on the conservative side when we guide. We don't
thanks,
like
bud.
this for all the obvious reasons. What gives us the confidence is
Bye.
what we see in our own data right now. In particular, with our parks, bookings are up for Q3 up 4%, and that's with about 80% in, and Q4 up about 7%, and that's with about 55 or 60% in. On top of that, we're seeing great results with the streaming service, all of the content that we're adding, and obviously we're quite optimistic about ESPN flagship coming onto the streaming service as well. So those two variables are really driving a lot of what we're seeing in our own data, which tells us we can make this guide and make it comfortable.
Yeah, I want to talk direct to consumer and ESPN, but let me just come back to parks and experiences. I mean, given the economic tumult, so to speak, are you surprised the consumer is as resilient as they seem to be right now?
Well, it's interesting. To me, there's something of a bifurcation that you see. The consumer sentiment data is quite negative, but as we look at the stratified data on consumer spending, upper and middle income level spending is actually holding up quite well broadly. So from that perspective, we do feel good that we've got outside validation. And then combine it with our inside validation in
I'm
terms
about
of
to pick
booking,
now.
we certainly feel positively about it. I think in many ways what it comes down to is the consumer is prioritizing more, and they like what the Walt Disney Company is offering, so they're willing to pay the price for the value that we're delivering.
Yeah, speaking of value delivering, direct to consumer, as I mentioned and you referenced briefly, strong, up 1.4 million subscribers quarter to quarter were added, and obviously profitability up substantially. What does that look like in terms of scaling that business and the EBITDA performance that you can conceivably get, given that scale with, I assume, costs sort of staying where they are, Hugh?
Yeah, they largely are. We'll continue to invest, obviously, in technology to make the product better and better, particularly around recommendation engines and making the product easier and more effective to drive engagement and to lower churn. But in other areas like G&A and marketing, we certainly have the opportunity to continue to control costs. I think at the end of the day, that product is delivering so much value to consumers that they are willing to pay. And in fact, over time, I think they'll be willing to pay more for it. So we're certainly very optimistic, not just the near term in terms of the subs, but for this to be a growth business for the Walt Disney Company for a long, long time to come.
Yeah, well, all right. You mentioned over time they'll be willing to pay more. You have already raised price. I mean, I can go back to that day, of course, where you guys announced that you were with the company, but I was with Bob at the $6.99, I remember. We're far above that. Are you indicating your expectation that there's more price elasticity in there for you and you can charge more fairly soon for the service?
Yeah, I do think so. I don't know about fairly soon, but I think we'll probably be in a steady pattern of increasing prices on that product. And the reason is quite simple. If you think back to what people used to pay for the cable bundle, it was substantially more than this per month. And at the same time, I'd argue this gives you a lot more value because it allows you to control what you watch. It allows you to control when you watch it. It gives you content that you wouldn't have necessarily had access to at the moment that you wanted to have access to. So I think both the value is really strong and the price is still a good bargain. Obviously, when these products were introduced, everyone was pricing them in a way to drive adoption as quickly as they could. But now that we're north of 180 million subscribers, we certainly feel good about the fact that we have lots more subscribers to add, but can do so by adding content rather than by necessarily holding prices down.
Yeah. All right, linear networks. You know, we're going to have a new company. It's going to be called Versant, by the way. I don't know if you heard that news, Hugh. And it's going to be made up of a lot of linear cable networks. Thank you so much. Yeah, well, I was encouraged by the fact that your operating income was up 2% linear cable networks, despite the fact that revenues were down 13%. Is that the new normal? I mean, have you guys cut costs enough that you can continue to produce operating income increases at linear cable?
I'm not sure we go quite to that level. There was a little bit of timing year over year in terms of when shows were introduced because of the strike back in 23. So I wouldn't think of the positive on linear from an operating income standpoint to be the new normal. But we are working hard to make sure that we rationalize costs, that everything we spend is really dedicated to getting in front of the viewer as opposed to cost behind the scenes. We're combining things where we can as well. But I don't know that I'd call growth in that business, operating income a new normal.
Yeah. You're bumming me out here as we get ready for our public debut.
This market is boring. Got nothing to do.
I wanted to ask you about tariffs. 100% tariffs on films made outside the U.S. That's what the president posted about this week. The White House walked back a little, said they haven't made a decision. They're exploring that option. What would it do to your business and to the industry, and would it indeed make Hollywood great again?
Well, I think it's a little bit early to try to do the math on 100% tariffs or anything like that. What I was actually most encouraged by was the president talked about the fact that he wants to help the industry and he wants to make the industry stronger. So we certainly are more than happy to help in terms of designing things that would make sense to make the industry stronger. And we look forward to doing that.
Okay. Finally, let me end on ESPN Plus. The debut is not far away now.
I'll get off Discord for now. I'm gonna voice chat.
The service, and I am
I'll
also
be back
curious about the
when
relationship, the continued
FOMC
relationship
is
you
on.
have with Penn
True.
Gaming, which I believe is providing certain
I'll
parts
still
of the
trade, but
platform in
just
terms of
don't
the
want to be on
ability to
voice.
bet, and is
It's
under
boring.
siege from its own activist shareholders.
Later.
Does that partnership continue? And again, back to sort of your expectations as to how the debut is going to look.
Yeah, we're excited, obviously, about ESPN Flagship, and once we name it, we'll sort of start calling it that. But we're certainly excited about the product and all that it has to bring to the table.
It'll have all of what ESPN Linear is in terms of all the content and all the great shows that we have. But then in addition to that, as you noted, we'll have the ability to do fantasy, we'll have the ability to do gaming, we'll have the ability, fantasy games, we'll have the ability to do betting. Couldn't be more excited about the design of that product. It also, in a lot of ways, really makes ESPN go from being a sort of hybrid digital and linear product to really offering, I think, the first fully digital product for ESPN. Much more interactive than people have seen in the past. So we couldn't be more excited about it. As Bob noted earlier, we're going to talk about names and pricing next week on it. but we also think it's going to be tremendously additive to the Disney Plus service as well. And we think it'll be an exciting way for people to access sports through Disney Plus.
Yeah, all right, we'll stay tuned for price and name. You can't use Versant, sorry. And the Penn Gaming relationship remains in place as well?
It remains in place right now, yep.
Okay. Thank you. Hugh Johnson, CFO of Disney. Appreciate your time.
Okay. Thank you, David.
Well, guys, the Trump administration starting to put millions of defaulted student loan borrowers into collection this week. This is a big deal. Some 5 million of them, according to the Education Department, are actually in default. So I did sit down last night with the Secretary of Education, Linda McMahon, who's here in LA for the Milken Conference, and asked her about this. Here's a sneak peek of our interview.
You don't forgive loans, you just transfer them to someone else. Someone's going to have to pay the tab. If you get a mortgage on a house and you don't pay, they take your house. If you get a loan on your car, you don't pay, they take your car. But with a college loan, there isn't any collateral really to take, so taxpayers really become on the hook, and it's just not fair. So what we've done, if you think about this, since March of 2020, there's been no collection process for student loans. That has been an increase of $60 billion in these outstanding loans. The total loan debt is almost $1.7 trillion for student loans. So we've announced today, yesterday, May 5th, that the clock starts. We don't want people in default. First of all, it's not fair, but second, it's bad for the person in default. You can't buy a house, you can't buy a car because your credit score is just gone. So we're trying to help you get back on a payment plan that in not too long a time could help raise your credit score, and it's the best policy for the country.
Secretary Linda McMahon explaining why the Trump administration is doing this. It's a complete reversal from the Biden administration, who basically let people not pay off those defaulted loans for 5 years, stemming from COVID during tough economic times, but it lasted for several years. Why she said someone has to pay the bill, it adds to the deficit, and now they're going to start collections. We're going to hear a lot more from Secretary McMahon, including her thoughts on Harvard, of course. That fight escalating this week with a new letter from her. That's next hour on Money Movers. But Carl, this is a big deal and could impact consumer spending. These are young consumers mostly that are now going to be facing payments. Otherwise, they're going to lose Social Security benefits and consumer data. We're talking about, more than 5 million Americans actually in default and 43 million who have student debt. I would watch this when it comes to consumer spending.
Yeah. Meantime, Buttigieg is on the tape, still giving McMahon a hard time for calling AI education A1 education. Look forward to that, Sarah. Meantime, existing home sales in March, biggest decline in 3 years. Is there more pain ahead? How the crucial spring selling season's going with the CEO of Taylor Morrison in a moment.
Is this how you're hoping to retire? Well, hope isn't a good retirement strategy. You've worked for a comfortable retirement for years. Now you need to plan for retirement income. Learn ways to avoid common mistakes, like being too conservative or not setting retirement goals. Have someone on your side to keep you on track.
Call for Fisher's Comfortable Retirement Kit with the help you need to make your retirement a success, including the Investor's Guide to a Comfortable Retirement, 13 retirement blunders to avoid, and maximize your Social Security. Call 1-800-759-4477.
Fisher tailors a plan to keep you on track for a retirement you want. And as a fiduciary, we do better when our clients do better.
Call now for your Comfortable Retirement Kit. Call 1-800-759-4477.
Call us today. You don't have it coming to you unless you plan for it.
If your portfolio is $1 million or more, call 1-800-759-4477.
Inflation and economic uncertainty have affected all of us. But if you have a structured settlement or annuity, J.G. Wentworth can help you get a lump sum of cash now in exchange for some or all of your future payments. J.G. Wentworth has helped individuals get over $290 million in the past year alone. So why live month to month in these uncertain economic times? Call J.G. Wentworth today at 877-CASH-NOW and get the cash you need now from your structured settlement. Call now.
At Public Rec, we develop premium performance fabrics that are built to last and hard to live without. Our Daymaker pads, with their various sizing options, are designed to fit your life's moments. More comfortable than jeans, more stylish than sweats.
When I started Walton Goggins goggle glasses, I didn't know how to turn all this fancy prettiness into a classy-looking logo. But GoDaddy Aero does, with its magical AI powers. It not only creates it, it slaps that sweet thing everywhere.
Introducing AG1 Next Gen. The daily health drink backed by 4 rigorously designed clinical trials. Next Gen is clinically shown to increase healthy gut bacteria by over 10 times and to close common nutrient gaps. It's one drink for whole body health. The next generation of AG1 is here.
Introducing CNBC Plus, a new streaming platform from the #1 source in business news. On-the-go access to international financial markets, business news, and analysis as it happens. Bell-to-bell global live stream, CNBC Plus real-time data, and full episodes of CNBC's Business Day lineup on demand. When global business is booming, you need booming Wi-Fi from Xfinity, so you never miss a market moment streaming on CNBC Plus.
Got some more demand in the housing market today. Weekly mortgage apps suddenly surging 11% week on week. Conventional loans drove the gains despite some ongoing economic uncertainty. S&P real estate outperforming the broader market since the president took office. That said, some home builders well off of their 52-week highs. Names like NVR, Pulte down double digits from their peaks back in October. We'll talk about it with the CEO of Taylor Morrison in a moment, Sarah. I think this was the best jump for applications since early January.
Yes, housing market trying to figure out where prices go from here and where activities are. Also, there are higher tariffs, which raise construction costs, and the Federal Reserve potentially holding rates steady here. We'll talk about it all with Taylor Morrison, which is actually finding pockets of growth, but does expect tariffs to hit Q4 housing starts. Joining me here is Taylor Morrison CEO Sheryl Palmer. Sheryl, it's great to have you. You talked about sort of the cadence of the quarter. Started off weak in January, stabilized, I think you said, in February and March. I'm curious what you're seeing in April and how that compares with activity in recent years.
Yeah, you're exactly right, Sarah. Thanks for having me today. We started off a little slow in January, and I think we're up about 10% in February, and then saw another 12-13% jump into March. April has been a little bumpy. You know, as I said on the earnings call, Liberation Day was kind of a day that was unsettling for the consumer. There's certainly demand out there. We're seeing a lot of traffic. We're certainly seeing sales, but we're not seeing the surge that we would normally see between March and April. April would generally be a peak in the spring selling season.
Is it consumer sentiment or is it the inventories, a housing market dynamic? What is it?
I think mostly, I mean, you'll never be able to point to just one thing, Sarah, but I think mostly it's consumer sentiment, confidence. There's a lot going on out there, and they're trying to, process what does it really mean for them. I think to fully appreciate it, you almost need to dissect the different consumer groups. When we think about first-time buyers, very rate sensitive, and the volatility that we're seeing in rates has an outsized impact for this group, and truly, leaning into what they can really afford. When you think about your move up, your second move up, and our resort lifestyle, maybe some call active adult, they're really focused on the macro. They've got the resources. It's not quite as much about interest rates as just how do they feel. I mean, they're making a very big purchase decision and just want to have a better understanding. So they're just taking a little longer. We're able to move them with incentives, but just taking a little longer than you would normally see in a very robust environment.
How do the tariffs impact your costs of construction and ultimately your financials?
It's such an interesting question, Sarah, because I've seen lots of predictions out there on what it means, and I don't know how we can know exactly what it means yet because we don't know what this 90-day pause brings. When we think about what we know today, and that would be more the universal 10%, it's immaterial. It's literally a couple hundred to a few $100s a house, and that's on newer starts that really will affect the fourth quarter. So it's a rounding error. If we think about 26, if all these tariffs were to go into play, it would have a more meaningful impact. You know, the numbers that we've initially looked at is maybe 1 to 1.5% of purchase price. But once again, we don't know if all of that's going to come into play yet.
So does that mean it will not raise prices for the consumer on homes? And what's happening overall with prices? Because, I mean, that's been part of the pain here, is that housing prices have not come down that much.
They haven't come down, but they haven't moved up materially either. And, you know, it's always a little tricky when we talk about where are we raising prices or are we increasing incentives. So I like to look at net pricing.
Order filled.
And once again, it's very, very, not even market, sub-market, community specific. I think in the last quarter, we saw net prices move up in about 30% of our communities. But I would tell you those moves are much more modest, and I think that's okay. So if tariffs were to happen today, would we be able to take all of that? Probably not. It would probably be a shared expense between the consumer and the builder.
Cheryl, when it comes to sort of the buyer right now, what do you think is more important? Lower rates? What's going to get them to sort of the levels you might have anticipated previously? Lower rates or resolution sort of on the tariff side? I mean, is one more important than the other?
Once again, without being redundant, I think it depends on
Order
who.
submitted.
I think confidence is probably the more paralyzing effect today. I really do. I think some sort of stability and certainty on what all this macro noise means. I don't even know that 100% has to be settled. I think it's more around just some confidence that we're moving in the right direction. The level
Order
of volatility moderates.
Order
I think
submitted.
when you
Order
think about
canceled.
the first-time buyer, rates are critically important. You know, what we are seeing is a true preference for new. I think the consumer, David, really does appreciate that there's some significant advantages if it's just that the inventory is, you know, 40 plus years old, where that inventory sits, or our ability to help customers with some of these rate buy downs, forward commitments that really help them get into a
Order
monthly payment
submitted.
they can afford.
Okay. Well, we thank you. Who should Sarah, do you want to thank?
I'll thank
Thank you, Cheryl.
Order filled.
Thank you. Good to see you all. Thanks for having me.
Thanks for being here.
Bye-bye.
Order
As we've been
submitted.
talking markets coming off of the session highs here, the Treasury Secretary is testifying this time before House Financial Services. We're monitoring that hearing, but a few moments ago he did give some comments saying that China
Order
negotiations
canceled.
will take place in Switzerland on Saturday. He says they are not advanced discussions, but rather a beginning for talks. He said that some trade negotiations are, quote, quite advanced towards agreements in principle, but he would not say which countries might reach a deal with the U.S. this week, saying it would be detrimental to U.S. interests. Maybe David Market was looking for a little more granularity, given some of the promises or reassurances we got from the president in the Oval yesterday.
Yeah, I mean, some of the comments as well, I think, in terms of China graduating from developing country status. Nothing, right, you're looking for anything positive. Obviously, the idea that there are going to be talks that are getting underway perhaps as soon as this weekend in Switzerland is a positive, but as you see the Treasury Secretary there. But, of course, everybody trying to understand as well what exactly that means in terms of de-escalation, where we will end up in terms of what the tariffs may end up being. And we are seeing, you know, a little bit of strength in the market, Carl, but not as much perhaps as might have been anticipated initially with those headlines from late yesterday.
Well, while there isn't any sort of specifics on what de-escalation is versus what a trade deal would look like, there's a growing expectation among investors we talk to that those high, and he's called it unsustainable, the Treasury Secretary, rates will come down. We don't know where they'll settle, but that those will come down to give some breathing room, especially ahead of the holiday season and inventories. Don't miss Ken Griffin, Citadel, post-Fed meeting. That's going to be at 4:45 Eastern time. And, of course, we'll be back here on Money Movers with a lot of pre-Fed discussion in just a moment. Stay with us.
Real-time exchange sector sort is sponsored by Sector Spider ETFs.
only service now connects every corner of your business, putting AI to work for people.
Every corner?
Every corner, Nick. So, Kate in HR, hey, Kate, can focus on people, not process.
Oh, actually, I have a question.
Keep up, Nick.
Do you have to be sick to take a sick day?
Patty in IT is using AI agents to deal with the small stuff so she can work on the big stuff.
Agents like secret agents?
Secret agents I control.
With your mind?
You know, I played a secret agent once.
We know. Oh, gosh.
I liked it.
Over here, AI gives Tina the info she needs to get the job done. Nick, what did we say about touching?
No touching.
Good. AI helps Jim solve customer problems before they're problems.
For reals?
For reals. ServiceNow is the only platform that connects every corner of your business, putting AI to work for people.
Oh, so we all work better together.
My work here is done.
Excuse me, which way back?
Follow him.
One of my favorite supplements is Cunol Turmeric. Turmeric helps with healthy joints and inflammation support, and Cunol has the #1 doctor recommended form of turmeric. Cunol, the brand I trust.
With the president pressuring the Fed to cut rates and the outlook uncertain, how will the Fed balance the threat of lower growth and higher unemployment? Fed Chair Powell's message to investors. Power Lunch, today 2 Eastern, and streaming on CNBC+.
We asked people who said they've had Domino's stuffed crust pizza before to compare it to our new stuffed crust.
This is exactly how I remember at my friend's birthday.
The last one didn't have this much cheese.
Now the box to your left, that's the Domino's stuffed crust you said you've had before.
I'm confused. What's going on?
Domino's has never made a stuffed crust pizza before.
Are you serious?
It's Domino's first ever stuffed crust. Stuffed with melty cheese and topped with garlic seasoning and Parmesan.
Love that cheese.
I'm taking one more if that's okay.
Try it for the first time tonight.
Can you believe this, man?
Everyone's getting that new Simply Safe outdoor monitoring. Now they can help prevent crime before it even happens.
How do we compete with AI-powered outdoor cameras that alert live agents of an intruder?
Stop. This is Simply Safe. Police are on the way.
Whoa! I didn't even see those guys.
So what about us now?
Luckily, I'm pretty adorable. There's no safe like Simply Safe.
Male hand mop. Now I have relaxed fit hands-free Skechers slip-ins. No bending down and no touching. I kind of love not using my hands.
Come on, Andy.
I'm out the game. Try relaxed fit Skechers slip-ins.
If anything happens to me, I don't want my family to stress over money.
I searched best online life insurance, and Ethos came up.
It took maybe 10 minutes.
I got covered 100% online.
Ethos made it fast and easy to protect my family.
Check your price at ethos.com.
If you spent years building your investments on mutual funds, it may be time to graduate. If you have more than $1 million of investable assets, there's almost always better options in mutual funds that improve tax efficiency, are cheaper, and more specifically customizable. Mutual funds are a perfectly fine way for beginning investors, but Fisher Investments can give you ideas to help you for who you are now.
Call now for our essential guide, 6 Pitfalls of Funds, with insights from best-selling author and legendary money manager Ken Fisher. Call now, 1-800-831-0650.
At Fisher Investments, we help you with the process of graduating to a better future.
Call for this important guide, 6 Pitfalls of Funds. You'll learn about their disadvantages and why it may be time for a new approach. Call now.
You can achieve your investment goals, and Fisher Investments can help you get there.
If your portfolio is $1 million or more, call 1-800-831-0650.
I have a structured settlement and I call J.G. Wentworth 877 cash now.
I have an annuity, but I need cash now.
Call J.G. Wentworth 877 cash now.
It's your money. Use it when you need it.
Call J.G. Wentworth 877.
Call 877 cash now to get a $100 gift card for a free quote.
In our previous home, we had had wood, and I never liked it. I wanted a sustainable option, and that made TimberTech the obvious choice for me. I love the indoor-outdoor living. I mean, to be honest, the decks made it even better. I'm so happy with it.
Meet Omnilux Contour, an LED light therapy mask clinically proven to reduce fine lines and wrinkles. Find out how you can improve your skin at OmniluxLED.com.
I find it challenging to come up with a gift that's really impactful, something that really makes a difference. Jolie has been a tremendous gift. It's something that is not only looks beautiful, but makes us feel amazing, and is something that we get to use every day.
If you don't like traditional foundation like me, I have a secret for you. It's called What the Foundation. What the Foundation is a hybrid product that blends foundation and moisturizer. This is exactly what I think a foundation should be. Learn more at Jones Road.
I know how to make slick-looking goggles/glasses, but I have no idea how to make slick-looking social media stuff.
But GoDaddy Aero uses AI to create social content out of thin air, like this one. Walton Goggins goggle glasses are great gifts for all guys and gals.
Your record label is taking off, but so is your sound engineer. You need to hire.
I need Indeed.
Indeed you do. Our advanced matching helps find talented candidates so you can connect with them fast. Visit Indeed.com/hire.
American manufacturers power our economy. At Biz2 Credit, we help them grow with fast, flexible financing. Financing that means more jobs, more growth, and more made in America. Biz2 Credit, funding what's next. Scan the code to learn more.
I guess I'm not the easiest person to please. I like things just right. That's why I love Redfin's home recommendations. They know what I want even before I do. A home that's just right.
Yes. Yes.
Most people don't realize how processed typical dog food is. At the Farmer's Dog, we believe dogs should be able to get their daily nutrition without the excess processing.
These bills are crazy.
She has no idea she's sitting on a gold mine.
Well, she doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even a term policy!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit coventrydirect.com.
I am Tony Hawk, and like many of you, I take a statin to reduce cholesterol. But statins can also deplete CoQ10 levels. That's why my doctor recommended Cunol CoQ10. Cunol has the #1 cardiologist-recommended form of CoQ10. Cunol, the brand I trust.
We wanted to make foods using unique ingredients, things like kelp. Shopify provided us this platform to sell our products to anyone around the world. We're Barnacle Foods, and we're powered by Shopify.
The Daymaker pant by Public Rec. More comfortable than jeans, more stylish than sweats. With the Daymakers, you can choose your waist and length sizes to guarantee a perfect fit. Now comfort looks good.
Franklin Templeton ETFs. With over 70 ETFs, we have solutions for every market, helping advisors build the portfolios of the future today. Franklin Templeton, your trusted partner for what's ahead.
Squawk Box Friday, a special report on cargo theft. CNBC investigates how criminal gangs are attacking America's supply chain.
They literally have a license to steal.
Squawk Box, Friday, 6 a.m. Eastern, and streaming on CNBC Plus. Introducing CNBC Plus, the new streaming platform from the #1 source in business news. Watch live or on demand. Access any market, anytime, anywhere. Start streaming. Go to cnbc.com/plus.
their finances with a spreadsheet instead of using Quicken. Quicken pulls all your financial info together in one place and updates it automatically. How easy is that?
Introducing AG1 Next Gen. The daily health drink backed by 4 rigorously designed clinical trials. Next Gen is clinically shown to increase healthy gut bacteria by over 10 times and to close common nutrient gaps. It's one drink for whole body health. The next generation of AG1 is here.
GoodRx helps my family get the medications we need at an affordable price.
I did have insurance, but unfortunately they didn't cover the medications that my doctor prescribed.
My mom introduced me to GoodRx, and I've been using it ever since. All I do is put in what I'm searching for, and it shows each location and each price.
The first time I used GoodRx, I saved over $700.
I literally tell everyone I know to check GoodRx.
So sick.
Are you okay?
I'm incredible. So many in-network docs on ZocDoc. This one never rushes appointments, and that one makes patients feel heard. Booked.
You've got options. Book now.
Oh, I hate these things.
Yeah, sometimes you just want a human.
Can we get a human over here?
That's one of the great things about Consumer Cellular. Their 100% U.S.-based customer service is also 100% human. You don't have to, you don't have to talk to a bunch of robots, just humans in America.
Robots are the worst.
Yeah, I think it's mad at us. For unlimited talk and text with reliable coverage and your second month free, call Consumer Cellular.
When you need to prepare for unpredictable adventures, you need WeatherTech. Laser-measured floor liners, front and rear. Seat protector to save the seats.
They're all yours. They're here.
Hey, I knew you were coming, so I WeatherTech the car.
Can we get ice cream?
We can now.
Order your premium American-made products at WT.com.
Well, she's not the easiest person to please. Right, Mama?
She needs things to be just right.
Don't get me wrong. I mean, we do love her. That's my mug, isn't it?
But she needs a place of her own, and fast.
Thankfully, she's on Redfin. Redfin updates their listings every 2 minutes.
That means every 2 minutes, there's a chance we'll be back to having our porridge in peace.
Oh, wow. This one's just right.
Is she leaving?
Yes.
Oh, it's happening. It is happening.
Some things are just better at home. Our flooring experts come to you so you can compare hundreds of samples in your home. It's our best sale of the year. Get up to 45% off your entire project.
800-588-2300 Today. Dear Texas, this is Kona Fancy, part of our premium line of Cafe Au Lait Reserve. With notes of nectarine, maple, and macadamia, this full-bodied coffee was grown just for you. Cafe
is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Goldilocks needs a place of her own, and fast. Thankfully, she's on Redfin. They update their listings every 2 minutes. And with so many options, she's bound to find exactly what she wants.
This one's just right. Is she leaving? Yes.
Oh, it's happening. It is happening.
Whew. That's Michelle Ree West. She's a force on the golf course, and I help her make every shot that she takes the best one possible. I guess I'm a lot like Mizuho. In the same way they help their clients succeed. And like me, Mizuho provides tailored solutions to make a real impact. Everything from investment banking to equities and fixed income, derivatives, and so much more. It's a partnership as beautiful as that birdie. Mizuho Americas, a name worth knowing.
When you're the leader in disaster cleanup and restoration, how do you make like it never even happened happen? Let it rain, Randy! Woo! Yes! By being prepared for anything! Woo! Whatever comes your way, there's a pro for that.
Serve Pro, like it never even happened.
Did you know that somebody could literally steal your house? Yeah, that is a thing that happens. It is when a criminal forges your signature on one document, uses one fake notary stamp, they then take out loans using your home equity, and the worst part of it is, you don't even know it's happening until you start getting collections and foreclosure notices. This right here is why you need to use Home Title Lock.
Find out if you're already a victim. Go to HomeTitleLock.com now.
Double check that. That's pretty good. Yee. Not crying, are you? Let's tighten that.
Ooh. Wait, what was that?
What? No, don't worry about that. Here we go.
Asking the right question can greatly impact your future.
Are you qualified to do this?
What?
Especially when it comes to your finances.
Do you have a question?
Are you a certified financial planner?
Yes, I'm a CFP professional.
CFP professionals are committed to acting in your best interest. That's why it's gotta be a CFP. Find your CFP professional at letsmakeaplan.org.
Franklin Templeton Custom Tax Management. Easily create custom SMAs with our Canvas platform and help investors keep more of what they earn. Franklin Templeton, your trusted partner for what's ahead.
With the president pressuring the Fed to cut rates and the outlook uncertain, how will the Fed balance the threat of lower growth and higher unemployment? Fed Chair Powell's message to investors. Power Lunch, today 2 Eastern, and streaming on CNBC+.
The world's most precious resource? Wi-Fi. And the Wi-Fi is booming.
Booming! Boom!
Wi-Fi is booming.
outside, but the sun makes our deck and patio too hot to enjoy.
Thanks to our new Sunsetter retractable awning, we can select full sun or instant shade.
It's 20 degrees cooler, and you get protection from harmful rays and sun glare.
Call now for this free awning idea kit packed with great awning solutions. Plus, get this $200 discount certificate to get your Sunsetter for as little as $799. Add LED lighting for evening enjoyment. Life is better under a Sunsetter.
Is this your dream of retirement? How about this sweet deal? I like fishing. Or is this a little more your style? Retiring well isn't a guarantee, it's a goal. It's easy when markets are going up, but what about when they're not? That's why you need this.
Call for Fisher's Retirement Survival Kit, featuring your guide to surviving market volatility, our stock market outlook, plus the Fisher Investments Difference. 3 indispensable guides, yours free for calling 1-800-213-5317.
Fisher Investments' disciplined approach will help see you through the market's ups and downs and give you the confidence you need to reach a comfortable retirement. And our fees are structured so we do better when our clients do better.
Call now for your free retirement survival kit. 1-800-213-5317.
See if your dream retirement is on track.
If your portfolio is $1 million or more, call Fisher today. Call 1-800-213-5317.
These bills are crazy.
She has no idea she's sitting on a gold mine.
Well, she doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even a term policy!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit coventrydirect.com.
Breaking earnings news. Disney, Novo Nordisk, Warner Brothers, Coinbase, reporting, market reaction, expert analysis, strategies for your portfolio. This week on CNBC and streaming on CNBC Plus.
I am Polestar 3. I am pure electric performance. From the straightaways to the hairpin turns, I am designed to be driven. The drive of tomorrow. I am Polestar 3. View offers at polestar.com.
$273. This is how much you spend every month on subscriptions.
I only have like 2 or 3, right?
That's what we all think, but in reality, there's so much more that we don't even know we're paying for.
So how do I put more of this cash back in my pocket?
Rocket Money is a financial app that shows you every subscription you're paying for, even that one you forgot about from 5 years ago.
Huh, I can't believe I'm still paying for this. I'll call cancel right now.
Whoa, whoa, whoa. With Rocket Money, they even cancel it for you.
Really?
Yep. All you have to do is tap a few buttons and they take care of it. Download Rocket Money today.
Tech Check is sponsored by Comcast Business, powering possibilities.
you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour as trade talks with China are finally set. Is it time now to be more bullish on stocks? We will discuss and debate with the investment committee. The Fed decision is looming, and several key names are moving on their earnings. Joining me for the hour today, Josh Brown, Joe Terranova, Shannon Sakosha, and Jim Lebenthal. We'll check the markets here. NASDAQ is red, and we're going to get to that big story in a minute. Everything else is green and hanging in as we focus on those talks with China. We've got Bitcoin on the move, too, approaching 100K. Bond yields, they are down, the 10-year at 428. But the story of the day, and I know you've heard a lot about it already, and for good reason. Google, Alphabet shares down substantially, a move that you just don't see all that often. Those shares were down 7%, and it's really because of those comments that Apple's Eddie Q made that searches in their browser fell for the first time in April. It is a significant moment in the whole anthology of where AI and search is going. Jim, you own the stock, Alphabet. Now, Apple has implications here, too. And that stock is lower, and we can get to that in a minute. But this seems to be focused solely, or primarily, probably better said, on Alphabet, a stock that you own. What do you think?
Well, you know, it's obviously very new news, so I want to be careful about knee-jerking one way or the other. My inclination is to hold through this, particularly after the damage that's gone on in the last couple of hours. What I will note is that this drop, and you mentioned it doesn't happen that often, but it has happened before, and I'm thinking, Scott, to 2 years ago, roughly 2 years ago, when there was a problem with Gemini, the search engine. Do you remember this? They misidentified, in some trial run, they misidentified a celestial object. Stock got absolutely clobbered, and it was the death knell supposedly for Google and its AI search, et cetera, et cetera. We've been talking ever since then about competitive threats, which so far have not impacted the financials of Google. Maybe someday they will. I want to go back to where I started. I'm not going to knee-jerk positive. I'm not going to knee-jerk negative. The stock is obviously down quite a bit. The valuation was cheap to begin with. My inclination right now is to stick with the shares, but obviously I want to parse this a little bit more.
You're really speaking to what I think is a bit of a different incident, one that caused or needed a tweak, perhaps, versus one that brings up the existential threat and crisis around Alphabet. They're two different stories altogether. This is the big worry from day one, is it not?
It is, but I just, with what you said, when that happened, and it actually happened another time as well with, I forget, it was Gemini or Bard or whatever. When that happened, it was absolutely categorized as an existential threat, that Google was going to lose its search business when it happened. Absolutely, stock was down to something in the mid-90s, had big drops when it happened, and you know, we see where it is today, even after the drop that we're seeing today in the 150s. All I'm saying, again, not knee-jerking one way or the other, just saying this has happened before in the last couple of years.
I have a different perspective. I'm sorry.
You sold it recently in the rebalance.
Yeah, the strategy sold out of it. Okay, it looks really good today, but I think this is a big deal. This is the cash cow. This is their primary business. This is how they're generating their cash. This is the primary business they're in. And the concern over the last several years has been, number one, they're not moving fast enough to fend off the competition. And now here we are where there's actual evidence being suggested in this testimony today that whether it's ChatGPT, whether it's Grok, whether it's Perplexity, that there actually is a capture of market share. And that is a really big deal fundamentally.
So, Josh, you recently sold it April 15th. You got out of Alphabet. The significance of this moment in the big story here is what in your mind?
It's extremely significant. Joe is right. I think Jim will eventually come around to this point of view. It's not that Google now disappears. Google has a steady business that will consistently be a good business. It's that the duopoly that we've become accustomed to over the last 10 years of Meta and Google being, 70, 80% of online ads, that is now what's in question. And to act like this isn't a watershed moment, I think, is to ignore the how powerful Google has been since even before it came public. So just and you could play back my comments from the last 2 weeks. I've been saying this for the first time. Google finds itself competing in core search. It never had to compete before. It came public in 2004 after the first wave of search engines all disappeared, and it was effectively Yahoo and MSN left on the board. And so Google came public 21 years ago. They had dominant market share, and they never lost it. We've never seen Google really fight for, you know, they've been fighting on other battlefields like cloud. They've been fighting on workplace productivity with the G Suite. So it's not that they can't compete. They never had. This was in the bag. Basically, Google could go into any business that they wanted to go into because they had a money printing machine in the basement, and it was never in question. And now what we're seeing is the Gen Zs are going to ChatGPT first. They don't want a list of blue links, which is basically a treasure hunt. Here, go find the answer. They just want the answer. And it's not that Gemini is not delivering that on the top of their search query results. It's that Gemini's not doing that by themselves. There are other competitors that have gained a meaningful amount of mind share, market share, search share, inquiry share, however you want to phrase it. And it's the first time that we've ever had to worry about the money printing machine in Google's basement being 95% market share. So they don't compete on traditional search. This is important. There's a company called DuckDuckGo, and then there's Microsoft's Bing. Those are not the competitors. The true competitors are these standalone AI services, and they are growing increasingly complex, and their results are getting better, and they're easier for people to use, and the younger generation are defaulting to going directly there. So that's what we're talking about here. It reminds me of PayPal, but on a much bigger scale. Like, PayPal's fine. The service works. People still use it. It's still built into millions of websites. It's not going away, but it's a stock that sells at 12 times earnings ever since Apple Pay and Shop Pay and Square and all of these other services came along that compete with it. There was a time when PayPal had dominant market share as the shopping cart payment solution for every e-commerce site, and that time has now passed. I think the way that you want to think about Google, value tech, Jim and I had this debate last week on the air, that's the way that we need to start thinking about it. And it's not the end of the world, but it's a very different dynamic.
Let's bring in Steve Kovac, who covers all of this, certainly follows everything big in tech. Existential worst fears, are those too strong of comments when thinking about this issue, Steve?
Not at all, and I hate to pile on Farmer Jim over there, but I do agree with Josh and Joe on this. And look where we're getting this testimony from. It's coming from Eddie Q, in charge of services at Apple. Outside of Google, no one has a better insight into how Google searches are performing up or down, week by week, month by month, quarter over quarter than this man. He sees how people are typing into the Safari browser on their iPhones, how often that's happening. And he said it dropped in April, and he specifically said a lot of that is due to artificial intelligence, that artificial intelligence search engines, like ones they're considering integrating into iOS, he testified, Perplexity, Anthropic, ChatGPT, all those that we talk about so often are eating into this share. And now we're seeing at least a little bit of evidence from someone outside of Apple who does have great, outside of Google rather, who does have great visibility into the search ecosystem say this. And by the way, Scott, this is not just an Alphabet problem. This is also an Apple problem, because the reason why Eddie Q is there testifying on this is because one of the remedies under consideration in this antitrust trial that Google lost to the Department of Justice is getting rid of this agreement the two companies have, where every time they have this revenue share of searches on the default search engine within Safari. So every time you and I go into Safari, type in a query, there's a revenue share going on between Apple and Google, and Apple basically gets free money from Alphabet for this. Eddie Q testified in this trial earlier that it's up to $20 billion a year. That would be a fifth of services revenue. And services is becoming a worry point here now for Apple because they did not give guidance for the current June quarter, which they have been. It's been growing by double-digit percentage points. It's picking up a lot of the slack from these sluggish iPhone sales, and so much of that is attributable to this agreement that might get blown up by the government from Google. So that is another thing that we have to look at here is Apple potentially partnering with one of these other up-and-coming AI search engines in order to take over this Google relationship, or at least provide another or better or different option than what they're getting right now through Google. To Josh's point,
$50 billion.
Go ahead, Josh.
It's $50 billion, too.
Yeah.
The money Google has paid Apple all these years to be the default search engine on iOS, it's so much money. We throw around billions like it doesn't matter anymore. It's so much revenue, and the judge says it's non-competitive. If this is the remedy, it's a huge story for both Apple and for Google, and it's the end of an era. One of the reasons Google has been able to hang on to the degree of relevance that it has is that it's built right in as the default search.
Right.
So if that's changing, think about how many of the searches you do, just anecdotally, not even data, that you do on your app, on your iPhone during the course of the day. Is it 20? Is it 30? Multiply that times hundreds of millions of people.
A billion. There's a billion iPhone users on the planet, Josh, doing this every day. And so, again, when you have Eddie Q up there saying those searches fell, that's less money for Apple, that's less money for Google, and it just plays into this disaster scenario that folks have been worrying about. This is different than Google search getting, or Google's AI search, rather, getting an answer wrong about what planet it's identifying or whatever that was that happened 2 years ago. This is usage falling, and that is where we're seeing the reaction in the stock right now, is because people are using what you just described, Josh, less, according to Eddie Q, and instead they're going to these other services. Eddie Q also said this is going to change the Apple business. He also testified, just saw a headline cross from this testimony, that in 10 years, we might not even need an iPhone because AI is going to be able to handle so many of the tasks that we needed to screen and poke around apps for. So, I mean, this is really an inflection point. This is not, we're seeing search, traditional search drop in favor of these AI services. And hearing this from Eddie Q carries so much weight for both of these companies, guys.
Yeah, it's really great insight and perspective. I want you to stay with me, and I'm going to give Jim a chance to respond to all this. But Shan, we haven't heard from you and how you're thinking about this as well.
Well, I think it's important. I don't know if the viewers all know that it's 57% of Alphabet's revenue is search, right? And so if you're buying the stock from a growth perspective, you're looking at YouTube and you're looking at the opportunity to grow YouTube and cloud. Those are de minimis compared to what search is. So I think the challenge here is if you're hanging on here and looking at this as the potential for growth, it's not just what Joe and Josh were saying. It's not just the revenue that's being accreted by the search. It's that they're not going to be able to invest in anything else except defending this business. And so, you know, the upside here could become quite limited. And Jim, I mean, I hate to pile on as well, but like...
I don't feel piled on. I really want to repeat the statement, and let me just put some context to this. This news broke an hour and a half ago, all right? I was in the subway, came here, got my makeup on. This news to me is about 25 minutes old, and all I'm saying is I am still parsing through it. Josh said I may come around to it. I may come around to this position. I'm not set in stone on this at all. All I'm saying is this is not the first time this threat has been raised, and it's not the first time. I don't think I'm misremembering this, that when it happened twice, that Google's AI search engine did poorly, and it was listed as existential.
This is, I will underscore what Steve Kovac said. The issue, as I think he so very well laid it out, this is the first time that we have had a definitive usage drop. The metric that matters most, not only to Alphabet, but as Steve also laid out, to Apple and the revenue that it gets. That's a separate story. The headline story is the fact that usage of search for Alphabet has dropped for the first time in April, according to Eddie Q. You don't want to come off, respectfully too, I mean, you don't want to come off as flippant to the issue here
not
by suggesting in any way that what you're saying the issue was before is really in any way equated to what this issue is. We're talking about usage versus an issue, a problem, a momentary problem.
I hear you, and I don't want to get lost in that discussion because the main point that I am trying to say is, as an investor, I don't knee-jerk reaction to anything. And if that's a mistake, if that hurts my results in the long term, I will take it. Because in my opinion, relative to the style of investing that I do, thoughtfully thinking through next actions matters more than just knee-jerking out of it. That's my main position.
Let's hold on one second. Let's also just flip this forward, because, I mean, the Alphabet reaction speaks for itself. The stock's down 8%. A big move. You just don't ordinarily see something like that outside of a time of greater market upset like we had post April 2nd, obviously. The Apple angle here is significant, too. I want to get the take. I'll give you, Jim, the first crack on this side of the story. Because if you're going to be talking about a services business that is, already, in the current environment, I think there's a little bit of concern there, as Steve was suggesting as well, what this means for a company whose services business would make the company a Fortune 50 by itself.
Yeah. Look, I've had some difficulty recently digesting the multiple on Apple. I did add to it not that long ago at 189. That addition is in the money right now, but I didn't like what Mr. Q said about, hey, maybe we're not going to need iPhones in a little while. That has my attention perked up. It's honestly, to me, I'm more worried about Apple in this news than I am about Alphabet. I mean, look, obviously, and as is usual, I'm in the minority over here, but that's where my concern is. You want to take the iPhone away? Whoa, okay. See what happens to services then.
I don't know. That might be a little bit of an extreme. I think it's right to be concerned about both. And full disclosure, Joe T added Apple the other day, and it's obviously been awful. And I had some questions surrounding the fundamentals when it did that. But I just think in the case of Alphabet, Josh threw out PayPal as an example. I don't know. Maybe in a worst case scenario, this is more like Motorola. Think about Motorola and what Apple and what Samsung did to it, and eventually where it got to the place where it had to be split up. And that's the point I want to emphasize. Maybe the best thing ultimately is that Alphabet is split up. That might be the best outcome for you as a shareholder.
It is interesting, don't you think, Steve, that, it's been nearly a year since the judge ruled that that Google had acted illegally to maintain a monopoly in the search engine market, and here we find ourselves in a wholly different environment. It just raises some serious questions about not only the outcome of that decision, but whatever remedies are going to be thought about.
Yeah, and Scott, this has been on the table since Google lost the case, and we heard from the DOJ some of their proposed remedies, that this relationship was going to split apart. Again, Eddie Q in the original trial, before the verdict came in, was testifying there to protect these massive profits they're collecting from Google. And then let's talk about the services business. Let's broaden this out just a little bit, because last week we learned of another existential threat after the judge in California ruled that Apple had to start linking or allow apps rather to link out to alternative payments outside of the Apple Store, which means Apple can't get that 30% rake it takes off all those app transactions. Sometimes it's 15%, depending on what's going on. And so you have two things going on right now in the United States. You have the DOJ saying on one side that we might bust up this relationship that is just massively profitable for Apple, and they're going to have to find alternatives that we heard Eddie Q talking about, saying it literally keeps him up at night because this relationship might go away. And then you have the App Store model on the other side that is under threat. Right now, Apple, for the very first time, is fully complying with the court's order as it goes through this appeals process. We've already seen companies that have been the biggest agitators of the Apple ecosystem, App Store model, come out. Spotify put out their update last week. You can now go into the Spotify app, skirt Apple's payment system, and subscribe just like that. That's something Spotify's always wanted. This all came from the Epic Games case, and Tim Sweeney, the CEO over there. Fortnite is going to come back to the App Store this week, he says. They're going to go around the App Store payments, and if they can get a sort of critical mass of these apps and developers who find a way to get around those payments that they've been paying to Apple, that is yet another existential threat. Forget about what we're seeing in Europe. U.S. is where much more money is spent, especially in gaming, on the App Store. So you have the Google side and you have the App Store side, two huge mega threats to Eddie Q's business. And we see him on the stand today just speaking some truth about how tough this is going to be in the coming years, Scott.
Yeah. Josh, you know, someone we work with is texting me, I think, a good thought that they're likening this to when Disney first said in 2015, when they first mentioned cord cutting, and that stock has not been the same since. If you look at the returns of that stock versus the S&P, for example, it's a pretty telling story. Wondering whether, you know, we could be in for a similar outcome in this instance.
That is a fantastic example. I don't know, who is that, Becky Quick? Whoever texted you that, perfect analogy. Because the cable business for companies like Disney was an incredible business with, I wouldn't say monopoly, but let's maybe say like almost oligopolistic tendencies where the cable subscriber was going to pay $110 no matter what they watched. Disney was going to get its chunk of that $110. The highest ticket item in the cable bundle was ESPN. You could watch 100 hours of ESPN in a month or 0. You were paying for it anyway. And what an incredible business that was for Disney. They had 100 million people basically paying for this service, whether or not they used it. That's a great analogy because it's not that Disney went away. It's not that people don't watch ESPN. It's that cash cow of the automatic, the guarantee, is what's went away. Now you have 50 million, maybe 40 million cable subscribers, and the one thing you can guarantee alongside death and taxes is that with every passing year, that number's going lower. We'll never go into reverse. Disney is still competing, and in fact, this morning had an upside surprise in the amount of people buying a streaming subscription. But again, that's back to 2015. It's 10 years later, and they're still locked in this battle that they never had to worry about.
To your point,
with the Alphabet situation, it was a delayed reaction, but now we're here.
To your point, it wasn't Becky, by the way. It wasn't Becky. I'm not going to reveal my sources.
I'm teasing.
It was Becky. I know.
Okay.
We love you, Becky. On Disney, by the way, shares are flat versus 10 years ago. To just give you an idea of what that stock has done versus an S&P, which is up more than 200% over that same period of time.
Well, look, and first of all, when I said Motorola is an extreme scenario, obviously I'm joking about that. But I do think the company might be better off being broken up. And I think, to what Josh is suggesting, Alphabet has to recreate themselves now if they're actually going to lose that cash cow business. There has to be something that they're going to evolve, they're going to innovate over the course of time. I think the company's in a good enough place that they're actually going to do that. I'm also sitting here wondering, what is, conceptually, what does this do to the investment philosophy surrounding the Mag 7? Because it seems as though the Mag 7 is just beginning to really deteriorate, whether it's Tesla, which is broken down significantly, or it's now Apple breaking down, or it's Alphabet as well breaking down. I think, you're literally looking at, okay, I've got Meta, I've got NVIDIA, maybe Amazon wants to come along for the ride, but other than that, I don't think it's as strong as we thought.
I don't know. Microsoft's only 7% off.
Yeah, but Microsoft spent the entire year last year.
Can I throw one thing in here?
Hang on, Josh. One more thing in here? You can in a minute. Okay. Hang on.
The irony here, though, Scott, is that this is actually representation of AI working for consumers, that consumers are adopting AI as an alternative, and yet we're questioning the Mag 7, who has spent a significant amount of money on AI, and yet they're still behind potentially.
I'm not questioning the business model. I'm questioning just the investment philosophy.
But I am. I'm telling you, I'm questioning if there are going to be other ways to monetize AI, which we've been talking about as a threat to the Mag 7 for the last 18 months.
Josh?
One underappreciated thing about just the fall in search in general that may become a bigger story away from AI, or maybe AI is playing some role in this. People forget one of the things that has helped Google destroy multiple earnings calls, just have these huge upside beats on search revenue over the last few years in the post-pandemic is travel-related search. Travel is such a huge category. Think about every trip you've ever taken, whether it's business, pleasure, whatever it is. There are some analysts saying that search revenue, as much as 13% has been made up by travel-related searches. One of the things that we keep hearing is that travel overall is down, partially because of the state of the economy and the more uncertain consumer, and partially because of all the trade war stuff. That's now a Google search problem. They may not have that travel boost to help them exceed earnings in the coming quarters, even if you didn't also have this layer of the AI market share threat.
Steve Kovac, I'm going to give you the last word, and I guess we can look ahead to what is almost a month away from today, and that's WWDC, when you and me are going to be out in Cupertino. Yeah, and this is now an overhang on that event that we'll want some answers to.
It's an overhang on the Google Developers Conference, too, which is coming a couple weeks before that. So from the Google I/O event, I'm going to be looking for any indications that they're redesigning the Google search experience to really take advantage in a better way, in a monetizable way, around this Gemini search. Right now, it just kind of parks at the top of your search results and doesn't do much else. And you still, to Josh's earlier point, have to scroll and do a treasure hunt to find what you're actually looking for. What are they doing to make that core search experience better? And then on the Apple front, we know how they've whiffed on artificial intelligence. There's immediately going to be a much more skepticism around what they show, because what they showed last year, much of it did not materialize. At least the most important part was Siri's update didn't materialize. So how do they kind of steer that ship around and really tell a story, and a provable story, that they have their hands around this artificial intelligence moment, whether that's partnering with like EduQT's, or Perplexity, or another AI company, or building it in-house, which they still haven't proven they have to do. So a lot more to watch in the next month or so, Scott.
Yeah, good stuff. Really surrounding this big story today. Well, guys, thank you. Steve, thanks to you. We'll certainly hear more from you as this day progresses. We'll watch those shares of Alphabet as well. Lows of the day. We're going to take a break coming up. We do have more earnings to discuss. There is Disney to talk about. There's Uber. Josh has also a sell in terms of a committee move. Jim has a couple of buys. We'll do that all next.
QX80, you are cleared for takeoff.
Why go commercial when you can have all the comforts of private? The all-new Infiniti QX80.
What does it mean to live a rich life? It means brave first leaps, tearful goodbyes, and everything in between. With over 100 years' experience navigating the ups and downs of the market and of life, our financial advisors will be there to help guide you through, so you can move ahead with confidence. Because with all you've done to find your rich, we'll do all we can to help you keep enjoying it.
With the president pressuring the Fed to cut rates and the outlook uncertain, how will the Fed balance the threat of lower growth and higher unemployment? Fed Chair Powell's message to investors. Power Lunch, today 2 Eastern, and streaming on CNBC+.
So many in this business try to scare you. We try to give you the confidence to do it yourself.
I feel like I'm always on top of things because I know Jim has my back.
You can feel confident through the highs and the lows.
Get invested. Join the club today. Go to cnbc.com/join.
Modern home security, my tale. What's Simply Safe got that I don't?
24/7 monitoring that acts on an alarm in 5 seconds to help stop crime in real time.
Stop. This is Simply Safe. Police are on their way.
Plus no contracts, ever.
Maybe Simply Safe and I could work together.
Scaredy cat.
There's no safe like Simply Safe.
Ring, make it, ring, girl, make it.
You again. Everybody's loving that Grubhub deal with Prime, huh?
Amazon Prime member? you can get $0 delivery fees on Grubhub. Go to Amazon.com/Grubhub, activate your free Grubhub Plus membership, and start ordering with $0 delivery fees on Grubhub for top restaurants and your go-to spots. Eligible orders only. Terms and additional fees apply.
Should we just start carpooling?
If I can control the radio.
Never mind.
All right, welcome back. Our chart of the day today is Disney. It's up 10.5%. As you see, earnings beat. They did raise their guidance. They did see a surprising uptick in their streaming subs. Not very important there. They announced a new theme park plan for Abu Dhabi. So there's a lot to consider. You saw enough. You bought more of this stock.
Yeah, and not being sarcastic at all, but I'm going to stay in the moment. 10 years is 10 years, all right? In the moment, I see a lot that I like here. I see that the experiences business is hanging in there despite a tough environment for the consumer. What I heard on the call today is they don't see weakness in the consumer. That's good. Also, what matters to me a lot, and I've said this for a while, is the streaming business, which granted the profitability at around $350 million for the quarter is small relative to the overall company profitability, but the growth rate is very large. It's much better than expected. We know about cord cutting. Streaming is rapidly replacing cord cutting. I like the idea of the Abu Dhabi experience that they're going to be building out. I like that we're going to get some news next week. You don't have to wait too long on ESPN streaming, what that flagship product is going to be, what it's going to cost. I like what I see here at this price.
Guess what, Jimmy? I absolutely agree with you. I think this is a fundamental inflection point for this company.
Are we all laughing at that setup?
I agree with you, for sure. Listen, you had streaming, the subs on streaming was strong. We understand that. Here's the best thing about this is that sentiment and positioning has been depressed for so long. And that allows for the opportunity where you begin to get the reversal, you begin to get the build. In a lot of portfolio manager portfolios, you'll see this name being acquired. I like what I see here.
All right, there are two stocks that I want to talk about next are linked because they just made your best stocks list. Best stocks in the market right now, Josh. Uber and CrowdStrike. So CrowdStrike reaffirmed their guidance. They say they're going to cut about 5% of their workforce, the stock down about 2%. So there's that. And then there is Uber, which beat, their revenues did miss. And the comments from the CEO, Dara Khosrowshahi, about autonomous, calling it the single greatest opportunity ahead for Uber, needs to be discussed as well. What about these two stocks? Why'd you add them to this group?
Well, these are two long-term holdings of mine. I've been in both of them for years and years, and they happen to have hit the list quantitatively. But let's talk about CrowdStrike first. So this is one of the best performing stocks of the year already, not just tech stocks, but throughout the entire S&P 500. They had a lot of ground to make up for, and they have. The stock basically got right back to where it was prior to the outage, the IT outage last summer. So now it's like that's never happened. They just reported a 23% increase in the only number that matters, which is ARR, annually recurring revenue. That's how these stocks are valued. They're now at $4.24 billion in ARR as a run rate, and it was a 31% increase in subscription revenue. The stock is 26% above its 200-day. So firmly in a long-term uptrend, even with this small drop today. I think if you want to risk manage the position as a trader, you'd look at that 390 level. But again, this is an investment for me. Another unbelievable quarter for one of the greatest companies in tech. I'm staying with it. You want to do Uber, or you want to? Where do you want to go?
I want to go to Deirdre Bosa because we thought the Dara comment set up a good conversation about the race to autonomous, really, between Uber and Tesla, which, Dee, you're thinking a lot about if, there's going to be a winner, if there needs to be a winner, and who it might be.
Right, and is this the winner-take-all market, which Dara Khosrowshahi he talked about? But first, let me get to the different strategies, because Uber and Tesla are betting on AVs in very different ways. Elon Musk, of course, he wants to own the entire stack, the cars, the technology, the robotaxi network. Uber, on the other hand, remember, it sold off its AV unit years ago, so now it's positioning itself as the platform for the robotaxi industry. In other words, the middleman that connects users to whichever app that they want. That narrative certainly has been working this year. It was more of a threat last year. Uber shares are up nearly 40%. But here is the risk, and it has less to do with Tesla, more about the biggest most advanced player right now. That is Alphabet's Waymo, and Uber's relationship with Waymo is limited. So they're partnering in just a few markets like Austin and soon Atlanta. Everywhere else, Waymo is either going direct through its own app or working with other partners, proving just how replaceable a rideshare platform like Uber can be, even the biggest rideshare platform in the world. That brings us back to Tesla or another competitor like Amazon Zoox, for that matter, which is expanding rapidly. They can and they are building their own ride-sharing apps, giving up less margin. And even, as I know Josh believes, that Uber can deliver things like fleet management that AV native players don't want to do themselves, there's a number of upstarts here to choose from, which Waymo already is choosing from. So put another way, Uber's embracing a robotaxi future. Yes, that's positive. That sounds good to investors, but that might just be talking up its own disruption too. You look at those comments from Dara Khosrowshahi this morning saying that, you know, the Waymos are outperforming human drivers. You don't think that's happening in places like here in San Francisco or LA where Uber's not a partner?
Good points. Of course. Josh, comment?
I've been saying this since the 40s. I said it when the cyber taxi announcement first happened last April and dropped Uber into the 50s. I said it again in October when that insane cyber taxi event took place. I still don't quite understand what we saw. And I'll continue to say it because it's the most obvious thing in the world to me, and I don't understand why it's taken the market so long to figure this out. The market is starting to figure it out. That's why the stock went into the earnings report up 42% year to date. But whatever, it took a while. Consumers,
but Josh,
consumers
what about the
are
Waymo
not going to
piece?
have. Well, that's what I want to talk about. Consumers are not going to want to have 10 different mobility apps. So what I think the market is realizing now is that the only thing the consumer cares about is price, convenience, and speed. And so they'll have the Waymo app. They might also have the Cybercab app. But the Uber app is going to be the hub that gets them the driver fastest. They don't care at a certain point. Is it autonomous or a human? It doesn't matter. Just get me the car for the right price right now. And that's the strategy that Dara is pursuing. He was the CEO of Expedia. People didn't want to go to 10 different hotel websites. They wanted to see all the prices in one place. Dara understands that, and he's going to be the one that helps all of these upstarts reach profitability faster because all of their cars are going to be available through the Uber app.
Dee, real quick, and I got to bounce.
I would just say, I mean, if you think that there's going to be 10 different AV robotaxi apps, but you know, the way that it's trending is you have to be extremely well capitalized. You have to have a safety record. There's really only one right now, and that's Waymo. Amazon Zoox, maybe Tesla, starting very, very small. But if Waymo is able to scale and expand the way that they have been planning and releasing over the last few months and weeks, then I think that could be a significant threat.
All right, good stuff. Dee, thank you very much. That's Georgia Bosa joining us. So we're going to take a break. We'll come back. I'm going to tell you about the name that Josh Brown just sold, a name or two that Jim Lebenthal has added. Plus, we think we found what might be a catalyst for stocks. We'll tell you what it is next. We'll get the headlines now with Courtney Reagan.
Hi, Scott. Russian state media reporting Chinese President Xi Jinping has arrived in Russia for his 11th visit. The Chinese leader is set to hold talks with Russian President Vladimir Putin Thursday and join 28 other world leaders for a parade to celebrate the 80th anniversary of the Soviet and Allied victory in World War II. The Kremlin has highlighted Xi's presence as a sign of Russia's growing global influence. Meanwhile, Vice President J.D. Vance said Russia is, quote, asking for too much in negotiations to end the war in Ukraine. At an international security policy event this morning, the vice president said the U.S. would like to see Russia and Ukraine have direct talks, adding he believed it would be, quote, impossible for the U.S. to mediate talks. And Moderna's combined COVID and flu mRNA shot outperformed existing standalone vaccines for both viruses in a phase 3 clinical trial published today in the Journal of American Medical Association. The trial, which was funded by Moderna, showed those who got the combo shot reduced more antibodies by 20 to 40% than those who took the current shots. Halftime report. We'll be right back.
CNBC News Update is sponsored by Morgan Stanley, where old school hard work means bold new thinking.
At Morgan Stanley, old school hard work meets bold new thinking. Partnering to unlock new ideas, to create new legacies, to transform a company, industry, economy, generation. Because grit and vision, working in lockstep, puts you on the path to your full potential. Old school grit, new world ideas. Morgan Stanley.
A major motion picture, an evolution in customer experience, a game-changing approach to golf. Behind them all, advanced 5G solutions from T-Mobile for Business. Disney chose T-Mobile to power real-time collaboration between remote production hubs. T-Mobile fuels Tractor Supply stores nationwide with 5G internet and innovates with PGA of America to elevate the game. Business goes further with T-Mobile for Business.
In our previous home, we had wood, and I never liked it. I wanted a sustainable option, and that made TimberTech the obvious choice for me. I love the indoor-outdoor living. I mean, to be honest, the decks made it even better. I'm so happy with it.
This is my coffee shop. We just moved into a bigger space, brought on another employee, and ordered new branded gear for the team. It was so easy. I just chose my products, added our logo, and placed my order. Bring your own team together with custom gear. Get started today at customink.com.
We empower those who act. Those who see the correlation between predictability and probability. Those who manage risk by anticipating each movement. Flawless execution, timing, and accuracy. Identify the goal, match power with precision, reach new heights. CME Group, where risk meets opportunity.
I'm a photographer and small business owner. Every day I use American technology and artificial intelligence to run my business and edit photos. American innovation is essential to small businesses like mine. That's why I'm proud the U.S. leads the world in developing open source AI solutions. This game-changing technology is making us smarter and more efficient. American innovation is supporting millions of jobs and powering our economy. Our leaders in Washington must protect our competitive edge.
Breaking earnings news. Disney, Novo Nordisk, Warner Brothers, Coinbase, reporting, market reaction, expert analysis, strategies for your portfolio. This week on CNBC and streaming on CNBC Plus.
All right, let's do a move from Josh Brown. Wow, you sold Reddit. Tell our viewers why.
The stock bounced with the rest of the high-growth tech names throughout the course of April after obviously selling off with tech starting in February. And I just looked at it and I said, you know what? It was a good earnings report. Actually, it was a great earnings report. There wasn't a crazy reaction to it. And if I'm bearish on Google search trends, you know, the fact that Reddit has been so highly placed atop Google search over the last couple of years is really one of the most bullish things to happen for the company. So it's hard to, like, there's a little cognitive dissonance there to be bearish on Google search trends, but bullish on Reddit getting an increasing amount of revenue from appearing highly ranked in Google searches. So it was just a little bit messy for me mentally. I took it off the table into the rally. I did okay. I should have done better, but it's not off my radar. I'm still going to follow the name, and I might come back to it in the future.
All right, on your radar is Vertex. Jimmy, you bought more.
Yep, I've owned it for a little while now. Stock had a very disappointing reaction to earnings yesterday. Now, they missed. And when a company misses, you have to ask yourself, what happened? Is there something systemic wrong here? And I don't think so at all. There were some copycat drugs in Russia that illegally cannibalized some sales of their main cystic fibrosis drug. Their existing franchise in cystic fibrosis is very strong. The new pain medication is getting picked up quickly. And they've got a lot of shots on goal coming with new medications for things like diabetes and kidney disease. This is one I'm very comfortable holding for the long run.
All right, thank you. Down 3 1/3% today. We'll take a break. We'll come back. We'll tell you why buybacks are booming and what it might mean for this market from here. We'll name names next.
How will you shape the future of consumer products and retail with confidence? Behind every favorite product or seamless checkout, there is a series of strategic decisions to make.
Consumer products clients are relentlessly focused on driving profitable growth, innovation within their core portfolio, but also thinking new ways of driving new revenue sources from adjacent businesses.
EY teams bring real-time insights and deep sector expertise to the moments that matter.
The ability to truly provide personalized experiences requires an understanding of all channels of consumer behavior across social media, e-commerce, in-store.
How will you inspire loyalty, better use data, and innovate your brands and experiences? Whether it's untangling global supply chains, managing cost pressures, or leveraging emerging tech to create consumer value, EY's full spectrum of services help CPG and retail companies deliver profitable growth. EY, shape the future with confidence.
At Interactive Brokers, independent RIAs work with the best research and trading tools designed to help them outperform the markets. Meet them at Interactive Brokers Investors Marketplace for advisors. Advisors at Interactive Brokers keep all they earn on our low-cost platform, with no ticket fees or custody charges, low margin rates, and high interest earned on idle cash. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
I get my ideas for Mad Money everywhere. I look at everything as a stock. I study it all the time. My viewers are my bosses. You come to my show and you learn how to do stocks.
Mad Money, weeknight 6 Eastern, CNBC.
I love the viewer. It means everything.
June 5th, CNBC's Fast Money Live returns. Join Melissa Lee and the team of traders live and on air at the NASDAQ market site in New York City. Get your tickets now at cnbcevents.com/fastmoney.
Do you want me to come weekend?
Okay. Okay. All right.
Good thing Dash Pass saves you money on DoorDash, so you can skip the trip to the grocery store and focus on what really needs saving. Your sanity. With savings on groceries, you can afford to give yourself a pass. Dash Pass by DoorDash. Your door to more savings.
From Rose Bowl festivities to Major League ballparks, ESPN Experiences takes you behind the scenes and inside the action. Next stop, the Travelers Championship. Your all-access pass starts here.
Been asking the question, what's a catalyst for stocks? How about buybacks? Because they are booming. The FT says U.S. companies plot $500 billion in share buyback spree. The April estimate of $234 billion was the second highest on record. Is this a place to look now that earnings season is coming to an end? The window is open, so to speak?
Yeah, I think it's important to look at buybacks. You can think about, prior to the pandemic and the stranglehold that the Mag 7 essentially built on the S&P 500. That was on the back of buybacks. And so there's a lot of opportunity here. What you really need to look for, though, is you need to look for a combination, in our view anyway, of strong free cash flow and a light tariff touch. Because we haven't talked about tariffs all day, Scott, but they are the rationale for many of these companies that have pared back or canceled their buybacks over the last couple of weeks.
Look at the announced buybacks already. We made a wall to show you the big name companies that have done so. Apple, Wells, Visa, Delta, 3M, Shell, Lilly, Chipotle, Arista. Joe, you follow this pretty closely.
I do. Over the last 5 years, the S&P buyback index, which measures the top 100 companies in the S&P that the highest buyback ratio has outperformed the S&P by about 10%. I think the environment we're in right now benefits buying back shares because the CFO who's looking at the environment says to themselves, well, okay, originally I thought I was going to be able to execute some M&A. Really not going to be able to do that right now. Let's go in, let's buy back some shares, maybe return capital to shareholders as well. So I think it's really more a casualty of the environment.
All right, we'll take a quick break. We come back to talk once again about Berkshire's next chapter. We'll talk to forever shareholder Josh Brown. He'll weigh in on what he thinks it means for a stock he has owned, as he says, forever. Next.
Guys.
This is the start of a cyber attack.
That is not good.
What? Reach.
When? Never mind. I'll be right there.
Yep, ransomware. And this is the chaos it causes. But what if you could rewind to before the attack? Commvault recovers not just your data, but your business 10 times faster.
Like it never happened.
It's the fastest, most complete recovery anywhere, so you can be a continuous business.
I like things personalized, like my coffee. So when my doctor prescribed Vyvgart Hytrulo self-injection for my generalized myasthenia gravis, we personalized my treatment goals.
Vyvgart Hytrulo can improve daily abilities and reduce muscle weakness.
It's my treatment, my way.
Vyvgart Hytrulo for Weekend Away Steve.
It's travel ready and can go where I go.
Self-injection fits my plans.
Do not use Vyvgart Hytrulo if you're allergic to its ingredients. It may increase infection risk and cause serious allergic or infusion or injection-related reactions. Tell your doctor if you have an infection, fever, recent or planned vaccinations, allergy history, or kidney problems. Most common side effects include respiratory and urinary tract infections, headache, and injection site reactions.
My Vyvgart Hytrulo self-injection.
Reducing my symptoms.
That's treatment my way.
Ask your neurologist about Vyvgart Hytrulo.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
Introducing AG1 Next Gen. The daily health drink backed by 4 rigorously designed clinical trials. Next Gen is clinically shown to increase healthy gut bacteria by over 10 times and to close common nutrient gaps. It's one drink for whole body health. The next generation of AG1 is here.
We just signed the lease on our 3rd shop. My assistant went to CustomInk.com to get new uniforms with all the locations. He found great products, uploaded new art, and had boxes sent to all the shops. Custom Ink makes it so easy. Get started today at CustomInk.com.
Apartments.com gives landlords the tools to manage your rentals with ease. It's like having a whole team of yous.
Hey, Jim.
Keep generating that lease, Jim.
I'm sorry, what's in the microwave?
Apartments.com, the place to list a place.
All right, Josh Brown, we never got your take on the GOAT making the announcement that he did this prior weekend, saying that he's going to step down as CEO at the end of the year. You own the stock, have for a long time, and I think we're pledging to be a forever shareholder. What do you say?
Yeah, I remember distinctly conversations 15 years ago, people saying, well, they're in their 70s, they're not going to live forever. So this has been an overhang over the stock for a long time, but it hasn't really mattered because it's one of the best performing names of the last 1 year, 3 years, 5 years, 10 years. And I think for people like myself, the only thing that's worth saying at this point is this is as good of a transition, of a succession plan as I have ever seen executed anywhere at any company. And it wasn't sudden, and it's not an illness, thank God. It was something that they painstakingly did over the course of 10 years, introducing the concept, who the people would be, bringing in portfolio managers, making sure Ajit Jain is there, now letting Greg on stage for the last couple of years, and they pulled it off. The stock made an all-time record high, and it's hanging high still. And as a forever shareholder, could not be happier. My hat is off to the GOAT. I would say he's on Mount Rushmore, but there's nobody else that would belong on there with him. He's a one of one. We all know it, and that's where we are.
All right, good stuff. We'll take a quick break. We'll come back with finals next.
Not all multimillionaires build their wealth the same way. You have
the fearless investor,
the type A CPA,
the bootstrapper, the boot maker.
Yeehaw.
But many do have something in common.
We all trust Schwab with our wealth.
Thanks to our award-winning service, low costs, and transparent advice. Every day, over 1 million multimillionaires trust Schwab with $3 trillion of their wealth.
did it. You took an idea on a napkin, built a successful business, and made it look easy. But at U.S. Bank, we remember what went into getting here. The hard work, self-doubt, tough decisions. From all those extra hours to finally enjoying the rewards. Our wealth management team is always here to work with you and every generation to come, because there's nothing as powerful as the power of us.
We put our heart into everything we do. We are farmers, bakers, florists, and makers who grow and create with a passion. Made with love at every step of the way. Because at the end of the day, we know you're sending more than a gift. 1-800-Flowers, share with love.
From the #1 rated brand in cordless outdoor power, the Ego zero-turn riding mower with E-Steer technology drives like a car, turns on a dime, delivering ultimate control with the precision of a steering wheel. It's weather-resistant, and with 22 horsepower, it cuts up to 2.5 acres on a single charge. Powered by Ego's patented 56-volt arc lithium battery technology, the same batteries used on all Ego tools. Find an Ego retailer near you.
Hold on.
You're still purchasing your lenses from your optometrist?
What are you doing? Come on.
Walk with me to the glory that is 1-800-Contacts.
It's quick.
Affordable.
Easy to use. It'll take you 5 minutes. You've got 5 minutes.
And your order's on the way.
It's like a box with a cape that shows up in your mailbox.
1-800-Contacts.
Right now, you can save 20% on your first order, plus fast free shipping right to your door.
Nobody's born with grit.
Rose is really struggling.
It's something you build over time.
It's 21 missed cuts in a row.
For 89 years, Morgan Stanley has offered clients determination and forward thinking to create the future only you can see.
Rose, back in the winner's circle.
Is this how you're hoping to retire? Well, hope isn't a good retirement strategy. You've worked for a comfortable retirement for years. Now you need to plan for retirement income. Learn ways to avoid common mistakes, like being too conservative or not setting retirement goals. Have someone on your side to keep you on track.
Call for Fisher's Comfortable Retirement Kit with the help you need to make your retirement a success, including the Investor's Guide to a Comfortable Retirement, 13 retirement blunders to avoid, and maximize your Social Security. Call 1-800-759-4477.
Fisher tailors a plan to keep you on track for a retirement you want. And as a fiduciary, we do better when our clients do better.
Call now for your Comfortable Retirement Kit. Call 1-800-759-4477.
Call us today. You don't have it coming to you unless you plan for it.
If your portfolio is $1 million or more, call 1-800-759-4477.
Do you want to know where to invest $1,000 right now? Well, forget about AI, quantum computing, electric vehicles, cryptocurrencies, or robotics. A little-known technology is expected to become roughly 10 times bigger than all of those technologies combined. The World Economic Forum says that it's arguably the most exciting human discovery since fire. Hi, my name is Whitney Tilson. I'm a former hedge fund manager. I've been featured in virtually every single major financial publication and TV show. Now I'm stepping forward with what could be the biggest story of my career. One market insider predicts that this technology could be even more important than the Industrial Revolution. And I want to give you, free of charge, the name and ticker symbol of the company at the center of this technology. Simply visit the website on your screen to secure your free recommendation now.
Our new book shows you how our simple option strategies offer you a lower cost way to trade stocks with limited downside risk and remarkable upside rewards. Get your free copy today at itsnotanoption.com. That's itsnotanoption.com.
This thing is so good for your gut health.
I used to have a collagen, I used to have probiotic, a green juice. I replaced it all with this Arma colostrum.
My hair has gotten so much thicker ever since taking it.
All right, how's this for an afternoon? Fed decision coming up, then the news conference, then Jeffrey Gundlach right here at Post 9 in person for our exclusive get-together on Fed Day. We'll obviously track where Google's going, Alphabet. Where's it going to close? We will find out. Josh Brown, your final trade is what?
Shaq reported last week they'll open 40 to 50 new company-operated stores this year. I'm bullish, I'm long.
Farmer Jim.
Wynn Resorts, the international expansion is making this company a growth stock.
Shan?
Financials, lack of new regulation is a driver here.
And Joe T.
Spotify, another all-time high.
All right. Big afternoon coming up. I'll see you on the bell. The exchange is now.
Thank you very much, Scott, and welcome to the special Fed edition of The Exchange. We're live in Washington, D.C. I'm Kelly Evans, and we do have a big hour ahead with a lot of special guests sitting around me here who can dig in on tariff deals, tax deals, and what the Fed will do in the meantime. Their rate decision is due an hour from now. Stocks are largely in a holding pattern right now, a 1% gain for the Dow, 0.5% for the S&P, fractionally lower for the NASDAQ, and the two-year Treasury yield is a touch higher, while the 10-year yield has slipped back below 4.3%. Treasury Secretary Bessent and his Chinese counterpart are scheduled to meet in Switzerland this weekend. Our China watcher says there's too much focus on the wrong issue, has a little bit of a warning about this confab. He'll join us on that ahead. And we'll hear from both sides of the aisle as the battle to pass the budget bill heats up this week. Before all of that, though, let's begin with CNBC senior economics reporter Steve Leisman, who is across town with the setup for the Fed decision. Hi, Steve.
Hey, Kelly. Yeah, markets looking to the Fed for some clarity, some assurance about whether there's a way to rate cuts despite the potential inflationary threat that could be coming from tariffs. Here's the key to the Fed meeting today. The tariffs levels remain greater than expected, even with the April 9th delay or rollback by the president. The soft data, well, it's cratered pretty hard, but the hard data has held up pretty well, the jobs report being the best example of that so far. So leading to the question, does the Fed lean toward inflation or the recession risk in its outlook? The last statement emphasized the uncertainty in that outlook, but the most important line read, the committee is attentive to the risks to both sides of its dual mandate, as in straight down the middle. That, of course, keeps the door open for rate cuts, but doesn't promise them, at least until it's clear, which side of the inflation employment mandate needs urgent care the most from the Fed. Goldman Sachs writing, both elevated policy uncertainty and the likelihood of higher tariffs and higher inflation this year mean that the normalization cuts that the FOMC participates penciled into the dot plot at the end of last year now look further off. Well, futures markets, they continue to look for 3 cuts this year, one in July, September, and December. But note that markets have shown they adjust to the incoming data. The first cut, it was firmly priced in for June. Now it's just at 30%, and it's shifted towards July. So markets, they've come to the grips with the idea that the Fed is not moving preemptively at the very least, and that at some point the Fed will have to make a decision on the direction of the economy and the right rate level. We'll see if they're leaning either way, Kelly, in just under an hour.
What are the odds for a rate cut today, Steve? I imagine they're close to zero.
I believe they were so low, Kelly, I didn't even look at it, but I'll look at it right now. It is 1.9%. So somebody's holding out hope somewhere. I don't know who that person is, but give me a call.
Steve, thank you very much. Our Steve Leisman. We'll see you at 2 p.m. And let's bring in our panel now. Crowding in here on set with me in Washington today, Harris Financial Group's Jamie Cox is with us, New Century Advisors economist and creator of the Somm Rule, Claudia Somm, TD Cowen's Washington strategist, Chris Kruger, and the Wall Street Journal's Greg Ip. And it's really great to have you guys all here. Very, very much appreciate it. And it's going to be, there's a lot happening. There's maybe a papal decision at the same time, the swearing in of the ambassador to China, Chris. So where is your attention most directed?
I mean, I think it's still with tariffs, right? There are 4 big sections of tariffs we're watching. You still have the Canada-Mexico tariffs, USMCA, no real clarity on that following the meeting with Prime Minister Carney. Then you have the China tariffs. Maybe we'll get something on that this weekend.
Did you think that was a big deal that they're going to be meeting in Switzerland?
I think it was sort of a question of when, not if. At least we know part of that now. And we'll see as we go forward. But I mean, 145% baseline just wasn't sustainable. So we'll see as that unfolds. Number 3 are the sectoral tariffs, right? Steel, aluminum, autos, pharma, et cetera. And then finally, the reciprocal tariffs. So there's a lot to unpack. That is really where a lot of our clients are asking questions on, and just sort of getting those timetables and where could we end up.
Does it overshadow the Fed, Greg? You know, the focus turning towards what happens at the meeting this weekend, or even just some of the data the last few days being strong? Is it almost kind of, you know, they're not going to react to that? They're probably still thinking of the data maybe 2, 3, 4, 5 weeks ago.
You certainly have to care about the tariff news because that establishes the baseline for growth and inflation activity this year. But absolutely, we care a lot about how the Fed responds to that information. It's very, very important. In fact, it was just a few weeks ago that we saw the markets sell off on the perception that in his public remarks, Powell was leaning towards taking a tougher line and worrying more about the inflation consequences than the growth consequences. That's what I'm going to be watching most closely for what comes out of this meeting this afternoon. And I will say that irrespective of anything happening on the tariff front, the inflation news, in my view, should be pointing the Fed in a more dovish direction. We've got a very good CPI, a very good PCE price print for the month of March. The wage number for April, one of the lowest in quite a few years. If you didn't think that tariffs were an issue, you would feel very comfortable with where the inflation picture is going.
Are those too backward-looking in the sense that if some of the ISM indices showed really high prices paid and that kind of thing, so is it coming still, some of those price pressures?
Think about the inflation outlook as 2 chunks, the baseline and the tariffs. And whatever the tariffs are, which were somewhat, you know, a function of whatever Trump feels like tweeting out this morning, the baseline matters, right? The lower the baseline, the more comfortable the Fed can be and not overreacting to the tariff news, and by the same token, being more cognizant of the downside risks to growth.
All right, and so, Claudia, you're on our mock Fed panel. Do we call you the chair of the panel? I mean, we cannot officially make you the chair. Sure. It's just interesting to think about the dynamic where we have now a couple of members, Zervos yesterday, joining those who are calling for a 50 basis point rate cut. But in all seriousness, you don't think they're going to move this meeting. But which way do you think that bias Greg is talking about? Is it more on the inflationary side or growth side, and which way on the inflationary side?
Well, a piece I would add to what Greg said about the baseline being important, another piece of it that is really relevant to the Fed is the fact that inflation has been elevated above the 2% target since 2021. And so it is appropriate for the Fed to be putting a risk on this more persistent inflation, that this is a scenario in which you could imagine it becoming embedded. So, you know, I understand why the Fed is on its wait and see at this moment. And really, a lot of it comes back to these are very large tariffs. These are disruptive levels of tariffs. And so, and not something that we have a lot of precedent with. So they want to see some of this flowing through into the economy before they start adjusting policy. So they don't have to reverse course and start raising again. So
you're sounding a little hawkish to me. This is what the market is worried about, is that it's going to be a hawkish hold today, that the rhetoric and the discussion is very much around, you know, let's wait and see just how bad the inflationary impact might be.
So I mean, I am fully on board with both sides of the dual mandate. I think Powell and this Fed has proven that they are as well. It's just the circumstances are driving. Like, it's being aware of these really abrupt policy changes and making sure that the inflation doesn't get out of hand. Now, what I want to see from the Fed today, and to keep telling us, like, what are you looking at? How are you making this assessment? Because our baseline should be inflation induced by tariffs, temporary, adjust to the growth effects. So don't tell me you're going to wait to see, you know, months and months and months of CPI to make that decision. How are you using the survey data, the expectations, the soft data? Like, what are you looking at to make that assessment? Because timing matters with monetary policy. If they wait too late, they have much less ability to either support the economy, support employment, or fight back on inflation.
It's so hard to know and to be sure. You know, as someone who's always said, oh, they're behind the curve, I love to make that point. But I understand why they have to wait a little bit and say, for instance, on the employment front, we all expected a little bit more of a slowdown there, but we're just not really seeing one yet.
Mm-hmm. Right. We're really in the early stages of this, and and so you have to have a sense of what the policies are, have some judgments about where the policy is headed, and then you do have to look for the early signs of this working its way through the data. And so it will be subtle in some cases to start with. So I understand the data, but they need to have kind of a plan as to what they're looking for, as opposed to, we have the luxury of time. We're just going to get more data. Like, they really don't have the luxury of time. But this is a difficult decision, and you want it based on some evidence, particularly because we know they're going to come under all kinds of criticism regardless of what they do. So it's like, show your homework.
Sure, under extra scrutiny, show your homework. So Jamie, we last talked a couple of weeks ago when your clients, and you were saying first they were calling you and you were reaching out to them to talk about how to take advantage of the market dislocation. A lot of them actually were pretty optimistic at the time, and that has paid off. So what do you make of the fact that we've come pretty much all the way back from the big sell-offs of early April, and where does that leave us?
You know, as I listen to everyone talk, you know, and keeping with the Latin theme, it's acta non verba, which is deeds, not words. And I think that's kind of where we are. We have a lot of words, but not a lot of deeds. And I think Claudia talked about words and deeds with the Fed, and the other gentlemen have talked about acts and deeds with tariffs. And I think in the absence of any information, we're all guessing. And so a lot of investors, particularly those who are retired or have long-term time horizons, they're just going to look through it because they know that at some point things will get resolved. And if you look back to 2018, 2019, in the first Trump administration, when there were tariffs implemented, you saw lots of headline risk where markets took really steep declines only to have some resolution to some of it and then rebounds. And I think that's sort of what people are using as their template when they're making their investment decisions right now. And also, having gone through the pandemic, people are a little bit more willing to take, you know, look through some of the risks. They can see the other side.
Yeah.
And so, for example, instead of running away from markets, they take advantage of the price opportunities that present themselves in asset classes that they wanted to own.
Right.
And that's what we're seeing.
Which is remarkable. And again, it's paid off at least in the past few weeks. But you wonder at what point does that give almost its own sense of nervousness around, okay, if the outlook is so constructive because employment's holding in there and the market's fine, well, then how much further could this tariff issue go?
Well, you know, we had the earthquake on Liberation Day. You know, the tsunami warnings are out. The water has receded. We just don't know how large the wave is going to be and what country it's going to hit. So until we do, we have to make our best guesses. And one of the things that's happening is that, you know, we're seeing a lot of people take interest out of the dollar into euro. You're seeing lots of different currency moves and things like that. So people were, for the first time in several years, allocating capital to Europe, thinking that there's going to be fiscal, you know, spending on defense and things like that, and taking their money and putting it in places that they feel a little bit more comfortable. But apart from that, it's all wait and see.
Yeah, which I know you spend a fair amount of time kind of going back and forth, having meetings up here and all of that. I mean, what's the foremost issue? Is it trying to figure out what's going to happen with the tax bill and the timing of that?
Yeah, I think so. I mean, we have the debt ceiling coming up, which is a big problem. It's a big
We've
problem
already hit it, right? It's just like the...
Yeah, we were in the extraordinary measure phase of it, but July apparently is the time in which we run out of runway. And I think what it appears to me is that the Congress wants to get things done well in advance of the July, whatever date it is, to prevent any type of dislocations. But who knows whether they'll get it done. One of the things that I hope happens is there's permanence on Section 199A, which is a small business tax cut that was implemented in the first Tax Cut and Job Act. It's absolutely crucial that get, you know, pushed forward. And I've heard the Treasury Secretary talk about permanence, and that's the word I hear over and over again in meetings, that they want the small business deductions to be permanent. How it works, I don't know. But I think that there's broad appeal on both sides of the meetings I've had, both sides of the aisle, to get that done.
Yeah, or I hear, Chris, that, you know, that SALT is the big issue. We obviously know all the fights going on about Medicaid. So how would you score that process at this point of the game? Is it all moving along as to be expected, or are we hitting real roadblocks here?
Well, I mean, I think the process is where it is because the Congress, both House and Senate, have essentially delayed all the hard decisions, right? And that's where the markups next week, that's really where we start seeing the math and start seeing the homework. Right. The only really part of agreement is $300 billion in increased spending. Half of that goes to the Pentagon, half of that goes to border security measures and deportation efforts. So whether it's SALT, whether it's the child tax credit, whether it's corporate SALT, there's an unbelievable amount of work to be done.
What is corporate SALT? Just the fact that it's going to, you know, how to give smaller businesses that relief, or?
Well, no. So, right, with 2017, the individuals are now capped at $10,000, their ability to deduct state and local tax. Corporates don't have a cap. And so while we're trying to, in the House anyway, find $2 trillion worth of offsets, and if you don't want to cut Medicaid, what's left? So maybe doing something with sea salt or corporate salt or et cetera.
Sea salt. Is this Himalayan pink sea salt from, this is getting ridiculous.
Look, I think what people need to understand is that this is literally going to be the biggest piece of legislation in American history by multiples.
What do you mean by that?
The
like
dollar amount, it's all of it. I mean, at a minimum right now, it's $5.5 trillion. Wow. You're talking about some of the largest Medicaid cuts ever, or reforms.
Or maybe not. I mean, are we talking about that?
We're talking about the Inflation Reduction Act again. We're talking about $150 billion in increased defense spend. We're talking about border security measures. I mean, we're talking about every facet of the economy.
Are we still talking about potentially tax hikes on higher earners? Because it's interesting to hear, corporate tax hikes, let's just call them that, and maybe this idea has been floated about using tax hikes on high-income earners to help kind of offset the cost of no tax or tips and so forth.
Well, I mean, again, on the homework side, when the House Ways and Means Committee marks up their bill, we will actually see where these measures are. That's supposed to be next week. It was supposed to be this week. There are really three hard deadlines. You have the debt ceiling, which is sort of late summer. October 1 is when the reconciliation bill expires. And then December 31, when we have the largest scheduled tax increase in American history, when the 2017 Tax Cuts and Jobs Act expire.
And Greg, I admit, I find it hard to characterize the bill other than the budget bill. I mean, because you have people talking about it as stimulus, especially now we're trying to punt on tariffs, maybe pull that forward, make it more stimulative. So I don't know what that means for the deficit impact, but it's not a stimulus package. It's not really tax cut. I mean, I guess but it's extending the tax cuts. There's a deficit implication, all the rest. So it's a complicated thing to even try to figure out in terms of the economic impact.
Well, there's two pieces to it. Of the $5.5 trillion that Chris was referring to, about $4 trillion is simple extension of the 2017 tax cuts. That's not stimulative in the sense that most people assume those tax rates would stay where they were. They won't change their behavior by the mere extension of those things.
Right.
The other trillion and a half, well, maybe that is stimulative. It is things like less tax on tips. It is things like some salt relief. It is things like advanced 100% capital expensing. That one in particular could be especially significant because I believe they're talking about making it retroactive to Jan 20. So I think at least from the Republicans and the White House's point of view, one of the reasons there's a lot of pressure to get that thing moving is they want the stimulative benefits of those portions I just mentioned flowing through to the economy right now as an offset to the negativity on the tariffs. Now, you did mention something else that's potentially important, is that the flip side of a bit more stimulus is a bit more deficit and therefore quite a bit more bonds to sell in the next year or two. And I also think that this is in some sense a little bit of the, it's not a black swan because here we are talking about it, but it's a little bit of a gray rhino out there. We all talk about it. The darn thing hasn't gone charging through the camp yet, but it's sitting out there. Lots and lots of bonds to sell in an environment where we've still got background inflation risk, as Claudia was mentioning, right? And what looks like a slow bleed of investors away from dollar assets. So, I'm the kind of the macro guy. I mean, you've got a lot of people who are much better on the tax than the personal side here. But the macro thing that bothers me a little bit is that Trump inherited a terrible deficit problem from Biden, and I haven't seen much in the way of evidence that he or this Congress are about to fix it.
And we're going to pick up there with Guy Labat a little later this hour. Greg, stick around for that. Claudia, we'll see you next hour. Jamie, Chris, really appreciate your time here for joining us on this panel to kick things off today. And as mentioned, it's been a very busy hour, not least for what's happening right now with some of the major tech companies, and I mean Google in particular. Check out shares of Google parent Alphabet now having their worst day in a year and a half after comments from Apple's services chief, Eddie Q, who reportedly said searches in their browser fell for the first time last month. Outside of Google, no one has better insight into how those searches might be performing than him. Steve Kovac is here now with more. And Steve, it's interesting to watch Apple shares down 1.5% on this and Google almost 8%.
Yeah, and that's because it's going after Google's core business and it's going after the $100 billion services business over at Apple. So let me explain what's going on here with this Q testimony that we just got a couple hours ago. And he really dropped a bomb here saying that, like you said, those searches within the Safari browser dropped in the month of April. And this is kind of the disaster scenario Google watchers have been looking out for. And because Q also said it's largely due to artificial intelligence and that Apple is, in fact, looking at services like Perplexity, the AI search engine, ChatGPT, and Anthropic to inject some AI options into its default search options as well. And this is all coming from that big antitrust trial that Google lost. They're now going over remedies with the court to see what kind of punishment Google's going to have. And one of these punishments could be that Google will have to stop paying Apple up to $20 billion a year to be the default search engine on the iPhone and other Apple products. It's a hugely lucrative arrangement for both of them, but especially for Apple, which basically has to do nothing but sit there and let Google be the default search engine. But by saying this, we see that there is this kind of existential threat becoming more and more clear to Google's core search business as these nascent AI competitors are coming up and taking a lot more search and mind share away. And look, the services business has been a really big bright spot for Apple as we've been seeing so much stagnation in the iPhone business. The services business grows by double-digit percentage points over the last several quarters, but Apple did not give guidance for the services business this quarter. They typically do. They at least say we expect it to grow by some double-digit percentage points. They didn't say that this time, and that between this Google search deal potentially getting blown up and also what we learned last week in the Epic Games case with the App Store pay model getting kind of blown up there as well, there's a lot of pressure on the Apple services business. But again, you're seeing those Google shares fall because we have Eddie Q saying that searches are decreasing, at least within the Safari browser, at least within the iOS ecosystem, and you can see the results there, Kelly.
Yeah, no, and again, I experienced this. I was asking it if it's safe to eat prosciutto, ChatGPT, that is, just last hour. The answer was no. Thank you, Steve. We really appreciate it. Again, some argue this is somewhat self-serving for Apple, given that they're in the midst of this antitrust trial. Nevertheless, the data points stand where they are. Coming up, Treasury Secretary Bessent just wrapped up his testimony on Capitol Hill before heading to Switzerland to meet with the Chinese to talk trade this weekend. What's on the table and what's really likely to come out of those meetings? Dow's near session highs with less than 40 minutes until the Fed decision. Our live coverage from Washington continues here on The Exchange right after this.
Franklin Templeton ETFs. With over 70 ETFs, we have solutions for every market, helping advisors build the portfolios of the future today. Franklin Templeton, your trusted partner for what's ahead.
Custom Ink helps us motivate our students with custom gear. We love how Custom Ink takes care of everything we need so we can focus on the kids.
We make it easy to wow all your groups with high-quality custom apparel, accessories, and promo products, all backed by our guarantee at customink.com.
We love being outside, but the sun makes our deck and patio too hot to enjoy.
Thanks to our new Sunsetter retractable awning, we can select full sun or instant shade.
It's 20 degrees cooler, and you get protection from harmful rays and sun glare.
Call now for this free awning idea kit packed with great awning solutions. Plus, get this $200 discount certificate to get your Sunsetter for as little as $799. Add LED lighting for evening enjoyment. Life is better under a Sunsetter.
Many people swear they've had stuffed crust pizza from Domino's before, so we invited some of them to a little taste test.
Oh, that is the Domino's stuffed crust that you've said you've had in the past.
Where's the pizza?
Domino's has never made a stuffed crust pizza before.
I'm at a loss for words.
Until now, that is. Introducing Domino's first ever stuffed crust pizza. We didn't just stuff our crust with cheese. We use our delicious pan pizza dough and sprinkle garlic seasoning and Parmesan on top. It's Domino's first ever stuffed crust pizza. Try it for the first time tonight.
This is phenomenal.
Socks, underwear, and t-shirts are the most requested items in homeless shelters. Bombas was founded to help, so for everyone you buy, we donate one. One purchased, one donated. It's a tangible act of kindness for those who need it most. Distributed by 3,500 giving partners across all 50 states. And with 140 million donations and counting, the impact is real. Visit bombas.com and get 20% off your first order.
When it comes to clogged gutters, you might say I've seen it all. Leaves, spinners, wiffle balls, you name it. Because any gutter open to the elements is going to gather debris and clog over time. And that can cause all kinds of problems. But get Leaf Filter and the problem's solved.
Leaf Filter's patented technology keeps debris out of your gutters for the life of your home.
It's dependable, proven, tested. Like me.
So when experience matters, get Leaf Filter. Call 833-LEAF-FILTER or visit leaffilter.com.
Welcome back to a special Fed edition of The Exchange. We're live here in Washington, D.C., and markets were jumping earlier on word that Treasury Secretary Scott Bessent and U.S. Trade Rep Jamieson Greer will sit down with their Chinese counterparts this weekend. Of course, they're hoping for a breakthrough in trade talks. The U.S. and China have both ratcheted up tariffs to over 100%, levels Secretary Bessent calls unsustainable and the equivalent of an embargo. But our next guest is warning there are still serious barriers in these negotiations before we get carried away. Derek Scissors is the Asia economist at the American Enterprise Institute. It's great to have you here. Welcome.
Thanks.
So how should we be thinking about this? How are you thinking about it going into the weekend?
Well, there are two good signs. The first one, obviously, they're having talks, which was a surprise until 6 p.m. last night. And second, that Secretary Bessent is meeting with He Lifeng, who is a senior person in the Chinese government. The Chinese could have said, okay, you can meet us with a technical person, a vice minister of commerce. And they didn't. They went to a very senior person in the government. So there's the possibility that they can discuss important issues. Against that, we've seen both sides spend the last few weeks saying, oh, well, they want talks, not us. And it's very childish, really, with all that's at stake. And so if both sides have to come out saying, we won, that makes it much harder. So the first thing people have to realize is it's not just Donald Trump who's prickly. Xi Jinping, the Chinese General Secretary of the Communist Party, is also very prickly.
I think it's interesting what you say here, that there's almost too much focus on tariff levels. Is this playing into, are both sides doing this intentionally? Because I heard this directly from a source last week, that they're cutting deals with the Chinese to get exemptions on imports of U.S. products, because that the Chinese know would harm their economy if they tariffed at levels that the headlines would imply. How much of this is going on, behind the scenes, where there's actually a lot of exemptions on their end, I don't know about on our end, that are kind of the real story while we're all having this like headline fight over what the tariff rates are?
That's exactly right. And it matters whether the talks succeed or fail, right? So everyone's focused on the talks, but the exemptions happen before the talks, and they could happen after the talks. The Chinese are talking to their firms about, well, what do you really need? Well, we just won't count that. And they're not going to publish a list because it would make them look like they need stuff from the U.S. The U.S. has already said, well, semiconductors and consumer electronics, we won't count those. And we're going to have separate sector investigations, and they won't get the 145% tariffs. And we're going to mess around with entry to kind of avoid problems where we don't check too hard if goods are coming from China through another country. So both countries are in a sense preparing for a long trade war with high headline tariffs.
Exactly.
But it's not a real trade war because the high headline tariffs are somewhat fake.
So what is actually going on here? So if I'm the market and I'm digesting this, and you've made other points too about how much of the shipping is now going to happen through third parties. There's countries like Malaysia which are fully gearing up for this. The de minimis exemptions. Well, if I were the markets, I would say, well, there's not a real there. Maybe there's a big geopolitical issue. Maybe there's a Taiwan issue lurking in the background. But as far as I'm concerned about the practicality, maybe it's less than meets the eye.
I think where I would go with the market is the low end risk is actually not that bad. Because let's say these talks break up and they say, oh, you gave in, no, you gave in, and nothing happens. Both countries are already taking steps to minimize the sting of the tariffs. They will take more of those steps. That doesn't mean they won't have any effect, but the disaster won't occur. Meanwhile, on the other side, it's hard to see high-end gains because you'd have to have a deal between two prickly egos that cover a lot of topics and that lasts. I can imagine a deal, but I can also imagine a year from now the U.S. trade statistics looking bad and Trump blaming China, deal goes away.
And in other words, so if you had to bet on one outcome or the other, would you be more likely to bet on the outcome of status quo? And I know we're seeing some revenue collections. But we're hearing this rhetoric about a practical embargo between these two countries. Is that really the case?
I don't think so. Certainly, the tariff levels say there's a practical embargo. For some goods, there'll be a practical embargo. But for other goods, as you mentioned, they'll just get shipped through other countries, and we just won't check very hard to see where they really came from. Other goods will get outright exceptions. Oh, well, this is a sector tariff of 25% instead of a country tariff of 145%. That's completely different. So I don't think the outright embargo will apply, whether the talks succeed or not.
It's fascinating. A good way to kind of think about these stakes going into the weekend as well. Derek, thanks, as always.
Thank
Derek
you.
Scissors from AEI. Let's get out to Courtney Reagan now for the CNBC News Update. Hi, Courtney.
Hi, Kelly. Welcome back to The Exchange. Here is what's happening today. The Papal Chimney Watch has begun. The first vote to elect Pope Francis' successor is underway inside the Sistine Chapel, where cardinals are sequestered. There will be only one round of voting this afternoon, but if a decision isn't made, the Cardinals can vote up to 4 times every day moving forward. The Cardinals are also banned from having any communication from the outside until a new pope is elected. And the Trump administration may send migrants to Libya for the first time this week on a military flight. NBC News reporting a flight could take off as soon as today, and it's unclear how many individuals would be sent and their nationalities. Libya's provisional government said today there was no coordination with the U.S. in receiving migrants. And as of March, nearly 1/3 of IRS employees responsible for audits left amid the mass layoffs from DOJ. That's according to a watchdog report, which found 31% of so-called revenue agents left the agency. That's more than 3,500 staffers. Kelly, back to you.
Know of several early retirements and that kind of thing. Absolutely. Courtney, thanks.
Thanks, Kelly.
Courtney Reagan. President Trump's big, beautiful bill is in a bit of limbo as disagreements within the Republican Party threaten its passage by the hoped-for Memorial Day deadline. And as the deadline gets pushed out, does that give Democrats more leverage on demanding concessions from the GOP? Joining us now from Capitol Hill is Representative Brendan Boyle of Pennsylvania, who is a ranking member of the House Budget Committee. Congressman, it's great to have you here. Welcome.
Yeah, great to be on with you.
How would you tell us to think about the status of this budget bill, the size of it, what's in it right now, and what do you think the implications for the economy are?
Well, first, the Republicans have decided to go it on a Republican-only path using reconciliation, which is a way by which they can bypass the 60-vote requirement in the Senate. Past attempts before at reconciliation have also only been essentially one party going it alone. Now, given the historically small majority Republicans have in the House, literally the smallest since 1930, as well as their small margin in the Senate, the reality is they need almost 100% of their members in order to vote for their plan. If they are unable to get that, then it would enable those of us on the Democratic side to be part of the equation. But unfortunately for now, Republicans are pursuing this go-it-alone, Republican-only path, which means that it actually is quite difficult for them to ultimately pass what they want.
I know for you, Medicaid is a huge issue. I think it's the biggest, government-funded healthcare program in this country, 78 or 80 million members if you include CHIP and that sort of thing. But there are plenty of folks who would say, according to watchdog reports and things like that, there's able-bodied people using the program who shouldn't be on it. Do we need more information to figure out a path forward on Medicaid in order to make needed changes to the program, or do you think the entire status quo needs to be left in place?
Well, first, let's just be clear about why I'm so concerned about it. 44% of my constituents in Philadelphia are on Medicaid. It's a massive number, as you pointed out, nationally as well. And the Republican plan that passed out of the House of Representatives weeks ago included $880 billion worth of cuts to Medicaid, the largest cut to Medicaid in American history. And some breaking news for you, just in the last few hours, the nonpartisan Congressional Budget Office confirmed that if those sorts of cuts become part of the final bill, more than 5 million Americans will lose their health insurance and will lose their Medicaid coverage. So I oppose those sorts of cuts as well as a number of others that are included in the Republican-only bill.
Sure, and I think that brings us back to what footing is the economy on here? I mean, tell us from your point of view in Pennsylvania how things look for your constituents, especially if the proportion that you suggested are relying on Medicaid.
You know, I go back, and I say this not just as a member of Congress, but as a daily viewer of CNBC. 3 months ago, no one on your network, not one economist from Moody's or S&P or any of the econometrics firms, not one was predicting that we would actually see the economy contract in the first quarter. All of the consensus projections were for growth. The only question was how much growth. And yet now here we are. Last week it was confirmed directly because of President Trump's tariff policies, the economy contracted 0.3%. And we saw prices jump just as we were getting inflation down to that 2% target that would enable the Fed to cut rates. Instead, we saw prices and inflation jump to the mid-threes. This is entirely due to Donald Trump's reckless tariff policies. We should be working together in Congress on a bipartisan basis to reclaim our tariff authority and bring some sort of sanity back to our tariff policies.
So understood, as far as I can tell, or as far as the data seem to show, if they don't pass an extension of the tax cuts on top of this economy that you're already describing, I think it's 80% of Americans, something like that, could face a slight tax hike in the next couple of years. So would you be on board with doing something about that piece of it? And how do you get there otherwise, especially with the deficit position we're in?
Yeah, I just want to make clear there's actually no debate between the two parties when it comes to preserving the tax cuts for those who make under $1 million a year. In fact, Democrats offered that as an amendment in the Rules Committee. Every Democrat voted for it. Every Republican voted against it. We have time, of course, until literally midnight on December 31st at the end of this year in order to get this resolved. But to be clear again, Democrats want to join with anyone on the other side of the aisle to preserve tax cuts for working families. The question is the tax cuts for millionaires and billionaires, will they continue or not? That is really the only area of disagreement between the two parties as it relates to tax rates.
All right, Congressman, thank you. Appreciate your point of view today. Thanks for joining us. Congressman Brendan Boyle of Pennsylvania. Now for a counterpoint with a Republican member of the House Budget Committee here with me on set, Congressman Tim Moore of North Carolina, who also sits on the House Financial Services Committee. It's great to have you here.
Great to be with you, Kelly.
I don't mean to drop a bombshell, and maybe this isn't one to you, but 32 deficit hawks in the House, led by Lloyd Smucker, are warning your speaker that they will not back the bill finding $2 trillion in cuts. So there's a revolt. While we're hearing from your Democratic colleague about how there can't be these cuts to Medicaid and so forth, some of your Republican colleagues are saying they don't even go far enough in finding deficit cuts as they're making concessions to these demands. Where do you stand on all of this? And is this bill ever going to pass?
Well, I do believe it's going to pass, and I think there are certainly strong opinions on both sides. But what I have to say is if we do not pass the extension of the Trump tax cut, to your point earlier, roughly 80% of the people in the country are going to have a massive tax increase that's going to happen. The other thing that this bill does beyond that is it also invests in American energy. Let's not forget, for 4 years, when President Trump was in office, we were an energy exporter. Now we're an energy importer. We're counting on countries, many of whom, frankly, don't like us, for our source of energy. So we have to have energy independence. So I believe at the end of the day, on our side, at least on the Republican side, folks will get in line and will support the bill that comes out because they know how important it is.
What about what your Democratic colleague just said, capping some of the, for those who make over $1 million, and he said for billionaires that they get no continued relief? And it's not just from the left that we're hearing this talking point. Even the White House and some on the right have floated the idea of taxing high earners in order to help offset the effects of extending tax cuts for everybody else.
Well, look, we already have a very regressive tax system in the United States, and I think, frankly, tax fairness is what we should go for in that. So I think lowering the tax burden of everyone is really the way to do it, not to pick winners and losers and try to play this class warfare. We really need to take less money from government and leave more in the private sector, because as I've said before, we do not have a revenue problem. We have a spending problem.
Right, exactly. So if you want those lower tax rates and so forth, how do you lower spending? I mean, we've looked at the breakdown and the numbers everywhere because of inflation post-COVID. Yes, Medicaid is part of that, but it's really broad-based and it's really hard to make meaningful cuts. Even the DOGE cuts don't add up to that much, and they've been really impactful. So how do you balance things out then? Where do those cuts come from?
Right. So I'll address the Medicaid, because the Democrats really like to try to misstate this thing. Some things we can do there. One, we can put in work requirements. If someone is able-bodied and able to work, they ought to do that. Second, folks who are in the country illegally should not be receiving these benefits. So the numbers vary there, but you're talking hundreds of billions of dollars in those two changes alone, just with that. Then other things you can do is get rid of the waste, the fraud, and the abuse. We know when it came to what DOGE found, yes, DOGE found a lot of things, but also Congress, through its process, is finding other areas where we can get rid of waste. And I serve on the Financial Services Committee. We were given a charge of making $1 billion in cuts. We actually came in with $5 billion in a painless way. So if we do that and we do our job, we're going to be able to make the necessary cuts and make sure we lower these taxes.
If the timeline slips, and again, now with pressure from the right on this over the deficit issues, if this timeline slips past Memorial Day, it probably goes to July 4th or to, I don't know if it slips all the way to Labor Day, you start to get a little uncomfortably close to that deadline. And the sooner it passes, the sooner, I know some are hoping, you get some stimulus into the economy to offset the tariff hit. So in North Carolina, Carolina. How are your constituents doing?
So my constituents, one, are supporting the president with what he's trying to do and supporting our efforts to really try to move forward with the extension of these tax cuts. I want to see us get it done like everybody else sooner rather than later. But I think that we stay here till we get the work done. And I think we have the conversations, we get through it. And if you get really down to it, a lot of the differences aren't that different, particularly within our conference. And I'm really hopeful some Democrats, some of the more moderate Democrats, will join us in voting for this.
Do you think the midterms are lurking larger than ever for folks? I mean, like, it's the political reality of this system is that if they feel vulnerable, then it's going to be harder for people to come together and on a deal and get this done.
Yeah, I mean, that's certainly a fair assessment. But I think what we have to do is we have to have the discipline to understand that a lot of this is long term. Look, we didn't get as a country in the mess of where we are with deficits and where we are on the trade issue overnight. This has been decades in the making. But what's really great is there's a serious effort by the folks just up the hill here in Capitol Hill to turn this around, to actually say, okay, let's get rid of waste. Let's make reforms. I mean, think about it. Yeah. When was the last time you heard this much discussion and like in a pointed way about government waste?
No, it's great, but to your point, $5 billion in a $2 trillion deficit. You go, hey, that's wonderful news, but it just doesn't kind of go far enough. I know we have to leave it there, Congressman. It's been busy, but thank you for taking the time to talk to us about it. Really appreciate it.
Great to be with you.
Congressman Tim Moore of North Carolina. Coming up, communication services, the worst sector today as Alphabet's 8% drop weighs on the group. But Disney is its best performer, up nearly 11% and on pace for its best day since April 9th. On earnings, Disney beat on the top and bottom lines, raised full-year guidance, and announced plans for a new theme park in Abu Dhabi. And that's got investors excited. More after this.
At Franklin Templeton, we're always innovating. A leader in public and private markets, digital assets, and custom tax management, we're helping advisors build the portfolios of the future today. Franklin Templeton, your trusted partner for what's ahead.
Most people don't realize how processed typical dog food is. At the Farmer's Dog, we believe dogs should be able to get their daily nutrition without the excess processing.
This is my coffee shop. We just moved into a bigger space, brought on another employee, and ordered new branded gear for the team. It was so easy. I just chose my products, added our logo, and placed my order. Bring your own team together with custom gear. Get started today at customink.com.
Buying a car is kind of a big deal. There's like a million options, and you deserve something you love. At Car Gurus, we get it. As the #1 most visited car shopping site, we make sure your big deal is the best deal.
You worked hard to own your home, and it deserves complete protection because you've secured the doors, windows, and maybe even installed cameras. You've got an insurance for fire, flood, and theft. But there's one critical protection gap that leaves your entire investment vulnerable. Title fraud is a growing scam, and criminals know exactly how to exploit it. Is your home's title still in your name? Check your title now at HomeTitleLock.com.
Introducing AG1 Next Gen. The daily health drink backed by 4 rigorously designed clinical trials. Next Gen is clinically shown to increase healthy gut bacteria by over 10 times and to close common nutrient gaps. It's one drink for whole body health. The next generation of AG1 is here.
It is amazing to have a collagen. I used to have a probiotic, a green juice. I replaced it all with this Arma colostrum. And if you don't know what colostrum is, it is amazing. It is a bioactive whole food. It has all the essential nutrients you need for your skin, your gut, energy, focus, mood, performance, your hair, like immune system. It strengthens, supports all of that. The first thing I noticed was the energy and recovery that it had after workout. If you want to try it, try arma.com.
Life is always changing, and our Lovesac couch adapts to it all. Gathering around for game day one moment, reconfiguring for entertaining the next. And tomorrow, a new look entirely. Because Lovesac adapts to life, our life.
Welcome to CNBC Plus. Market destination?
CNBC Plus. On-the-go access to global market data, news, and analysis as it happens. Start streaming at cnbc.com/plus.
Welcome back to a special Fed edition of The Exchange, live from Washington. A surprise weekly jump in mortgage demand right as we're about to hear the Fed's rate decision today. Diana Olick is here with the story. Wait, is it a jump, Diana, or is it what happened?
It's a jump.
It is a jump.
It's an actual jump, yes. After 3 straight weeks of declines, we saw a big bump in mortgage demand from home buyers. Purchase applications last week jumped 11% compared with the previous week and were 13% higher than the same week 1 year ago. Yes, mortgage rates fell a tiny bit. The 30-year fixed went from 6.89 to 6.84%. Not huge, but that's not going to be the deciding factor in buying a home today. Rates are 34 basis points lower than they were a year ago, but that didn't really help much for April when home sales were sluggish. Now, the CEO of home builder Taylor Morrison was on CNBC this morning and said it's less about mortgage rates now.
Mostly it's consumer sentiment, confidence. There's a lot going on out there, and they're trying to, process what does it really mean for them.
So if you look at mortgage rates really over the past month through today, they shot higher to start April, but have really been in a very narrow range ever since. No major swings. So was last week's bump in mortgage demand just a blip? Was it a response to much higher inventory, or are consumers now just getting used to, getting used to the tariff uncertainty?
I guess you could. I'm going to ask you a question from a friend of mine who just got outbid on a townhome, moderately priced, $700,000 or so. It's now moderate. He said, where is all this demand coming from? Like, who is it that where we see bidding wars in certain cases? Are people still going over ask? And with rates as high as they are and everything else going on, how do you explain it?
It's definitely the move-up buyer. It's that buyer who is not first time, isn't as mortgage dependent. We're seeing it in the higher end, in the 800 to 1.5 million range. That's where you're seeing the strongest demand. Luxury has actually come down a bit because of the stock market. And again, that first-time buyer in the lower range, the 200 to 6 or 800,000, and yes, in some places that is the starter home. That's where demand has completely pulled back.
So if you want a better deal, you have to go to the multi-million-dollar price range, basically.
Why not?
Well, Diana, thanks.
See you there.
Appreciate it. Diana Olick. Coming up, with mortgage rates closely tied to the 10-year yield, we'll dig into the recent action in treasuries and how the Fed's moves today might or might not affect them, and how much recession odds factor into it. That's next.
At AT&T Business, we guarantee our best deals on any smartphone with your choice of our best plans. What we can't guarantee, your employees having a similar work style. You hired them. Or your staff, all having the same vibe. I like this style. And your design team being on the same page.
Bold choice.
For 2002.
What AT&T does guarantee, our best deals on any smartphone with your choice of our best plans for any employee. And we mean any.
Small business owners, you got to stop doing what you're doing. Why? Because bookkeeping sucks. You shouldn't be doing it yourself. So go to Zendu.com, and what you're going to get there is a trusted financial partner, so you can do what you do best. Run your business. Zendu.com.
As a business owner, I've got a lot on my plate. That's why I use ZipRecruiter to hire. ZipRecruiter has this feature called Zip Intro. I chose the time, and it did all of the work of finding and scheduling the candidates for me. I just picked my top choices and talked to great people the very next day. The plan was to hire 2 people, but the candidate quality was so good, I wound up hiring 4 in a week.
Zip Intro. Post jobs today. Talk to qualified candidates tomorrow. Try it free only at ZipRecruiter.com/CNBC.
At Franklin Templeton, we're expanding access to the growing opportunity in private markets, empowering advisors with solutions to build the portfolios of the future today. Alternatives by Franklin Templeton, your trusted partner for what's ahead.
With the president pressuring the Fed to cut rates and the outlook uncertain, how will the Fed balance the threat of lower growth and higher unemployment? Fed Chair Powell's message to investors. Power Lunch, today 2 Eastern, and streaming on CNBC+.
Meet the new Ninja Swirl by Creamy. Turn almost anything into ice cream. And now, soft serve. Just prep, freeze, lock, spin, and swirl. Enjoy endless options of soft serve, fruit whip, frozen yogurt, and more. Scoop indulgent classics, create mix-in masterpieces, or enjoy low-calorie protein-packed treats. Unlock your imagination with the all-new Ninja Swirl by Creamy.
Rain, make it, rain girl, make it.
Apartment 2B?
2B. She's definitely using that Grubhub deal from Amazon.
Oh, yeah.
Amazon Prime member, you can get $0 delivery fees on Grubhub. Eligible orders only. Terms and additional fees apply.
To the end zone for the touchdown. Oh, my goodness.
Welcome back to a special Fed edition of The Exchange, live from Washington, D.C., as we're less than 15 minutes away from hearing the Fed's decision on interest rates. And while it may not come today, one of our next guests believes we aren't far away from the first rate cut of 2025. He says it's coming in July and that we'll get 1.5 points of total cuts through early next year. Guy Labat is the chief fixed income strategist at Janney Montgomery Scott. And Greg Ip is back with us. He's the Wall Street Journal's chief economics commentator. Great to have you guys both here. Guy, first up to you. So rate cuts would be music to the president's ears.
Well, I would say that these rate cuts that we anticipate, and let me just emphasize that because the economic outlook is unusually uncertain today, our confidence in that assessment is relatively low. These rate cuts will be coming for not great reasons, right? We expect some economic downside ahead, may or may not include the big R word, but particularly as stems from transportation, hospitality, and retail-related jobs, we think there's some downside risks that could emerge as soon as the June economic data released in July and therefore in time for the Federal Reserve.
Do you think, this is kind of the gamesmanship for markets and everything into this decision, Guy? So do you think
you guys ready? 10 minutes.
Sense that Powell and his colleagues really are in a position of not having any data to respond or to give them information about what the economic outlook looks like from the post-tariff period. We in markets, we really want things to evolve super quickly in the real economy. That's simply not how it works, right? We're a whopping 4 weeks out from those big announcements. And frankly, corporations are only now deciding what they're likely to do with staffing needs. And so it's going to take some months for those economic effects to play out. It's not going to happen nearly as fast as we all in markets hope it will.
Greg, what are you going to be watching for in the next few
Let me
minutes?
turn it up.
Obviously, get the 2 p.m. decision. We'll hear from the Fed chair himself at 2:30.
better now?
Sometimes that's a bigger market mover, although the last couple of meetings it's died down a little bit.
Well, I think if you go back to his comment in Chicago, I think it was a few weeks ago, the giveaway was when he said, look, tariffs present risks on both sides of our mandate. They put upward pressure on inflation and downward pressure on employment. At the end of the day, you can't have good employment and outcomes without price stability. I'm paraphrasing, but that was in some sense the tell, which is that between those two sides of the mandate, Powell was going to prioritize keeping inflation down. That was, I think, correctly seen as hawkish. It meant that he had a high bar to responding to weak growth numbers insofar as he was still worried about inflation. If he repeats that formulation in his press conference today, I think that'll be the main thing I'll be looking for, and I think it'll be the main takeaway.
Do we get projections, their dots, so to speak, their forecasts where each member kind of tells us, here's what I think is going to happen, and we can all use it as clues to their thinking?
No, this is not an SEP. Sorry, I get something back in my Fed speak there. This is not one of the meetings where they release projections, but I wouldn't be surprised if he's asked about it, and if he updates us.
Oh shit, it's moving already.
So, for example, I think that people were taken aback when in March they really took down their growth outlook and moved up their inflation outlook somewhat. And by the way, that was before April 2nd, and the bulk of the tariff announcements. Now, to be sure, since April 2nd, the president has walked back a lot of that stuff. And by the way, I suspect that after the meeting between the U.S. and Chinese officials in Switzerland, there will be more walking back after that. All that said, this will be an important mark-to-market moment for the chairman to tell us how has the outlook changed on both the on both the employment and growth front and the inflation front since the committee last met.
I think that's really helpful, kind of the language to watch that he may use. Guy, what are you watching both in the decision and then expecting we might hear or not hear from the chair at 2:30?
Yes, so I wouldn't expect a lot from the FOMC statement, again, on the basis that there's not a lot of economic data that's new and valid since the big tariff announcement, or frankly, some of the walkbacks that Greg mentioned a moment ago. What I am on the lookout for is actually echoes of language from Chris Waller, member of the Fed board, who gave the last big pre-blackout period interview roughly 2 weeks ago. And essentially, and again, just as Greg did a moment ago, I'm sort of paraphrasing, reading between the lines a little bit, Waller emphasized emphasized quite clearly that if there is jobs downside, he expects and he would want the Federal Reserve to react quite quickly to that. So even though there is some balance and risks to both sides of the mandate, I think the response to the jobs and weaker growth side of the mandate is likely to come faster. And that's one reason the outlook, I think, is skewed when you look at the interest rate markets as well.
All right, two kind of different perspectives, and that summarizes, I think, the sense everyone's trying to get of where the Fed's head is at. Gentlemen, thanks, Greg Ip and Guy Labat. We really appreciate it this afternoon. About 7 minutes until the Fed decision. Power Lunch picks up our coverage right after this quick break. Don't go anywhere.
Since starting the farmer's dog, Booger has lost so much weight, and he has so much more energy. It's like a puppy again. Mama! This is a before picture of Bogart. Such a big boy. 3-portion packs. Makes it really easy to keep him lean and healthy. And look at him now. He's like a show dog.
I didn't realize my digestion and my energy levels were all connected to my liver health. And that's when I found Dose.
Within weeks, I felt the change. I went from dreading to get out of bed to jumping out of bed. My wife keeps asking me, where is all this energy coming from? And it's all thanks to Dose.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment. Call Coventry Direct to learn more.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
Our friends sold their policy to help pay their medical bills. And that got me thinking. Maybe selling our policy could help with our retirement.
I was skeptical, so I did some research and called Coventry Direct. They explained life insurance is a valuable asset that can be sold.
We learned we could sell all of our policy or keep part of it with no future payments. Who knew? We sold our policy. Now we can relax and enjoy our retirement as we had planned.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies, or call 1-800-514-7800. Coventry Direct, redefining insurance.
Ever worry that you're drinking too much? Take back control with Or Health. Or Health provides access to medication proven to help. A daily pill to drink less, or to quit drinking altogether. Text CNBC to 710-710 to learn more.
We just signed the lease on our third shop. My assistant went to CustomInk.com to get new uniforms with all the locations. He found great products, uploaded new art, and had boxes sent to all the shops. Custom Ink makes it so easy. Get started today at CustomInk.com.
Franklin Templeton ETFs. With over 70 ETFs, we have solutions for every market, helping advisors build the portfolios of the future today. Franklin Templeton, your trusted partner for what's ahead.
Welcome to Power Lunch. I'm Kelly Evans, joined by Brian Sullivan, and we are just about 4 minutes away from the Fed's decision on interest rates today. No change in rates is expected, but it'll be very interesting to see what Chair Powell and the committee say about the current economy. Before we get to our panel, let's get a quick status check on the markets. Dow's off the highs from an hour or so ago, but it's up 0.5% today. S&P's up 2 points, so just about unchanged. The NASDAQ is down 0.4% as Alphabet is a big decliner today. It's having its worst day in a year and a half after an Apple executive said in-browser searches fell in April for the first time. This was part of their antitrust trial. It's taking Alphabet shares down nearly 8%. Apple's down a little bit less than 2%. So those are some big comments roiling the tech world today. Let's get right to our all-star panel as we're moments away from hearing from the Fed. David Kelly of JP Morgan Asset Management is with us, Stephanie Roth of Wolfe Research, and Jim Karen of Morgan Stanley Investment Management. David, first to you, and I failed to ask, not to get super wonky right off the bat here, but the balance sheet, right? I mean, we should that could be in play amongst many other things.
All right, 2 minutes.
Well, yeah, I mean, they're bringing down the balance sheet very slowly, but I think the most important issue that Chair Powell is going to have to get across here is he does not want to make a move on rates until he has got clarity on tariff policy and tax policy. There's a certain moral hazard involved if you cut rates and give an insurance policy to the other side of Washington. And I think he wants to avoid doing that. So he's going to try and find reasons to stall making any decision at all here.
Stephanie, what do you expect?
Yeah, I think that's right. He's not going to be able to preempt any sort of cuts, especially because the data that we've gotten recently have been pretty solid. So it certainly doesn't give them any sort of room to allude to that. We're going to be looking for indications about how are they thinking about we have a slowing labor market but not a rise in the unemployment rate. What do they do from there? That's a really challenging backdrop for the Fed in an environment that's really quite uncertain.
Jim, we just heard Greg Ipps sort of saying, and when he read Powell's comments in his speech a few weeks ago, he sees him as almost erring on the inflation side of the mandate when push comes to shove. And the market is more or less bracing, I think you could say, for a hawkish hold today. How are you, what are you expecting? And do you think that's correct?
Yeah, look, I would disagree a little bit with Greg Ip on this. I think that he would be more erring on the side of the unemployment rate. I think the unemployment rate is going to give the Fed more high-level information in terms of what they want to do. I think inflation is staying stubbornly high, so I don't think the Fed is in a position right now to really try to counter that.
It's almost time.
Juncture, but they will react to the unemployment rate. Look, there's one piece of good news here. The Fed does not have a dot plot at this meeting. They do not have to
10
go
seconds
on record
before
and
it
make a
goes.
forecast. So I think that gives them some breathing room to at least start to think about, how they may backpedal a little bit here. I don't think they're going to move today. It doesn't look like June would be on the table at this point either. And I think the Fed's going to try to make it clear that they're just going to still wait and see how both, as David Kelly pointed out, both tax and tariff policies play out.
Brian, jump in here.
Yeah, hey guys, from out west at the Milken Global Conference. Good to see everybody. Listen, maybe I'll take a different tack, but everybody I'm talking to here.
Order filled. Order filled. Order filled. Order filled. Order filled. Order filled. Order filled.
Order submitted. Order filled. Things that we're talking about, unemployment rate, inflation.
Order canceled. Order filled.
Target
filled. Order filled.
Target filled.
Order canceled. Order filled.
Order
filled. Order filled.
Political pressure of Trump.
I don't know what the fuck is going on. My shit messed up.
Order canceled.
Order filled.
Oh boy.
I think that's a great point. And of course, we can't pretend like the Fed's making this decision.
No fucking movement. What the hell?
Up against some serious pressure from the president. So how that factors into things, we're about to find out. Let's get to Steve Leisman for the Fed's decision on interest rates.
The Federal Reserve keeping interest rates unchanged at 4.25% to 4.5%, but seeing a higher chance of stagflation. They didn't use that word, but here's the language they did use. They said the risk of higher inflation and higher unemployment have risen, both of those together in the same sentence. They went on to say a further increase in uncertainty, there's a further increase in uncertainty around the outlook, adding that word further to the prior statement. Also noting that swings in exports have affected the data. That's why we got to that big negative GDP number, and they took note of that for the first quarter. But saying economic activity still continued at a solid place. The unemployment rate is stabilized at a low level, and that inflation remains
Order rejected.
All of that basically in line with
Order
our understanding of the hard data.
What the
Order
fuck?
on both sides of the mandate. The decision was indeed unanimous. Quantitative
Order
tightening will
filled.
continue, and
Order
the committee is
filled.
prepared to adjust
What
monetary
the hell?
policy as appropriate, which is data, which is a
What is
language they use
38?
in other times. Guys, this notion of the risk of both higher inflation and higher unemployment have risen. It really underscores that idea of there being risk to both sides of the mandate and the Fed.
Order
Apparently,
filled.
we're no closer to figure out which one needs more careful attention from the Fed yet. Kelly?
Steve, thank you very much. Steve Leisman is at the Fed. Stick around, though. Let's get some reaction from our
Order
panel.
filled.
And I'll
Cool.
kind of go in reverse order from what we just heard. Jim, here you hear it, the stagflation.
Yeah, so
Order
the
submitted.
unemployment
Order
rate,
submitted.
order
Order
rejected. This is
order
order rejected. Order rejected. Order
submitted.
rejected. I wouldn't say new. Inflation is not new. Inflation, we know, has been stubbornly high. But now that the Fed is starting to really comment on the unemployment rate, this is really the key. So look, everybody looks for the quote unquote Fed put in the markets. I think the Fed put is probably struck around a 4.5% unemployment rate, or at least a movement towards that level. So unless we get a significant deterioration in the labor market, then it's hard to have a deterioration in the overall broader economy because, consumption is 70% of GDP, and that comes from labor. People have wages to spend. So ultimately, what I think is happening here is that the Fed is really waiting to see if corporations in these earnings calls are going to start to now lay off workers as a result of this. If they don't see that and the labor markets stay relatively resilient, that we may be kicking the can down the road on rate cuts for a while longer. But we have to wait and see, and that's the point.
Yeah, the market's initial read here is it's kind of it's similar to what we saw going into. We're not seeing any big dislocations right now, but it's early. Stephanie, what's your take?
Yeah, I think this is an important change in the sense that it tells us inflation being persistent. So, you know, a couple of weeks ago when Chair Powell noted that inflation might be transitory this time, they are certainly walking that back and more, which tells us that the Fed might be a little bit more hawkish than would otherwise be the case. They are certainly going to be in no rush to cut. They're not going to do preemptive cuts, that's for sure. They're going to have to wait to see real economic weakness, which is the unemployment rate rising, say towards that 4.5% or higher.
Yeah, there's the 10-year Treasury, about 4.275, so dipping a hair. David, what are you looking at?
Well, I think it's very, very interesting. I mean, the first thing is I think it tells us a little bit about what sort of message Jay Powell is willing to put out there. I mean, he does seem to have a certain tunnel vision. He's trying to ignore what's coming in from the other side of Washington because, frankly, you know, I think it's sending a shot across the bow of the administration saying, essentially, if you read between the lines, your policies are leading to higher inflation, higher unemployment. Now, having said that, I do think that, you know, the language on higher inflation kind of makes sense because the April 2nd tariff announcements, which are much higher than people expected, they were since the last meeting. So, yes, that part of inflation's gone up. The one thing I'd caution on is unemployment. We've got such a reduction going on in immigration, we think, that it may dampen down any increase in the unemployment rate. So I tend to agree with it. You know, this is a somewhat hawkish statement, and it says we're not going to be in any hurry to cut rates because honestly there are risks to both sides of our mandate here, and we're not sure which way we should be playing this.
Brian?
Yeah, I guess I'd go to Steve Leisman on this because it is a little bit vexing. Yesterday, obviously, Kelly, you had David Zerbos on with Power Lunch talking about a 0.5%, you know, 50 basis point rate cut. You know, Steve, tomorrow we're going to be at the Port of Long Beach, kind of looking at incoming traffic from China, exports, imports. You've done amazing research and reporting on how much all this tariff stuff may impact GDP and the U.S. economy. And yet the Fed today, I don't want to say is ignoring that, but with no rate cut, do we read into this that Jay Powell and his team maybe think the U.S. economy is holding up better than some thought, at least for now?
I'm just wondering, Brian, when you go to the Port of Los Angeles or Long Beach, will there be anything to see there? What are you going to film? Apparently, there's no. All the ships are coming in empty, and I say that it's not even a funny thing in the sense that that's a big part of the outlook. I want to just address real quickly what David Kelly was saying. David, the Fed is not saying anything here that we haven't picked up in our CNBC Fed survey, that other people who have done surveys of the outlook of forecasters are picking up, which is that indeed the risk of higher unemployment and higher inflation are both the case right now. We have had, in our last survey, our Fed survey we did on Tuesday, both of those went up and went up meaningfully to 4.6 on the unemployment. And it really gets back to the conversation that Jim was sort of having with himself, which is the one that I think every investor is having with himself, which is, given those two facts, which is the one the Fed is most likely to address? Now, you can make a bet that it's going to be on the unemployment side. I don't think, Brian, that the Fed is ignoring anything here. I think they see palpable risks to both sides of their mandate. You're going to have an increased tariff on every imported product in this country. By the way, that's not something other countries will be facing. And you're going to likely have increased unemployment because a lot of the people, Brian, involved in the jobs that you're going to look at tomorrow, their jobs are in jeopardy in part because of what's happening at the Port of Long Beach.
They are, and Stephanie, I think the criticism would be this, okay, and I'm speaking for many of the women and men that I've been talking to here the last few days, that we cut rates last year by 75 basis points in the fall because of a small downtick in the U.S. economy. Here we have this existential threat of tariffs, which pretty much every economist that does not work for the Trump administration has said, to Steve's point, will be a net negative, a drag on the economy, and yet we're not cutting rates. I think I would speak for many people here and say it's very hard to square this idea that we were cutting rates last year. We've got a bigger economic threat this year, and we have a Fed that's on hold. You know the criticism is going to be out there.
Yeah, well, a key thing to ask is, do we know for sure these policies are going to remain in place? We've already changed the tariff rates after April 2nd. We're now potentially going to take tariff rates down with China. Could you imagine a scenario if the Fed preemptively cut rates and then Trump took down the tariffs? Like, that's something that they certainly cannot do. That would risk inflation expectations and would undermine their credibility. So they need to watch the facts as they come and then react to the economic data. They cannot preempt this, even though, sure, this could risk a real downturn in the economy, but they have to address it when it comes, not in response to policy, which happens to be quite uncertain and volatile.
Brian, I think the comparison to last year is way off base. I'm not saying you're making it, but the scenarios couldn't be more different. I mean, you have a situation where you're going to be raising prices on virtually all imports. That was not the case back in the summer when the Fed cut 50 before the election and 50 after the election. You had some danger. You also had the Fed, for sure, was way tighter at 5.30. It's come down about 100 basis points since then. So I just think the comparison with last year and this year is something that may be best left for the political realm, but not necessarily for the economic one.
That's a fair point, David Kelly. I mean, listen, we had Zervos yesterday. We had everybody has their own predictions, okay? The Fed decided that the best course of action was to do nothing. What do you think the Federal Reserve would have to see in the next few months to make a change either way? And let me just throw this fireball in there, because why not? Is there any chance the Federal Reserve raises rates?
Yeah, I don't think they're going to raise rates. I mean, people talk about stagflation all the time, but the truth is it's almost always inflation stag. You get the inflation first, and then you get the stagnation, and they've got to be forward-looking here. But what Jay Powell said 2 days after the election is we don't guess, we don't assume, and we don't speculate. And they want to see policy from the other side of Washington locked in before they react to it. They realize they're going to have to react to it, but they're not going to preemptively react to it because they don't want to encourage higher tariffs. I mean, the big difference I would say from last year is that they're not fighting some outside force. These are policy decisions being made directly today in Washington, and we need to try to get tariff levels certain, and I would argue down. Being an economist, I don't like tariffs, but we need that clarity. We also need clarity in the budget. I think this is the other thing that they're probably worried about, they're not talking about, but are we going to get a lot of fiscal stimulus baked into that tax bill that is wending its way to the president's desk? If that happens, they don't want to be putting monetary stimulus in the economy where we're going to get a big dose of fiscal stimulus and higher deficits next year. So they really have to let the other side of Washington figure out what it's doing.
And I just want to point out, and Brian, I'll just make this comment to you out in Los Angeles. We are seeing markets come off their highs and almost turning negative. Well, the NASDAQ was already negative. The Dow's in danger of doing so. We're getting the Fed decision, but we're also getting a couple of headlines from the president who seems to indicate, as you can see on the screen there, he's not open to pulling back on the China tariffs. So that would be one reason to keep an eye on throughout this half hour, throughout this whole hour, throughout the whole afternoon, if we see some pressure on the markets.
Which is all very bizarre, given that Treasury Secretary Scott Bessent, who was here yesterday, is headed to Switzerland this weekend. They're going to have negotiations and talks with China, ostensibly about the tariffs. So I would wonder, I guess I should just ask somebody that's here, or we can ask our panel, why is Bessent going to Switzerland if the president says he's not open to pulling back on the tariffs? You want to be in a position where, I guess, China sees a window of hope. Where maybe that if we do this, the U.S. will do that, and we dial back a little bit on it. It is an interesting headline, and as you point, Kelly, one that is clearly impacting the markets. Not a lot, but it is impacting the markets.
Yeah, so we'll have to throw that all into the stew here. A panel will let you go. We appreciate it today. And thanks, as always, for joining us. Bob Bassani's down at the New York Stock Exchange for his swan song Fed reaction here, Bob. And now we can throw some of these headlines into the mix.
Yeah, and the initial reaction was really rather muted, and then we got the China headline, so that really, I think, changed things a little bit. We were basically flat and then went a little bit negative. This statement is an exercise in preparing for several outcomes. I agree with Steve. It sort of sounds stagflationary, but he's looking on both sides of this thing. When I talked to people the last 2 days, most people down here are more worried about growth than inflation. They're worried about drying up the tourist business or inventory drawdowns. The problem is the hard data doesn't really support it yet, and that's really the issue. I know a lot of people out there, want the Fed to move, and we expect the economy to move as fast as we've seen the stock market move in April. But everybody knows that doesn't happen. The real economy doesn't move that quickly, and that's part of the problem. We just don't have the data yet. So a lot of people down here are dovish. They want the Fed to be preemptive. They want the Fed to do something. The data's not there. And the other problem is the Fed's inflation-fighting credibility has been severely eroded. Remember that whole issue, of course, what happened with inflation is transitory mantra of a few years ago. That really hurt their credibility. They're going to have to be very careful here about cutting preemptorily and then turning out to be embarrassed like they were a couple of years ago. So again, the doves are looking for some signs. We're moving toward a rate cut. I don't think you have a lot of support here. Powell's going to have to at least show some data that confirms expectations of a rate cut. Otherwise, if he can't, they're just going to have to say what they're saying right here. They have to be attentive. The committee is attentive to the risk to both sides of its dual mandate, and that's really what you're going to have to take away from this right now, guys.
Bob Pisani, as always, my man, you nailed it. We're going to go to Rick in a second, but I want to come back to you, Bob, because I think the point I was trying to make with Steve was not what's right or what's wrong, not for me to say I have no idea, but this idea that the Federal Reserve's credibility, for good or ill, and not everybody would agree, I get it, but I can tell you there are people here that will say, the Fed screwed up during COVID, left rates too low for too long, then they kind of overreacted. You just said it. That inflation-fighting credibility is, let's be clear, I think it's taken a bit of a hit, and I don't know if the market is listening to the Fed as much as it used to.
I would agree. So here's the problem. There's two hurdles the doves have to overcome. The first is the data hurdle. The strong data of a clear downturn, the hard data, is not yet there. And the second is what you and I were just talking about. The Fed's inflation-fighting credibility has been severely eroded, and I think they're going to be very attentive to that. You know, this is going to be an old story by Friday. Steve will confirm this. I think there's 8 or 9 Fed officials speaking on Friday, and they're all going to have individual opinions on this. So we're going to have a very, very broad range of opinions very, very soon in the next couple of days. That's going to help us get a better sense of where the Fed is right now. But the data's still not there.
Bob, thank you. Now let's go to Chicago and Rick Santelli. You can comment on everything we just talked about. And I will also add this, that despite all the ups and downs of inflation, rates, whatever it may be, here's the bizarre point. I know it's moved. The 10-year bond yield is at 4.2, whatever it is. That's the same price it was 2.5 years ago. Yes, it's fluctuated, Rick, but bizarrely, over 2.5 years, 30-plus months, the 10-year yield is exactly where it was before all of this. Comment on that, the Fed decision, or I should say, Fed non-decision.
Well, you know what? You hit on so many key issues. That 10-year rate and the relationship it has with mortgages, and this notion that, are we ever going to get under a 6.6% 30-year fixed mortgage? These are huge issues. And Bob hit something so important, and it's just so obvious. If you look at the data that, of course, put us at minus 0.3% on GDP, what that tells you is that there's not going to be any real trusting data for a long time. The pull forward, that's going to have a distortion. When we actually get more certainty on tariffs, we're going to have a landscape where inventories are going to be okay for a while. So you're not going to get an accurate read on the economy, which means that the Fed doesn't really have any better information than any of our viewers have. And I don't mean that in a negative way. Also, when it comes to credibility, the Fed got dinged in another area that nobody really seems to talk about, doing a 50 basis point cut so close to that election. I can't tell you how many people and sources always bring that topic up in context of what you brought up, Brian, that when you look at everything going on today, what will be the trigger for a rate cut, considering all the moving parts? And finally, maybe the most important thing is look at 2-year, look at 10-year, look at the dollar, okay? We're making new low yields in a small way because equity volatility is really taking center stage, and the dollar index has been steady as she goes. Final statistic, these Fed fund futures prices right now are actually a little bit higher than they were at the last Fed meeting, which means that we still have a lot of easing built in, over 3. And the market is counting on it, even though the Fed doesn't want to promise it's going to deliver.
So not that hawkish, in other words. Rick, thanks very much, Rick Santelli. We're just a few minutes away from the chair's press conference. It starts at 2:30 Eastern. We'll take you there live as soon as it happens. But first, we'll hear once again from Claudia Sahm, and we'll take a quick break.
Franklin Templeton Custom Tax Management. Easily create custom SMAs with our Canvas platform and help investors keep more of what they earn. Franklin Templeton, your trusted partner for what's ahead.
Introducing AG1 Next Gen. The daily health drink backed by 4 rigorously designed clinical trials. Next Gen is clinically shown to increase healthy gut bacteria by over 10 times and to close common nutrient gaps. It's one drink for whole body health. The next generation of AG1 is here.
Hey, small business owners, pickleball's kind of like bookkeeping and accounting, right? Lots of strategy, lots of effort, and if you don't have the right partner, you just won't win. It's time to team up with a winning partner. Call Zendu, and let's get that win today. Zendu, the official bookkeeper and accountant for small businesses.
The road to opportunity is often the road overlooked. At Enterprise Mobility, we guide companies to unique solutions from our team of mobility experts. Because we believe the more ways we all have to move forward, the further we'll all go.
Socks, underwear, and t-shirts are the most requested items in homeless shelters. Bombas was founded to help, so for everyone you buy, we donate one. One purchased, one donated. It's a tangible act of kindness for those who need it most. Distributed by 3,500 giving partners across all 50 states. And with 140 million donations and counting, the impact is real. Visit bombas.com and get 20% off your first order.
Man, these seats. I know, right? Thank you, Game Time. Easiest way to find only the best deals on the best seats. I wonder how the other guys are doing.
These seats are trash. What the heck, man? I spent hours finding a deal on these. Trash.
Oof. Finding seats for prices this good is tough. They should have used Game Time. No more endless searching. Just great options at incredible prices with their Game Time picks. What time is it? Game Time.
When it comes to clogged gutters, you might say I've seen it all. Leaves, spinners, wiffle balls, you name it. Because any gutter open to the elements is going to gather debris and clog over time. And that can cause all kinds of problems. But get Leaf Filter and the problem's solved.
Leaf Filter's patented technology keeps debris out of your gutters for the life of your home.
It's dependable, proven, tested. Like me.
So when experience matters, get Leaf Filter. Call 833-LEAF-FILTER or visit leaffilter.com.
Welcome back to Power Lunch. The Fed holding interest rates steady just now at the top of the hour. And we'll be hearing from the Fed Chair Jerome Powell shortly. New Century Advisors Chief Economist Claudia Sahm is back with us. Sue, you kind of warned us you thought it might be hawkish.
Well, yeah.
Would you go so far as to describe it that way?
I'm not sure if I would describe it as hawkish. I think the statement reinforces that they see risk to both higher unemployment and higher inflation. So the dual mandate and conflict. Now, that is a situation we have not seen the Powell Fed in before, and frankly, it's not one, thankfully, we've seen the Fed in very often. It's important that they really set the stage, and now it's going to be an opportunity for Powell to expand on what does that mean? How are we evaluating? It's not that they're putting more weight on inflation or on employment. These are co-equal in the dual mandate. It's just they're going to have to assess how far is inflation going off track, how far is unemployment going off track. And then an important thing that Powell also talked about in his April speech was, and then how quickly do we think they'll get back on track? Like, how much work does the Fed have to do? That's this big discussion about, is inflation persistent? So what we really need to hear from the Fed is just more about how are you thinking? What are you looking at? because they're going to have to get back in the business of doing some forecasting too.
Right. We kind of mentioned this in passing, but there is this big budget bill out there that could have big effects on everything from the deficit to the near-term economy, the trajectory with which kind of tariffs affect all that. So maybe that he'll be asked about that point blank. I don't know how big of a factor that will be.
Right, and the Fed has said, and Powell has said before, that they look at the totality of all the policy actions that are happening right now and everything else hitting the economy, right? So they have mentioned the fiscal policy is important too, and this is one where we're starting to get some more details. That will be interesting to see how that comes into the conversation, and there could be policies that diffuse some of the inflation risk, maybe in the deregulation. So it's really important that we understand how the Fed is looking at the data, looking at the policies, and there's going to be, if the dual mandate's intention, it's going to come down to a judgment call, and we want to understand their judgment.
If you had a question, would it be the show your homework question? In other words, like, tell us exactly which data points, for instance, on inflation, do you take things like the ISM prices paid into high account or no? I mean, would that be the question, or would you do anything else on your mind that you'd ask him?
I think getting as much detail out of the Fed as we can in terms of what they look at. I really do want to hear from them the use of being more creative and pulling, like, how are you using some of the forward-looking, the kind of soft data measures? Like, how are you sifting through? Because there was, especially last year, there was kind of this, we'll wait and see. We have the luxury of time. We'll want more data. We knew every CPI release was really important, and we needed, like, probably not just one. We needed 3 good ones. And, like, that kind of answer, that's so heavy, backward-looking, data-dependent, will really put the Fed on a path to be behind the curve. We don't know which curve they might be behind, but, like, this is just going to be a very fluid situation and fast-moving. So the more they can tell us, what are you pulling in other than just CPI and the unemployment rate? Like, we really need to have that information. I think that'll help us understand.
Point. Claudia, thanks for joining us again. Claudia Sahm of New Century Advisors. And we're just moments away from the presser. We'll get more reaction to that and the Fed decision when we return right after this.
To over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
My name is Mike Hammond, founder of Signal Relief. Much of my career has been working in construction. I love outdoors and horses. That active lifestyle is what has caused my body to hurt. I didn't want to let this affect my family or my life, and that's what motivated me to create a team to build the Signal Relief Patch, clinically proven to reduce the impact of pain. The patch is a game changer. No creams, no pills, no wires. The patch is reusable, and there's a real money-back guarantee. Whether it's your neck, back, knee, shoulder, or just aches and pains, this patch can give you your life back. When I gave my best friend a patch with tears in his eyes, he said it was the first time in 16 years he did not hurt. Join the hundreds of thousands who found relief. I'm asking you to try the Signal Relief Patch today by going to our website. If you're thinking about buying, it means you need one. You have nothing to lose. I promise the patch works.
When you're the leader, disaster cleanup and restoration, how do you make like it never even happened happen? Fire it up, Randy! By being prepared for anything! Whatever comes your way, there's a pro for that.
Serve Pro, like it never even happened.
Next up, Chris, male 29. He just bought a $30 banana slicer at 2 a.m.
And he just searched how to tell if your cat loves you.
I know just the thing.
Betrayed by your cat? Adopt a dog today.
Yeah, they know. But not with Surfshark VPN. Protect yourself from tracking and take back your privacy. Get Surfshark.
Breaking earnings news. Disney, Novo
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think, if you look at where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's naturally a lot of PTSD around 2021 and supply shocks, but there are some who argue that the current situation has notable differences. Energy costs are down, housing imbalances look nothing like they did 4 years ago, labor demand appears to be gradually cooling with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, you know, we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by about where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
You know, as I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And you know, when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and you know, as that develops. And I can't really give you a time frame on that.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, I mean, so let's look back and see where we are. So to go through 2024 up to the day, we've had you know, unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, you know, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got you know, forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
You know, so first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. Participation, I mentioned, at a good level. So, you know, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. Yeah, we're not in this situation, but the situation is if the two goals are in tension, so let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. You know, we haven't faced that question in a very long time. So, again, difficult judgment to make, and not one that we face today, and we may never face it, but you know, we have to be keeping it in our thinking now.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
You know, it's going to depend. I think you have to just take a step back and realize this is why we are where we are. Is you know, we're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't, and we just don't know until we know more about how this is going to settle out and what the economic implications are for employment, for inflation. I couldn't confidently say that I know what the appropriate path will be.
So following on that, just, you know, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, I mean, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen. But they haven't materialized yet. They're not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And usually things clarify and that the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that, but in the meantime, yes, we're watching it extremely carefully like everyone is, but don't see really much evidence of it in actual economic data yet. And by the way, consumers keep spending, credit card spending. It's, it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we, of course, tapered and everything. And then we immediately went into QT, and, we're down a couple of trillion. But I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. We knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential. And we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And we dropped out of the network for greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And the risk is if you go for things that are really not on your mandate, then why are you independent? And I think that's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down for specific categories?
We didn't do that. What we said was that we never targeted any unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people, wanted to hear it that way, but that's not at all what we meant. So that's just not a correct reading of our, but I can see how, maybe people found that confusing, and we have to take that into consideration.
Jolene. Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses, big and small, are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, so we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or things like that. So they're worried now about inflation. They're worried about a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so we're going to be looking at the not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there would be two effects. One of them would be weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. People are not layoffs, or people are not getting laid off at high levels. Initial claims for unemployment are not increasing, in any kind of impressive way. So the economy itself is still, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Chris.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, what kind of interest rate decisions you will make later this year. So does that, in March, there was guidance that 2 cuts might happen. 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
We don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it. And we don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we had the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. It could include us holding where we are. We just are going to need to see, how things play out before we make those decisions.
Great, and just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How do you handle those challenges?
You just captured this is the issue with the two goals being in tension. It's a very challenging question. Now, there can be a case in which one goal is very far, one variable is very, very far from its goal, much farther than the other, and if so, you concentrate on that one. And frankly, that was the case. Well, it wasn't a case where they were really in tension, but if you go back to 2022, it was very clear that we needed to focus on inflation. The labor market was also super tight, so it wasn't really a trade-off. I think what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, that's going to be potentially a very difficult judgment, but the data could break in a way that it's not. I just don't think we know that. The data could easily favor one or the other, and right now there's no need to make a choice, and no real basis for doing so.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now?
Sustainable level, but an unsustainable path. And it's on Congress to figure out how to get us back on a sustainable path, and it's not up to us to give them advice.
Well, do you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
Andrew.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole comments last year, you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And everywhere people were talking about downside risks to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, we wanted to address that forthrightly. We wanted to show that we were there for gotten a lot less. So, you're at 4.2% unemployment. I think we were in a very different situation. Now we have a situation where, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement, and we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two, potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
Yeah, I can't give you I'm not going to try to give you a specific number. I'll just say we have to now be looking at both variables and which of them is demanding. If one of them is demanding our focus more than the other, that would tell us what to do with policy. If they're more or less equally distant and equally or not distant, then we don't have to make that assessment. The assessment is you wait. So I'm not going to try to be really specific about what we need to see in terms of a number. But if we did see significant deterioration in the labor market, of course that's one of our two variables, and we would look to be able to support that. You'd hope that it wasn't also coming at a time when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical. We're just going to have to wait and see how it plays out.
Thanks.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, some economists are saying it's days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic-era shortages and higher prices if we don't kind of soothe relations between the US and China. So it'd be good to have your view on that too.
So, these are not talks that we're in any way involved in, so I really can't comment directly on them. So, but what I will say is this, we had, coming out of the March meeting, the public generally had an assessment of where tariffs were going, and then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have we're in a new phase where it seems to be we're entering a new phase where the administration is beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
And just on the fall in shipping volumes from China over these tensions, I mean, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly?
I don't want to get we shouldn't be involved even verbally in the questions about the timing of these things. Yes, of course we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is, this is their mandate, not ours. And I know as you can see, they're again beginning to have talks with many nations, and that has the potential to change the picture materially. So we'll just have to wait and see.
Kosuke Takami with Nikkei. Thank you for doing this. The volume of imported goods increased significantly in the first quarter. Do you think that this situation could cause a delay in the impact of tariff on inflation? And does this mean that it will take longer time to reduce uncertainty?
The decision we made today? Which decision?
So the future decisions. So the volume of the imported goods has increased significantly. So the impact on the imported inflation may delay. So what is the impact to your future decision?
Okay, so I mean, I think we think that there was a big spike in imports, right? Very big, historically large, really, and to beat tariffs. And now that should actually reverse, so that it's the difference between it's exports minus imports. So and imports were huge, and so that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed, so that we have an unusually large contribution to usually positive. That's very likely as imports drop sharply. You could also have, very likely you'll have restatements of the first quarter, it'll turn out that consumer spending was higher. It'll turn out that inventories were higher, and so you'll see those data revised up. It may actually go into the third quarter too, and so I think this whole process is going to a little bit make it harder to make a clean assessment of U.S. demand. I mentioned private domestic final purchases, which doesn't have inventories, government, or inventories, government. Anyway, it's a cleaner read on private demand, but that too probably was flattered a little bit by by strong demand for imports to beat tariffs. So that might overstate. It's a really good reading, 3% PDFP in the first quarter. That might actually overstate. So it's not really going to. I don't think it's going to affect our decisions. I will just say though that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a signal. It's a little bit confusing, but I think we understand what's going on. It's not really going to change things for us.
Courtney.
Order filled.
Courtney Brown from Axios. I guess, we talked about some of the indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious
Order
why
filled.
the Fed needs to wait for that to translate into hard data to, make any type of monetary policy decision, especially if the hard data is not as timely or might be warped by tariff-related effects. Are you worried that the soft data might be some sort of false warning?
No, I mean, look at the state of the economy. The labor market is solid, inflation is low. We can afford to be patient as things unfold. There's no real cost to our waiting at this point. Also, the sense of it is we're not sure what the right thing will be. There should be some increase in inflation. There should be some increase in unemployment. Those call for different responses. And so until we know, potentially call for different responses. And so, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting. And so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where the sentiments expressed in soft data did not translate into the hard economic data. How are you thinking about that when interpreting some of the signs in the softer survey data?
I think going back a number of years, the link between sentiment data and consumer spending has been weak. It's not been a strong link at all. On the other hand, we haven't had a move of this, speed and size. So it wouldn't be the case that we're looking at this and just completely dismissing it. But it's another reason to wait and see. You're right, though. We had a couple of years during the pandemic where people were saying just very downbeat surveys and going out and spending money. So that can happen, and that may happen to some degree here. We just don't know. This is an outsized change in sentiment, though, and so none of us is looking at this and saying that we're sure one way or the other. We're not.
Matt.
Thanks, Chair Powell. Matt Egan with CNN. So you mentioned earlier that you're monitoring the shipping data, and we have seen in the shipping data that imports from China into the Port of Los Angeles have plunged, and that has raised concerns about potential shortages. What tools, if any, does the Fed have to ensure that prices and inflation expectations don't get out of hand if tariffs do cause significant supply chain disruptions?
I mean, we don't have, the kind of tools that are good at dealing with supply chain problems. We don't have that at all. That's a job for the administration and for the private sector more than anything. What we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else, and right now we see inflation, kind of moving sideways at a fairly low level.
If I could follow up on that, President Trump has indicated that he will likely name a replacement for you when your term as chair expires next year. But your position on the board runs through January 2028, I believe. Would you consider remaining on the Fed board even if you're no longer chair?
So I don't have anything for you on that. My whole focus is on, and my colleagues' focus is all on, trying to navigate this tricky passage we're in right now, trying to make the right decisions. We want to make the best decisions for the people that we serve. That's what we think about day and night, and this is a challenging situation, and that's 100% of our focus right now.
Let's go to Jennifer for the last question. Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Public records of your schedule so far this year show no meetings with President Trump. Past presidents Obama, Bush, and Clinton have all met with Fed chairs, and you met with Trump during his first term. Why haven't you asked for a meeting yet with the president?
I've never asked for a meeting with any president, and I never will. It's not, I wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you want to meet with him if given the opportunity to get more information?
It's never an initiative that I take. It's always an initiative. I don't think it's up to a Fed chair to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And if I could just ask one question on monetary policy. When it is time to cut rates, how will you determine how far down rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
I think once you have a clear direction, you can make a judgment about how fast to move and that kind of thing. So it's really the harder question is the timing, I think, and when will that become clear? And fortunately, as I mentioned, we have our policy in a good place, the economy's in a good place, and it's really appropriate, we think, for us to be patient and wait for things to unfold as we get more clarity about what we should do. Thanks very much.